the price is right. So we're not aware of many, if any, owners that have a blanket ban on lifting Middle East oil.
But to ensure the car goes, you obviously need a slightly higher price, which is now what's being reflected. So is that kind of bid offer now closed? So the market now has a price at which it will be prepared to go in. We can cover the insurance, we can get in.
Yeah, I mean, we've seen when we had Marsh yesterday talking about how insurance costs have gone up. And that feeds through to the whole market psyche. Everybody's looking at, the shipping companies. We spoke to Frontline, and they said, oh, well, if the insurance costs are high, then that kind of tells the freight market how to perceive the risk. Perfectly logical. And then it goes all the way through the process. So that has happened to a degree. We're not at kind of extortionately high insurance costs yet, because relatively few things have happened that are directly about shipping.
I hear what you're saying about the fact that we're kind of pricing this theoretical risk of the Strait of Hormuz being closed. We are now potentially getting to a point, though, where the Iranian regime may have its back against the wall.
Absolutely.
And may respond in ways that it has not done. Because up until now, it's gone, we need to still serve our markets. So as a result of which, anything that affects the oil market is off the table. We're not going to jeopardize that. Is there a risk that we jump from one to the other and therefore we get a big response in the market?
I think you can paint a picture where the US acts and Iran then responds by, let's say, making declarations about the Strait of Hormuz, talking about the Strait of Hormuz very, very explicitly, and the market would probably react. I mean, anything that jeopardizes the Strait of Hormuz would be a huge deal. I don't personally see any kind of long-lasting closure of the Strait of Hormuz. It's very unlikely. But like you say, they'll be in a corner, and when people are in a corner, who knows what they do.
Eric, thanks very much indeed. Eric Nightingale joining us on what's going to happen with the oil market. We asked this question to the CEO of Shell, Wael Swan, speaking to Sherry Ann at the Japanese Energy Summit and Exhibition. So he shared his kind of perception of what is happening in the Middle East and how it could impact business operations. Clearly, Shell is one of the biggest oil traders of oil and gas. Take a listen to what he had to say.
The escalation in tensions over the last few days in essence, has added to what has already been significant uncertainty in the region. Our focus has been very much on making sure our people are safe, that our assets are protected both physically and from a cyber perspective as this escalates further. And of course, we're observing the markets. I mean, you've seen a bump up in both oil and gas prices. But it's still moderated, I would say, because people are waiting to actually anticipate whether physical infrastructure damage might happen. That's been a bit more contained. We're being very careful with, for example, our shipping in the region, just to make sure that we do not take any undue risks.
Will you need to change that strategy if we get any U.S. military action?
And of course, we are in close discussions with the government. At this stage, we continue to be confident in the posture we have taken. But of course, we have plans in the eventuality that things deteriorate.
How important is the Strait of Hormuz right now? And even if we don't necessarily see a closure, just disruptions in that region?
I mean, massively important. 20% of the world's oil is flowing there, and a roughly equivalent amount of the world's gas. What is particularly challenging right now is some of the jamming that's happening on GPS devices and the like, which is a concern. The Strait of Hormuz is, at the end of the day, the artery through which the world's energy is flowing. And if that artery is clogged for whatever reason, it'll have a huge impact on global trade. And so Shell, of course, has a very broad portfolio of assets. We have to already anticipate if, for whatever reason, those arteries get clogged, we have to think about other means to be able to supply our customers from other locations.
Are you trying to look for alternative supplies at this point?
Yeah, we have multiple production points, both oil and gas, that we would need to be able to mobilize to fulfill our customers' needs. But there is no question that a 20% impact for the supply of both oil and gas will have massive implications for the world's energy system.
CEO of Shell speaking to Sherry Ann about what could happen next and how oil prices may react. Let's take a look at how markets are reacting right now. European stocks are a little softer, not down by much. Remember, the United States is closed for Juneteenth today. And as you can see, though, we do see a pickup in the price of crude. We're up by around 1.2%. The pound actually not really reacting that much to the Bank of England rate decision a little bit earlier on. We will carry on the conversation. Lizzie Burden is going to take you through the next few hours. Looking forward to all the great guests that she has lined up. Enjoy the rest of the day, folks. This is Bloomberg.
I'm David Weston. Join me for the next generation of Wall Street Week. This week, Vlad Tenev of Robinhood takes us into the wild world of mathematical superintelligence. We go to Saudi Arabia for the story of Aramco's plan to help wean the kingdom off of oil.
We think of ourselves as a technology company delivering energy. We are very pragmatic here in the kingdom.
And Larry Summers dissects the Fed's latest decision. Watch the all-new Wall Street Week. More than what you need to know, it's what you need to think about.
Let's talk about this villa. Very traditional. A lot of things of the past.
I live my very first independent life in the farmhouse. And I built it by the memory of the farmhouse, the philosophy they believe, yin, yang, 5 elements, the concept of the life, of the happiness. They build this kind of roof, like boat, and man and woman, and bowl of rice. Everyone should be happy if have somewhere to live, something to eat, and someone to love.
So you're defined a lot by your past experiences.
Yeah, actually, I'm a lucky man because not everyone should have the experience of the war and peace, poor and rich, technology progress. I changed during my life, rich by experience.
There's an appreciation for what you have now.
And therefore, peace is the most important thing for today, for Vietnamese, and I think for human beings of the world.
In case you missed it on Bloomberg Insight.
I just think there's a chance that you'll have stagflation. I'm not saying it's going to happen. I don't want the reader to say he's predicting this. I'm not. But we have to be prepared for something like that. I think the global fiscal deficits are inflationary. I think the remilitarization of the world is inflationary. The restructuring of trade is inflationary. And this is not all an American thing. You know, with all those things taking place, yeah, you may be surprised.
I spoke to Jamie Dimon. He says that we should actually prepare for stagflation. How do you square that?
I think there's no question that the shock of tariffs are stagflationary. The question is going to be ultimately how high do they settle at? Right now they're at a very high level, highest in 100 years. And how long a period both is this uncertain environment and how long are the tariffs going to last? And the question now is the magnitude of the stagflationary impulse, and we just don't know yet.
Don't miss Bloomberg Insight live weekdays.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Welcome to Bloomberg Markets. I'm Lizzie Burden in London. It is Thursday, the 19th of June. Let's check in on these markets. Of course, it is the Juneteenth holiday stateside, so we have no cash trading in US stocks or treasuries, but there's plenty of action elsewhere, even if these are low volumes. As we look across the European equity space, we have the Stoxx 600 down 0.5%. The CAC 40 in Paris, the underperformer today, down 0.9%. The DAX in Frankfurt down 0.7%, and you're looking at the FTSE down 0.3%. 1%. Really, it's a risk-off mood because of this anticipation of the US's direct involvement in the Iran-Israel conflict. And you can see that playing out in the cross-asset picture. So let's flip the board over. You can see that the oil price is currently stronger. Brent up 1.2% at $77 a barrel. You're looking at the German 10-year yield at 2.5% and euro-dollar at a 1.15 handle. But really, we need to keep an eye on the pound as well, because we've just had that Bank of England decision. A dovish hold, and that indeed is the top story here in London. The BOE holding rates steady, but traders really anticipating more cuts later in the year after we saw that dovish split vote. Bloomberg's Phil Aldrich joins me now to parse what we've heard from the BOE today. Phil, good to have you around the table. Is it fair to say that this was a dovish hold when you look at that vote split and Dave Ramsden, the Deputy Governor, deciding to join the Doves?
I guess dovish is in the context of what was expected, and the expectations were a 7-2 cut, 7-2 split, and it was a 6-3 split. So that was definitely an indicator. The other thing that was the language about the labour market. They're definitely a lot. They're feeling a lot less worried about the direction that the labour market is taking. They're talking about loosening quite repeatedly in the minutes, and they see pay pressures receding quite fast. So that's been a big concern. Obviously, the key thing now is to see that those wage differences starting to feed through into lower actual levels of inflation as well. So it did definitely feel like dovish compared with what I was expecting when I went in.
Do you think that now they're more focused on external pressures than internal?
No, I mean external. Do you mean the Iran situation, geopolitical, the trade wars?
Exactly.
Yeah. Bizarrely, the letter from the governor to the chancellor and within the minutes themselves, they do stress it's the domestic factors which are driving the judgments that they're making. They're obviously saying they're vigilant about what's happening in Israel and Iran, and they're saying that obviously the backdrop is just of quite a lot of volatility and uncertainty. But it's really the domestic factors that seem to be shaping policy at the moment.
Yeah, it's humbling, isn't it, that the Bank of England governor had to write to the Chancellor and explain himself why inflation is still above the target. But when you look ahead, I'm looking at that August meeting. You've got traders fully pricing 2 cuts this year. Is August a done deal now? Could the BOE really fight against the market pressure?
Well, they do say that every meeting there's no preset course. They want to stress that, but I mean. It did feel today like they were saying something dramatic would have to happen for the August rate cut not to actually happen. So has done a deal as you'd expect, or has done a deal as you could have from the bank. Yeah.
Okay, Philip Aldrich, who's been all across that Bank of England decision, we thank you as we look at the pound trading at $1.34, so stronger 0.2%. Now, another central bank decision today was out of Switzerland. A strong Swiss franc was one factor influencing the Swiss National Bank's decision to cut its interest rate to 0. And the new president, Martin Schlegel, also argued that Switzerland was ready to intervene in the FX market if it became necessary. He was speaking earlier today with Bloomberg's Bastian Benrath out of Zurich.
There are several factors at work here. So one is certainly the stronger Swiss franc, especially against the US dollar, but it's also tourism that is lower, and it's also energy prices that were lower and put inflation to the downside.
For more on the state of the markets and the economy, let's bring in Ben Guttridge, who's Invesco Investment Director. Ben, always good to see you. I feel like we're always together when it's one of these US holidays, so thanks for being with me. Let's start with the Swissy then. The Swiss National Bank cutting rates to 0, trying to deter investors from pushing up the franc even further. But I was listening to MLive's Mark Cudmore earlier, and he was saying the Swissy's not a currency. Like, gold isn't a commodity. It is a financial asset and only used in theory as a currency. Isn't it more driven by geopolitical factors at this point?
Well, yeah, very nice to see you again on this American holiday, but I would suggest there's also this sort of safe haven menu, or the dearth that's on this menu, the depleting menu, and the Swissy sort of starting to stand tall amongst that. Certainly question marks about how useful the dollar and how useful treasuries are, as you say, in this given the geopolitical challenges that face us at the moment. So it was something of a surprise that there was only sort of a quarter point cut. Could have been room for more, or there could have been sort of more dovish commentary around that, because I certainly think, you know, the SNB has to sort of deal with this sort of safe haven status, the capital flows that, you know, could be really supportive for the currency and of course, therefore, deflationary.
Were you looking for a half-point cut?
I was probably, it was a close run thing. No, let's go with I wasn't, because that didn't happen.
Captain Hindsight, excellent. But look, let's dive into the geopolitics behind not just that central bank decision, but all of them this week, really. When I'm looking at the Iran-Israel conflict, you could make the argument that the US needs to intervene because Donald Trump hasn't got much in the way of trade deals so far. He hasn't finished the war in Ukraine in a day, as he promised. You've got people joking that Trump always chickens out. You looked at the attendance of the military parade. Is the market underpricing the risk that actually the US is going to get in and support Israel against Iran here?
Well, I could have a lot of sympathy with the idea that the market is somehow being a little complacent, reckless in the face of these challenges. You know, the equity market response, relatively,
apathetic, right?
Yeah, really quite modest. And I guess the oil price response, you know, 15% appreciation. Those numbers are quite modest in the scheme of like how the oil price moves in the face of geopolitical challenges. But you know, I think there's sort of a couple of points. One is, like, anchoring investment decisions to geopolitics hasn't been like a great investment strategy in the past. But of course, those that afflict commodity prices and that could see an enduring appreciation in the oil price, you know, ones we're a bit more alert to. But, you know, you put out the scenario analysis, and of course, you know, the Iranian supply coming off stream, given the US involvement or the probability of US involvement, you know, would be a challenge. But, you know, the spare capacity that's available from OPEC, you know, could certainly overcome those challenges. And then you're thinking about closing the Straits of Hormuz and, you know, that being a real blow to the oil markets. And of course, you could see a spike in the oil price, and you indeed would expect, you know, 100 plus. But how enduring would that be, given like the response you would anticipate? I mean, it's not just the US that would be annoyed by that. You know, China would be, you know, furious with that outcome. You know, a lot of their oil supply comes through the Straits of Hormuz. So, you know, I think the market's onto the idea geopolitics, sometimes a bit of a head fake, and then also that the oil price has residing in an enduring price well north of 100 for an extended period, maybe not the most probable outcome.
So basically, you need to see the Strait of Hormuz closed in retaliation for a US involvement in it to see big movements outside of oil and gold.
Yes, I think so. And look, I wouldn't. It's very difficult to predict where the oil price could go temporarily on the back of like a Straits of Hormuz closed. It's been threatened so many times, but you know, it hasn't happened. So if it does happen, you know, the oil price could go anywhere. But I would suggest that would be a good shorting moment, because I just wouldn't. I know I've got to be careful about. I've got to be humble about how much geopolitics I should profess to have a full grasp on. But you know, it seems as though the response, a global response to Iran, you know, closing that oil supply artery would be quite mammoth, and therefore wouldn't necessarily be an enduring risk.
Yeah, and also all of the political, the logistical challenges to that, the fact that they need imports themselves through that strait. Ben, it's always good to see you. Invesco's Ben Guttridge, we thank you for your insights. Coming up on the programme, Bloomberg News reporting that senior US officials are preparing for the possibility of a strike on Iran in the coming days. We'll get the details next. This is Bloomberg.
I'm David Weston. Join me for the next generation of Wall Street Week. This week, Vlad Tenev of Robinhood takes us into the wild world of mathematical superintelligence. We go to Saudi Arabia for the story of Aramco's plan to help wean the kingdom off of oil.
We think of ourselves as a technology company delivering energy. We are very pragmatic here in the kingdom.
And Larry Summers dissects the Fed's latest decision. Watch the all-new Wall Street Week. More than what you need to know, it's what you need to think about.
AI should be for everybody, from leaders to the working on floor. And we can save 90% of time, 50% of workforce. AI is core in centers of change. And therefore, we invest heavily to AI. Actually, we started more than 10 years ago because we think the machine in the past helped our hand and legs. Now the machine helps us in brain.
Are you betting all your money in this right now?
When the OpenAI appear, immediately I asked whole corporations study how will you bring generative AI to their job.
Bringing you up to the minute geopolitical news whenever and wherever it happens. I'm Amber Verdern at the G7 in Alberta, Canada. This is Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onen, only on Bloomberg.
Welcome back to Bloomberg Markets. I want to bring you some breaking lines now out of the Middle East. We are hearing from the Prime Minister of Israel, Benjamin Netanyahu, that Israel's two goals are removing nuclear and ballistic threats. Now, he says, we may create the conditions that help the regime downfall, of course, the Iranian regime. He says the downfall may be a result of Israel's operation here, but it's up to the Iranian people whether to bring down that regime. So hearing the latest from Netanyahu, as I say, we've had the market reaction today in terms of European equities. We are risk off, red across the screen. Oil is higher throughout the day. Currently Brent at $77 a barrel, so up 1.4%. But the focus very much now on how the US responds to all of this. So let's bring in Bloomberg's Tyler Kendall. She joins us now from Washington. Tyler, I wonder at this point, is it a matter of when, not if, the US supports Israel directly in this military campaign?
Yeah, hey, Lizzie. Well, that is the biggest question going forward, and people familiar do tell Bloomberg News that they are pointing to a potential weekend strike that would have U.S. being involved in this going forward. But we should say that the situation, of course, is very fluid, and the sources do caution us that anything could change. Now, at the moment, President Trump is expected to go into the Situation Room shortly at 11:30 a.m. Eastern, so we could potentially get an update after that. But he was asked directly whether or not the U.S. would get involved yesterday at the White House, and he said he may or he may not, and that he prefers to make these decisions 1 second, in his words, before the decision is due. He also did acknowledge that he has been asked numerous times specifically if the U.S. would get involved in a strike on the Fordo nuclear facility, and he said that he has not made that decision quite yet. But we really have seen the speculation mount as President Trump's rhetoric has really heightened in support of the ongoing Israeli operation. Though it is, we should say at the moment, the U.S. really has assumed that more defensive posture, and White House officials do tell us that all options remain on the table, including diplomatic talks. But Lizzie, it is our understanding that his change in rhetoric really has come from listening to some more hawkish advisors in recent days. That includes Republican Senator Lindsey Graham of South Carolina. It is our understanding that the pair have had numerous calls so far this week.
So Graham has his ear at the moment, Tyler, but how much is this going to test his ties with the isolationist MAGA loyalists? How damaging is this at the moment already for Trump domestically?
Well, Lizzie, it does potentially could widen a rift that we're starting to see in the Republican base, considering that President Trump did campaign pretty heavily on getting out of foreign entanglements. But we did see a notable isolationist in his campaign, of course, that is Vice President J.D. Vance. I covered then Senator Vance very closely when he was in the Senate, and he actually was the person that held up aid to Ukraine the most during that debate because he was campaigning on this more isolationist view. and putting America first and not getting involved in these foreign entanglements. But then we heard from the vice president earlier this week saying that he would support President Trump if he does end up going into that more offensive position, and that Americans should trust President Trump on this issue. So it is clear that they are already starting to talk about how they could approach the base here if the U.S. does end up getting involved.
Okay, Bloomberg's Tyler Kendall, we thank you as you watch for any hint that the Trump administration is going to get directly involved in this conflict. Now let's turn to the Middle East side of all of this. Gulf states rushing to get negotiations between Iran and the US back on track after being caught off guard by Israel's preemptive strikes. We can speak to Bloomberg's Jomana Basecci now, live from Dubai. She is, of course, our Horizons Middle East and Africa anchor. Jomana, good to have you. I wonder, what are the hopes now that Iran does come to the negotiating table and that actually we don't need to see an escalation in this conflict?
Well, there's a hope, and I would say also a wish as well. There's a lot of nervousness right now in the region because it is really uncertain what steps the U.S. are going to take from here. President Trump himself has not committed yet to military action. We're just hearing from Tyler there, but it seems like a decision will be made in the next 24 to 48 hours, and therefore the entire region is on high alert, not necessarily because they believe that GCC infrastructure or energy infrastructure could be at risk, but namely because many of those U.S. assets, those military bases, are dotted around the Gulf region, from Bahrain to Qatar to Kuwait. There are over 45,000 soldiers stationed in the GCC. And from Iran's perspective, we heard from the Ayatollah yesterday, and he was very defiant. He said, we are not going to capitulate. And if the U.S. are seen to be participating militarily as well, we would not hesitate to cause, and this is a quote, irreparable damage on U.S. assets as well. So there is sort of a defiance coming through from the Iranian regime. That being said, Arab states around here are really pushing to restart those diplomatic channels. I was just speaking to the former Foreign Affairs Minister, Nabil Fahmy. He was the Foreign Affairs Minister of Egypt, I should say. And he was saying what's necessary is forceful diplomacy, not just brute force alone. Tomorrow, there's going to be a meeting taking place between the Iranian foreign minister alongside his European foreign minister counterparts from UK, France, Germany. There will be discussions in Geneva. And he expressed some optimism about perhaps this restarting the diplomatic route again and bringing Iran to the negotiating table. And we also know that these Arab states, Qatar, Oman, and Saudi Arabia are all putting pressure on the U.S. to, in turn, put pressure on Israel to reduce the intensity of the strike so that Iran will actually return to the negotiating table vis-a-vis those nuclear discussions.
Yeah, I mean, it was a fascinating conversation, and everybody really wanting de-escalation as we look into this from the outside. But we had Netanyahu earlier talking about the regime downfall maybe being a result of this operation. But, you know, what I constantly hear is that there's just no alternative to the current regime. Is it not the case, given everything that's happened since Friday, that there's another alternative trying to cultivate itself? Or that has there been any development on that front since Friday's strikes?
There's been absolutely no development on that front. And let me just bring it back to the conversation that I was having with Nabil Fahmy, the former Egyptian foreign minister. And he said, there's no good precedent in history of forced regime change. If there is going to be a change of leadership, it has to come from domestic pressure. It has to be a domestic push. It cannot come externally, especially under these set of conditions. Now, what the Israeli side have said is they have two main strategic objectives, and those are, one, eliminating Iran's ballistic missile abilities, and number two, ensuring that they never develop a nuclear weapon. But they do say if the byproduct of that is ultimately regime change at the top, then of course it wouldn't be a negative corollary if that did actually seem to happen. But that's not a stated objective. Interesting to see that the Israeli Prime Minister has gone one step further with the comments now, but that is in response to an attack that Iran leveled on an Israeli hospital earlier today. The number of injured there is totaling more than 200. And on the back of that, the Israeli response seems to be gearing up for one that is quite forceful. So we expect more intense airstrike actions on Iran, on Tehran in the next 24 hours just from Israel alone.
Bloomberg's Romana Basachi, we thank you for staying for us to keep us abreast of everything that is happening in the Iran-Israel conflict. We thank you. Still ahead on the programme, we'll look at the oil angle. Shell CEO saying that his company is being very careful when it comes to shipping in the Middle East. We'll hear part of his interview from the Japan Energy Summit next. This is Bloomberg.
On Bloomberg Open Interest, this data from Trump's trade war, what are you seeing in your district?
Businesses are afraid to accelerate. By and large, they're pulling over and putting on the hazards.
You're constantly speaking to businesses. Is anyone making big investments?
Inflation is a big bugaboo. There's no evidence yet that inflation-driven drop in sentiment drops spending. That's why I say there's the disconnect on the consumer side.
Don't miss Open Interest live weekdays.
Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
The circuit is back. How confident are you that AI's promise will outweigh the perils?
I'm not confident.
Tune into Season 3 of The Circuit with me, Emily Chang, Thursdays at 6 p.m. Eastern on Bloomberg Originals and Bloomberg TV.
Today's CFOs are reshaping the C-suite. Bloomberg's Chief Future Officer shines a spotlight on these dynamic leaders. CFO Pascal DeRoche has played a key role in restructuring AT&T, reducing debt and refocusing the business. Now his steady approach has the company primed for growth.
I'm a believer you try to make progress on big problems every day, and ultimately you'll look back and say, hey, you've come a long way.
Watch Chief Future Officer Wednesday on Bloomberg. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Welcome back to Bloomberg Markets. Now, Shell, one of the biggest traders of oil and natural gas, is being very careful, it says, with shipping in the Middle East due to the conflict between Israel and Iran. That's according to the company's chief executive officer. While Sawan spoke to us at the Japan Energy Summit and exhibition in Tokyo earlier on this morning.
The escalation in tensions over the last few days, in essence, has added to what has already been significant uncertainty in the region. Our focus has been very much on making sure our people are safe, that our assets are protected both physically and from a cyber perspective as this escalates further. And of course, we're observing the markets. I mean, you've seen a bump up in both oil and gas prices, but it's still moderated, I would say, because people are waiting to actually anticipate whether physical infrastructure damage might happen. That's been a bit more contained. We're being very careful with, for example, our shipping in the region, just to make sure that we do not take any undue risks.
Will you need to change that strategy if we get any U.S. military action, which could happen in the next 24 hours?
We are monitoring that very, very carefully, and of course, we are in close discussions with the government. At this stage, we continue to be confident in the posture we have taken, But of course, we have plans in the eventuality that things deteriorate.
How important is the Strait of Hormuz right now? And even if we don't necessarily see a closure, just disruptions in that region?
I mean, massively important. 20% of the world's oil is flowing there and a roughly equivalent amount of the world's gas. What is particularly challenging right now is some of the jamming that's happening on GPS devices and the like, which is a concern. The Strait of Hormuz is, at the end of the day, the artery through which the world's energy is flowing. And if that artery is clogged for whatever reason, it'll have a huge impact on global trade. And so Shell, of course, has a very broad portfolio of assets. We have to already anticipate if, for whatever reason, those arteries get clogged, we have to think about other means to be able to supply our customers from other locations.
Are you trying to look for alternative supplies at this point?
We have multiple production points, both oil and gas, that we would need to be able to mobilize to fulfill our customers' needs. But there is no question that a 20% impact for the supply of both oil and gas will have massive implications for the world's energy system.
So that was the Shell CEO, Wael Sawan, speaking to Bloomberg's Sherry Yarn in Tokyo. As we look at Shell, one of the best performing stocks in Europe today on that higher oil price, as indeed as the entire energy sector. And of course, the geopolitical tensions are the backdrop for the raft of central bank decisions we have had this week. We're going to be discussing those next with Jennifer McEwen, former Bank of England economist, now at Capital Economics. Stay with us. This is Bloomberg.
Confluence between the long-term investor and what we're trying to do. We have an operating principle that's in our handbook, take the long view. When we went public, we put a timeline up on the screen for the whole company in an all-hands meeting. And that timeline went from founding to 100 years out. And the IPO was one dot in 1 year on that timeline. And we tried to orient the employees to, this is a wonderful event, this IPO, but it's a moment in time on a very long journey.
This is a company that you want to exist in 100 years.
We do.
Wall Street doesn't think in...
No, they think in like hours. Yeah. And what I've learned of Wall Street, and particularly Wall Street investors, when they say they are long-term investors, that means they'll keep your stock for like a month. There has been one instance where I did something that was just for short-term stock, and I felt so bad about it that I don't think I'll do it again.
What was that?
There was one quarter, a few quarters ago, we were not going to beat the quarter. We were going to probably just hit it. And so far, we beat every quarter. So we were all like, wait, what? Our perfect record. We're like a 4.0 student that is going to get a B for the first time. This is not good. And I decided that for a short period of time, at the end of a lesson in our app, we would show 2 ads instead of 1. Turns out that that by itself was good enough to beat the quarter. But it's bad for the product. It's not good. After that, I'm never doing that again.
Didn't really think I had a problem.
I would isolate, self-medicate. Like 48.5 million Americans, they didn't choose addiction. Go to shatterproof.org/findtreatment. Watch the film No More Secrets and find out how you can get help. That's shatterproof.org/findtreatment.
Get your fixed income fix. Watch Bloomberg Real Yield every Friday at 12 p.m. Eastern, right here on Bloomberg. Context changes everything.
Welcome back to Bloomberg Markets. We're just coming up to 2:30 p.m. here in London. I'm Lizzie Burden. Welcome to the programme if you're just joining us. It is, of course, the Juneteenth holiday stateside, so we've got US markets closed, at least when it comes to cash trading in treasuries and stocks. And as we look elsewhere around the world, it's lower volumes as a result. In terms of the European equities picture, you've got the Stock 600 weaker 0.4%. The CAC 40 is the underperformer there. And if you flip over to the cross-asset picture, you can see that oil is stronger. That means that energy is one of the best performing sectors sectorally across the European landscape. But really, oil pretty much range-bound still. Brent at $77 a barrel as we await more news on the Iran-Israel conflict. That is really the reason for the risk-off mood, because we're anticipating potentially US involvement in the conflict. You've got gold actually weaker. Well, it's stronger now, is it? I'll have to squint. I need my glasses. It's weaker. It's down 0.2% at $3,364 a troy ounce. You've actually got gilts pretty steady across the curve after that BOE decision. They held rates that you might describe the meeting as dovish. We shall discuss it more in just a moment. But the pound pretty steady as well. The dollar strengthening slightly. We did hear from the chair, Jay Powell, after the Fed's decision last night, warning of meaningful inflation. And you are seeing that dollar strength on the flip side of the pound's weakness. But let's get over to our conversation about central banks next. Worldwide, we've had decisions from Washington to Frankfurt preparing to cut rates as global growth is threatened by trade, geopolitics and inflation. But we've had lots of holds in the meantime. Today, the Bank of England holding rates but hinting at cuts ahead. And we can speak now to former Bank of England economist, now Capital Economics chief global economist, Jennifer McEwen. Jennifer, it's always good to have you on the programme. Let's start with the BOE, because this hold was expected, but the excitement comes from the vote split. Do you interpret this as a dovish hold?
Yeah, I do. The bank's been cutting rates at every other meeting, and it cut rates at the previous meeting in May. So nobody had expected a cut this time around, really. But 3 MPC members did vote to cut: Dingra, Ramsden and Taylor. And that's a big difference to the last time that there was no change, when there was only 1 vote for a reduction. So I think this definitely was a dovish hold, and I'm a bit surprised we've not seen a slightly stronger market reaction to it.
Oh, that's interesting. I mean, when you look towards August, it seems like the market expects a cut then. Do you think that there's any way the BOE could fight against those market expectations?
I doubt that it will need to. I think there will be a cut coming in August, but I think also that the cutting path, while it will continue to be pretty gradual, wage growth has been very sticky in the UK, and that's really, really important to the MPC. Various members have stressed the importance of wage growth in their thinking at the moment in particular. But I think while the profile is going to be quite gradual for now, I think it will ultimately probably go further than markets are anticipating once wage growth does start to slow. I think we could get as low as 3%.
Okay, I mean, on the flip side, how are you thinking about the inflation risk from the geopolitics? Because, as I say, oil's pretty range-bound at the moment, but there is the outside risk that the Strait of Hormuz gets blocked. Indeed, we've already seen some shippers avoiding the route or delaying shipping. Is that going to show up in inflation and therefore be an issue for central banks?
Yeah, not yet, but absolutely it is a risk. And what we're looking at really is at any sign of an escalation in this conflict, which might mean that the Strait of Hormuz is blocked. We keep hearing about how important that is. That's absolutely the case. We're already seeing some signal jamming, which might be why we've seen some diversion in some shipping routes to try and avoid that. I don't think that will have a major inflationary impact at the moment. Shipping costs are a really minor element of the final costs that consumers pay from the shelves. But if we were to see a major escalation of the conflict, which really pushed the oil price up, in some scenarios we could see the oil price going as high as $130, maybe even $150 per barrel if there were a major retaliation in which the US were to become more involved in the conflict, then Iran then retaliates, the Strait of Hormuz is blocked. In that kind of scenario, scenario, then I think to some extent all bets are off. But if we do get the oil price rising to 130, 150, then advanced economy inflation could be 2% higher than in our central scenario, or perhaps even more. And I think in that case, even though central banks would like to think that would be a temporary impact, I think it would be a brave central bank that continued to cut interest rates at a time when inflation was rising that far.
Okay, and I mean, it's really in that context that central banks are flagging the risk of higher oil prices. It's something that's on the radar, but as you say, it's not really the main thing at the moment. We can't forget, though, Jennifer, about trade. We can't be too distracted by the geopolitics. Of course, the Prime Minister Keir Starmer managed to get another agreement in terms of building on the last one when he saw Donald Trump at the G7. How significant is that in terms of the outlook for the UK economy? It seems to me the fact that we had to host the US-China trade talks in London shows that the government at least is aware maybe that deal's more important than their own one.
Yeah, I think that's right, actually. That's a good point. So far as the UK is concerned, trade links with the US are not that strong. It's not a major input to our GDP, our exports to the US. But what is more important is the global environment, the extent to which these trade tensions start to damage demand in the US and therefore elsewhere, the extent to which the EU is brought into this and ultimately faces higher tariffs, which then weigh on demand there. So I think this general environment is more important for the UK than any particular deal, not least because actually the details of the deal have been somewhat disappointing, really, given that the UK doesn't really even run a trade surplus with the US. We should have stood in a relatively good position to get a relatively good deal, and yet significant tariffs are still in place.
Yeah, particularly the steel tariffs, a big question mark remaining for the Prime Minister Keir Starmer, a disappointment to some. And let's also just look back, shall we, at the Fed decision last night. You had this unanimous hold yesterday, as expected, but the dot plot showing really no conviction about what comes next, right? There's so much uncertainty. What are you looking for in terms of how many cuts and when in the rest of 2025?
Yeah, I mean, uncertainty is clearly the big theme for the Fed, isn't it? And I think with interest rates now not very high, not too restrictive, it would feel like quite a brave move to continue cutting interest rates at a time when there's this potential inflation risk looming. We think that tariffs are going to cause a significant, albeit temporary, increase in US inflation, and that therefore the Fed's likely to stay on hold for the rest of this year. And I think we're seeing from this latest meeting that maybe things are shifting in that direction. As you said, the vote again has significantly changed. Well, the forecasts and the dot plots have shown a significant change. We're only just in a position now where the median is for 50 basis points of cuts. It won't take much at all for that to shift to only one cut being projected by the median at the FOMC. And I think ultimately, there's already several members voting for no change at all. I think ultimately, when these inflation effects do start to materialise, then that is going to be the situation that the Fed will stay on the sidelines for the rest of the year.
You'd be brave to cut with this inflation risk. Tell that to the president, Jennifer. I'm not sure he'd like it. Jennifer McEwen of Capital Economics, always good to have you on the programme. We thank you joining us on this Juneteenth holiday. Well, coming up on the programme, we're going to look inside LVMH's decline and the pressure on Bernard Arnault. That's next. This is Bloomberg.
In case you missed it, on Bloomberg Crypto.
How do you expect the asset to continue price increase at these levels that we've seen? And at what point do we see, winter coming again?
Winter's not coming back. We're past that phase. If Bitcoin's not going to zero, it's going to $1 million. And you have all the evidence you need to determine that, right? The President of the United States has determined he supports Bitcoin. The Cabinet supports Bitcoin. Scott Bessent supports Bitcoin. Paul Atkins has shown himself to be an enthusiastic believer of Bitcoin and digital assets. Ken Taz at CFTC feels the same way. The banks are going to custody Bitcoin. Bitcoin has gotten through its riskiest period. The accounting has been corrected. There's now only 450 Bitcoin a day available for sale by natural sellers.
Don't miss Bloomberg Crypto live Tuesdays.
In case you missed it on Bloomberg Surveillance.
They say you're in your right if you use Section 122. Why didn't you guys do that from the beginning?
Well, Section 122 only gives you 150 days.
Is
so
Section 122, if you use this
that,
now for 150 days, would it be a bridge to 301 or a bridge to 232? What are you thinking more long term?
You can be the strategist on that.
So just got to tell you one thing. You're not allowed to hire Anne-Marie. She's with us, all right? Don't miss Bloomberg Surveillance live every weekday.
The multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, Mondays on Bloomberg.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
It's 100 years, 80 years, 100 years of dollar strength, so much so that important commodities, gold, oil, are denominated in dollars. I think undoing that will take a long, long time.
Welcome back to Bloomberg Markets. It's 2:42 here in London, and that is where we're going to turn to next. The housing market here in the UK capital, where the number of homes for sale at £5 million or more hit the highest on record last month. This as wealthy foreigners look to escape a hike in taxes. Let's find out why now. We can speak to Bloomberg's Damien Shepherd. Damien, you've been reporting on all of this. I wonder, how much can we really be sure that the changes in the housing market come down to the changes the Labour government's been making to the non-dom regime?
Yeah, look, if there was ever a bad time to be an extremely rich non-dom in London, it is probably now. I meet with agents in that space, the ones selling the 5 to 50 to 100 million pound homes, and they say that absolutely the main issue impacting that side of the market right now is the changes to non-doms, a 2-century-long tax break for non-domiciled residents in the UK, and it's really filtering through to how the housing market is playing out. There's far more stock on the market for non-doms trying to leave, but at the same time, there's no buyers because the same issues are with the people that will be looking to buy those homes. So it's a real mess at the top of the market at the moment.
Yeah, I mean, I was talking to the Chancellor, Rachel Reeves, about this and whether she's worried about it, whether there's going to be this exodus of non-doms. And she's not worried, by the way, but when you look at some of the economists reporting, they say that the critical threshold is if more than 1 in 4 leave the UK. There are reports that she could change course, the Chancellor. How much would that reverse the impact that you're seeing in the housing market?
Yeah, so I've seen the reports on the potential for a change. I rang up one of the top agents immediately, and they said it won't change things overnight, but it could stop the bleeding. One of the big issues for non-doms is the way that inheritance tax is treated. So 40% of their overseas assets are charged in this regime, and they just cannot swallow that. The fact that much of their wealth is going to be cut off with the Labour changes, and that's one of the main reasons why the housing market at the top has suffered so much. So if Reeves looks closely at the inheritance tax part of the non-doms regime, then that could really have an impact.
I know that this is homes for sale at £5 million or more. Of course, asking prices aren't selling prices. How much is this actually just estate agents dangling hefty price tags just to lure these people into the market?
I mean, estate agents don't have the best reputation, but I think in this situation, you genuinely need to price correctly to get a sale in this market. There was a property in Mayfair, a really fancy apartment recently, that started its journey in 2023 at £100 million. It's just gone down to £68 million.
Exactly.
So
asking isn't sale price, right?
It's true, but there's no buyers in the market for homes which aren't priced at a level that will really tempt them at a time when stamp duty hikes have happened, non-doms changes are playing on their minds. Another hold from the Bank of England today. If you don't put your price down, you're going to get nowhere at the top end of the market, and that's why we're seeing such big price reductions and stock on the market in London.
All right, Bloomberg's Damien Shepherd, we thank you for your fabulous reporting on our favourite topic, the London housing market. Now, let's turn to another favourite topic, luxury goods. LVMH CEO Bernard Arnault is grappling with unprecedented issues causing a sharp decline in the brand's value, as well as his personal wealth. We can speak to Bloomberg's Tara Patel about this now. It is the topic of our Bloomberg Big Take. Tara, I mean, Bernard Arnault was the world's richest man. Now he's toppling down the Bloomberg Billionaires Index. What exactly is going wrong?
Well, absolutely. I mean, the fall has been swift. It's been steep. A year ago, he was at the top. He was the first billionaire from outside North America, the first from the consumer market, the first European to reach the top of our 500 richest people in the world. And now he's slipped down to number 9, number 10, depending on the day. LVMH shares have more than almost halved. And so there really is a decline. The decline is coming from demand in brands such as Louis Vuitton, such as Dior, and the other 75 brands that he owns as part of LVMH. The reasons for this are complicated, although geopolitically it has to do with tariffs, the threat of tariffs from the United States, from the Trump administration, and also at the same time, the luxury market has relied for over a decade on China, the Chinese consumer wanting more and more and more luxury goods as they have greater ability to spend. And now that the economy and the Chinese consumer is suffering, so is the luxury market.
So the big themes coming home to roost, but actually there's a report from Bain with the Italian luxury association Alta Gamma today saying that it's not all lost. The market isn't broken. Why? What's the hope that they can see?
Well, I think the market isn't broken. I think what's really hurting LVMH and some of the other luxury names like Burberry, like Kering. Kering owns Gucci brand, which is another brand that's really suffering. What's really, sort of shaking investors is the fact that they just really don't know. There's huge uncertainty about when the market is going to turn around. I think in the long term, there's relative confidence that luxury goods will always be around and people will always be around to buy them. But it's when it's going to turn around. And in terms of LVMH, the problems also include the fact that Bernard Arnault has spent more than 3 decades building up his empire. He has such a wide range of brands, which used to be when times are good, investors don't look particularly closely at one and play one off of the other. They're very happy with high margins and times are good. When times are tough, they take a hard look and sometimes, as with big conglomerates, attach a discount to conglomerates. And this is another problem for LVMH.
Yeah, question marks over the likes of Sephora. But you talk about potential changes on the horizon. I wonder when we're going to see the effect of changes like Jonathan Anderson moving from Loewe to Dior, of Kering poaching the CEO from Renault. When are those things going to impact and show up in the share prices?
Well, this is the question. This is the uncertainty. Putting in a new designer means that the designer has to land, all the marketing involved in terms of, boosting up consumer, aspiring buzz around a brand. First of all, the new designer has to come and show what he or she is going to put on the runways, and that better be good to make consumers want to buy it. So it's a very long term. It can sometimes take up to a year, 2 years. Some of the first designs from the new designer will only appear in stores 6 months after. And so I think this is a long-term thing. When one comes to Kering, Luca Di Maio, who's the new CEO, just coming in straight out of the auto industry. Maybe he was really good at marketing cars. Maybe he has a personal penchant for luxury items. But hitting the ground running in an industry that is as particular as the luxury market is not something that can be really done in the short term.
Okay, well, we'll have to see how that plays out for Luca Di Maio. Of course, Renault also in its own turnaround and leaderless at it now that he's going to Kering. But Bloomberg's Tara Patel across it all for us. We thank you for the update. Now, I want to get back to our top story and just mention a new headline that has just crossed the terminal. We have heard sirens being blasted through Israel as Iran sends rockets to Haifa. We're going to bring you the latest developments as we get them, so stay with us. This is Bloomberg.
up-to-the-minute economic news whenever and wherever it happens. I'm Jennifer Zabasaja in Cape Town, South Africa, and this is Bloomberg.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question. Great question. I so appreciate that question. You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
In case you missed it, on the opening trade.
What trade does is it meets a consumer demand. Consumer demand is not weakening. China supplies a little over 30% of the what we eat, wear, and consume. That's unlikely to change anytime soon. I think that supply will find new homes potentially, but our reliance as a global economy on Chinese manufacturing is unlikely to change fundamentally anytime soon.
Don't miss the opening trade live every weekday.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jumana Versace in Doha, Qatar, and this is Bloomberg.
Welcome back to Bloomberg Markets. Now, TikTok's US deadline to divest or be banned has got a third extension from President Trump. The administration delaying the ban by another 90 days, allowing the social media app to keep operating in the US as it proceeds with negotiations. Project Liberty founder and longtime bidder for TikTok, Frank McCourt Jr., joined us on Bloomberg about the extension.
It's been a while, but, I've learned to be very patient, hang around the hoop. A lot of good things get done when that happens. And, my sense is, and this is not this is purely my opinion, but I think this is the last extension. I think 90 days, not 75 days is significant. And I think something gets done within the next 90 days or not.
But does it involve you? Have you been on the phone with the vice president? Have you been involved in the negotiations?
We were very much involved during the first extension, and less so during the second. Things have been relatively quiet, as a matter of fact. So I don't know if I should draw any inferences there, but it's been fairly quiet overall. Look, I still love our chances, Caroline, because the legislation is very, very clear on what is mandated. Our bid, as far as I know, is the only bid that actually qualifies, that actually meets the criteria in that legislation where we completely disentangle from the Chinese technology.
So Frank, I want to get really detailed on this, because on the other side of the table in this bidding process, there is a coalition of different individuals and technology companies whose proposal, as I understand it, is outside what's legislated for. In other words, some element of co-location of data and licensing the algorithm. Would you just explain how your bid is distinct from that?
Yeah, and I think you've hit the nail on the head. And what we're not looking to co-host the data or to use the Chinese algorithm. Project Liberty is about empowering individuals, not exploiting them. So we're not interested in scraping people's data, surveilling them, right, spying on them, scraping their data, aggregating it, and then micro-profiling people, and then using a black box algorithm to manipulate them. That's not what we're interested in. And that's why TikTok is so attractive to us, because we can not only solve the national security issue, but we can move the user base and the data onto this new, clean, made-in-America stack, which doesn't rely on Chinese technology, doesn't surveil on people, and as a matter of fact, empowers people to permission the use of their data and get paid for it. This is going to be the new internet. It's going to happen sooner or later.
Frank McCourt Jr. of Project Liberty hanging around the hoop, waiting for his moment to buy TikTok. He was speaking to the Bloomberg technology hosts Caroline Hyde and Ed Ludlow. And for all things tech here in Europe, be sure to tune in to Bloomberg Tech Europe, hosted by Tom McKenzie. It premieres tomorrow at 6:30 a.m. London time. Stay here for more. This is Bloomberg.
Easy to get the pandas to come back to Washington, D.C. Did the Chinese say, we have some extra pandas, we don't know what to do with them, we're going to give them to you?
Well, it was a little more difficult than that. It probably took us, it was about over the course of a year where we had conversations with our colleagues in China, and we were able to get pandas here very quickly. I think it's a testament to the relationship we've built over decades, to the conservation success that we've had, here with our pandas and our panda program. And so it was a lot of conversations, but I think we always knew in the end that we did want pandas at the National Zoo.
How many pandas are there in the entire world?
So this is incredible, because this is all due to this panda program, and this is so important. So when we started with giant pandas 50 years ago, there were fewer than 1,000 pandas in the world, right? We're talking in the wild and zoos, fewer than 1,000. And decades later, there are close to 2,000 pandas pandas in the wild now. Actually, I think a little over 1,800. There are over 700 pandas in breeding centers. So as part of this program, we have tripled the number of pandas on the planet.
But still a small number of pandas.
Because of this program, there are more pandas on the planet, more quality panda habitat in the wild, and pandas have gone from being endangered to being vulnerable.
Our global headquarters in New York, I'm Danny Berger. Welcome to Bloomberg Brief. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday only on Bloomberg. Context changes everything.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Welcome to Bloomberg Markets. I'm Lizzie Burden, joining you from London. It is a Juneteenth holiday stateside, so we've got no cash trading in treasuries or US stocks, but there is plenty to update you on around the world in terms of the geopolitical conflict that is happening between Iran and Israel. We're watching out for whether the US gets involved, and that is powering the risk-off mood, as you see on the screen, in terms of European equities. Particular underperformance out of the CAC 40 in Paris, but the stock 600 down 0.6% as well. Energy is one of the few sectors that is managing to eke out gains today because, of course, we see an higher oil price. So let's flip the board and zoom into that. At the moment, you've got Brent trading at $77 a barrel. It's higher 1.6%, but still pretty range-bound as we await to see what happens next in this conflict. Earlier on today, we had that Bank of England rate decision holding as expected, and the pound now pretty steady at $1.34. Not much happening in your gilt market. And then we look to gold as well, unchanged at $3,369 a troy ounce. As I say, we await what happens next in the Middle East. Outside those Middle East tensions, a top story for markets coming from the Bank of England, which held rates steady today. The decision coming with a dovish vote split, 6 voting to hold, but 3 voting for an immediate cut. Bank of England Deputy Governor, for Monetary Policy, Claire Lombardelli, was speaking about where the bank will go from here.
I mean, we'll decide interest rates in August, in 6 weeks' time. I'm not going to predict what it is we're going to do. We have said that we expect interest rates to be on a gradually downward path in general, but of course we need to be careful and think about all of the factors playing in. I mean, inflation is still too high, and that is painful for people.
Now, while the Bank of England held, the Swiss National Bank did not sit on its hands. It cut interest rates to 0 to deter investors from pushing up the Swiss franc. The Swiss Bank President Martin Schlegel spoke to Bloomberg's Bastian Benrath-Wright earlier on in Zurich.
There are several factors at work here. So one is certainly the stronger Swiss franc, especially against the US dollar, but it's also tourism that is lower, and it's also energy prices that were lower and put inflation to the downside.
Well, we can speak to Bastian now, the man behind that interview. Bastian, good to have you on the programme. We just heard there from Schlegel talking about the franc's recent moves as a driver for this decision. So are we done? What else can the SNB do if the Swiss franc continues to climb higher?
Well, hi, Lizzie. Good to talk to you. Well, what they could do is they could go negative, because that's what the Swiss had in place, negative rates, actually the lowest rate in the world, minus 75 basis points at there from 2015 to 2022. So they are not necessarily done. I think it's very much an open question. Martin Schlegel today said that they will consider very carefully if another cut is necessary, and they won't go negative lightly, he said, because right now they're at 0. However, I think it's very much an open question, and we'll see in September when they next meet.
But in some ways, are we already in negative territory? Because if I'm a bank and I've got reserves at the SNB, I'm going to be hit with negative rates now, won't I?
Well, only if you hold too much cash at the S&B. So in Switzerland, the system is that every bank has an individual threshold. Up to the threshold, parking money at the S&B is free. It doesn't gather interest at 0%, but it doesn't cost you anything. However, when you're over that threshold as a bank, you have to pay minus 0.25% from tomorrow on. And you're absolutely right. This will result in money market rates, which are slightly negative. This is what S&B board member Petra Tudin told reporters today. So from tomorrow on, the Swiss overnight rate, the so-called SARON, is likely to be slightly in the negative, like 3 or 4 basis points below zero.
And kind of uniquely, I suppose, Switzerland's got too low inflation, a unique problem to have among central banks at the moment. How much would a sustained oil price rise help out of the conflict in the Middle East?
Well, I mean, it's hard to talk about anything like where that conflict helps, right? But it is true, like the fact that the oil price before the re-upping tensions in the Middle East, the fact that the oil price has been a lot lower than last year results in a base effect which weighs on Swiss prices. And however, it's not the only factor. Obviously, the Swiss franc is playing a strong role there. The idea is that like imports get cheaper and cheaper the stronger the currency gets, and therefore Swiss inflation is actually in the negative right now. In May it was at minus 0.1%, and obviously the S&B would like to keep it positive because it has an inflation target of between 0 and 2%. And so yeah, the Swiss policymakers are in the enviable position in a way compared to other economies that they have to stoke inflation.
All right, not the help you want, but Bloomberg's Bastian Benrath-Wright, we thank you so much for bringing that interview to us from the S&B President Martin Schlegel. Now, I want to broaden out the conversation. We can speak now to Nottingham Trust fixed income strategist Carissa McDonough. Carissa, really good to have you with us. There is just so much uncertainty to digest in the markets right now, whether that's geopolitics, whether it's on the fiscal side, whether it's the trade narrative, lest we forget that. What is the single biggest investor issue at the moment? What is the biggest issue for bond investors right now?
I think it's just like you said, the degree of uncertainty that is facing, bond investors, but also kind of stock investors across asset classes. Just as you said, like so the uncertainty about fiscal policy, there's question marks about kind of geopolitical tensions, unsure about kind of the passage of this potential budget bill, and just kind of questions that I haven't necessarily seen before in my career, in terms of questions about the preeminence of the U.S. dollar, because we've seen the dollar fall across all major currencies, down 10% against the euro, for instance. So I think that's, the investors are going to have to feel their way through in terms of what is the most important thing that we need to look at. And we do derive some degree of comfort that kind of the dollar story isn't over. We've seen some strong reception in Treasury auctions. Those continue to be well received. The Treasury market seems to continue to be the safe haven. We've seen Treasury yields drop something like 50 basis points since January, notwithstanding all the volatility. So we think the call for the U.S. dollar's demise is overstated at this point.
Okay, really interesting. Just as we've been speaking, Carissa, we've had a Truth Social from Donald Trump. He says, too late, Jerome Powell is costing our country hundreds of billions of dollars. He is truly one of the dumbest and most destructive people in government. I'm quoting, by the way. And he says we should be 2.5 points lower in terms of Fed interest rates. It would save billions of dollars on all of Biden's short-term debt. We have low inflation. Too late is an American disgrace. So that's Donald Trump's 10 cents there. If we think about that Fed decision last night, you've got a hold, but they're flagging stagflationary risks ahead. Yeah. Is that the right stance to take?
I think that they don't have another choice. I mean, the Fed has to walk that tightrope of their dual mandate. And as we saw from the dot plot, they actually pushed inflation expectations back up to 3%. Now we can argue about whether that's short term or not. The market believes that that's going to be a short term phenomenon. Economic growth, while it's still, theoretically on trend, those expectations have come down. So I think, again, stagflation is the concern, but if your policy tool is short-term rates, then you have to exercise that. I think Powell is spot on, and he's exercising caution, which is what you have to do in this environment.
The other thing that the Fed's considering at the moment, Carissa, is, of course, whether to reduce a key capital buffer that banks have to pay because of the constraints that it holds back their treasuries trading. I mean, yes. Besant is saying that this could knock tens of basis points off treasury yields. Do you think that that's realistic?
Quite possibly. I know that the banks have been constrained to a degree with that buffer, and so that is a likelihood that rates could react. I think that when you see those actions implemented in the actual market, that does have a real impact on bank trading. So we think that that's a likely possibility. Absolutely.
Okay, really interesting. Nottingham Trust fixed income strategist Carissa McDonald, we thank you, as always, but especially today, joining us on the Juneteenth holiday. Coming up on the programme, we're going to get back to the Middle East. The former head of Mossad counterterrorism, Oded Aliam, is going to join us on the US plans to attack Iran. Earlier, we heard from the Egypt former Minister of Foreign Affairs on the need for diplomacy.
The permanent five of the Security Council have a responsibility to play a leading role in diplomacy. So that would include UK and France, but also the US, Russia, and China. But if somebody has an initiative, I welcome that initiative. If it comes up with some concrete, tangible results or pathways, it should help the US choose the diplomatic trend rather than trying to push the military one.
Bloomberg's global financial correspondent, I get to meet the people shaping the way money flows around the world. And I want to bring you with me.
The capitalist system is the best system in the world. There isn't another one that works as well.
I love all these new Wall Streets. Y'all Street, Wall Street South.
Wall Street used to be a place. Now it's more of an idea. I hope you survived the day.
I did. It was a busy day.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Good morning. Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech. This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
Addiction isn't a choice.
I would isolate, self-medicate, and fabricate to continue my use.
I didn't really think I had a problem.
Rachel and Pete are just two of 48.5 million Americans with substance use disorder. But 3 out of 4 people find recovery is possible with help. Go to shatterproof.org/findtreatment to watch the short film No More Secrets and find out how you can get help. That's shatterproof.org/findtreatment.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Bringing you up to the minute geopolitical news whenever and wherever it happens. I'm Amber Verdern at the G7 in Alberta, Canada. This is Bloomberg.
Welcome to Bloomberg Markets. If you're just joining us, it is 3:13 p.m. here in London. But let's go to the Middle East now, where tensions are escalating. Sources telling us here at Bloomberg that senior U.S. officials are preparing to possibly strike Iran within the coming days. We were speaking to the former head of Mossad counterterrorism, Oded Aliam, earlier in the program.
Right now, but definitely we will need the U.S. aid in order to initiate such a blow that will be very hard to Iranians to reconstruct or rebuild. We are talking about a compound that is dug inside a mountain, about 120 meters inside. There is even one bomb that can really penetrate most of that, which is the BGU 57 that can be carried by the B-2 plane. And so if we want to shorten as much as possible this campaign and to bring the Iranians to the negotiation table under completely different terms, the U.S. should step forward and come across and assist us.
Well, this is a fast-moving situation. Let's go now live to southern Israel, where Bloomberg's Dan Williams is outside a city where an Iranian missile hit a hospital. Dan, thank you so much for joining us. Just bring us the latest on the ground.
Hi, Lizzie. Yes, I'm outside Beersheba. It's commonly known as the capital of Israel's south. Today, it made headlines for a different reason, a direct strike on its main hospital, Soroka, by an Iranian missile. A missile fired as part of a morning volley managed to get through Israeli air defenses, hit the southern surgical ward. Mercifully, many of the patients had already been moved out as precaution to more hardened areas, more fortified areas. There were 6 injuries and quite a bit of damage. We saw it there. It's a multi-story building. The entranceway is smashed. Just to give you an idea, we found this fragment of a missile. Among these fragments, it's a large chunk of jagged metal. These had been strewn hundreds of feet in every direction. It gives you a sense of the size of the explosion. It definitely shook up Israel, and as you probably know, the rhetoric from Israeli leaders has been ratcheted up further. They call this a deliberate strike on civilians that will be answered in kind. In fact, the Israeli defense minister is saying that the Iranian supreme leader, Khamenei, will, quote-unquote, answer for his crimes. So the exchanges of fires look likely only to continue and escalate while Donald Trump weighs whether to weigh in himself.
Well, Dan, other foreign leaders, including the UK's Prime Minister Keir Starmer, are urging the US not to give up on the diplomatic path when it comes to Iran. What do we know about what could happen next in terms of Washington's involvement here?
Well, I think Trump would be the first to say that he hasn't given up on the diplomatic path, or even the Israelis would say that. The question is diplomacy to what end? I think it would be fair to say that neither of the allies wants talks for talk's sake. They've laid out very clearly what talks should result in from the Iranian side, which is a complete abandonment and dismantling of uranium enrichment. That's the core program of the nuclear projects in Iran, one that would be needed at a lower level of enrichment of uranium for medical needs, isotopes and the like. But once that enrichment is ramped up, it can also produce fuel for nuclear weapons. They say that Iran should give it up. Iran heretofore has said that's a red line. That is not a project it wants to give up or would intend to give up or would agree to give up. So the big question is whether the military pressure will change the Iranian calculations and whether if the Americans come in, that might be the knockout blow in terms of the Iranian diplomatic stance.
And meanwhile, China has condemned Israel, but it's shown no rush to provide weapons to the situation. What do we know about the role that China and Russia will play in the Iran-Israel conflict going forward?
As you noted, at the moment, it appears to be a more rhetorical position, trying to push back against the other big power, the United States. I don't think right now we have the makings of a big power struggle, perhaps comparable to the crisis of 1973 around that Arab-Israeli war. However, if the U.S. does step in, and for example, if the Iranians were to retaliate with, for example, a shutdown of the Strait of Hormuz, a major waterway, a major thoroughfare for energy shipping, that might indeed change the calculation of other world powers, which in that case would feel their interests are being directly impacted.
And what's the mood in Iran, Dan? I know that you're in Israel at the moment, but you can take the temperature for us. A lot of talk from Netanyahu about regime change in Tehran. Is that likely at this point? You would think that other alternatives would be cultivating themselves, but no one seems to be able to point to one.
I would be very cautious on holding forth on that issue. I would recommend others do so as well. It's in recent memory when there was another Middle East engagement when we were assured it would be a quick and easy regime change with the quote-unquote liberators being welcomed by a grateful liberated population. It didn't quite work out that way elsewhere in the Gulf. It might not work out this way this time. I think for every Iranian who's happy to see the regime hit by Israel, there would probably be another Iranian who deeply resents this, whether it's for patriotism, whether it's for self-interest, whether it's for the fact that there may indeed be people who support this regime. It's been there for almost 50 years, and simply by dint of habituation, and the fact that people tend to respond with a siege mentality when attacked from the outside, it well may be that there are some Iranians rallying to the regime which haven't previously. On the other hand, success sells. That's a very Trumpian statement, but there could be people in Iran who straddle the fence and who reckon now that if the regime is on its way out, it might be worth giving it that extra push.
Dan Williams, we thank you so much for your brave reporting live from Israel. Keep safe. Still ahead, we're going to turn to the company impact of all of this. We're going to hear from the Ford president and CEO, Jim Farley, on the sidelines of Le Mans, discussing the impact of oil prices on his business. So stay with us for that conversation. It's coming up next. This is Bloomberg.
I'm David Weston. Join me for the next generation of Wall Street Week. This week, Vlad Tenev of Robinhood takes us into the wild world of mathematical superintelligence. We go to Saudi Arabia for the story of Aramco's plan to help wean the kingdom off of oil.
We think of ourselves as a technology company delivering energy. We are very pragmatic here in the kingdom.
And Larry Summers dissects the Fed's latest decision. Watch the all-new Wall Street Week. More than what you need to know, it's what you need to think about.
Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
The circuit is back. How confident are you that AI's promise will outweigh the perils?
I'm not confident.
Tune into Season 3 of The Circuit with me, Emily Chang, Thursdays at 6 p.m. Eastern on Bloomberg Originals and Bloomberg TV.
In case you missed it, on Bloomberg Open Interest, this data from Trump's trade war, what are you seeing in your district?
Businesses are afraid to accelerate. By and large, they're pulling over and putting on the hazards.
You're constantly speaking to businesses. Is anyone making big investments?
Inflation is a big bugaboo. There's no evidence yet that that inflation-driven drop in sentiment drops spending. That's why I say there's the disconnect on the consumer side.
Don't miss Open Interest live weekdays.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. Get your fixed income fix. Watch Bloomberg Real Yield every Friday at 12 p.m. Eastern, right here on Bloomberg. Context changes everything.
Welcome back to Bloomberg Markets, 3:22 here in London. And Bloomberg's Matt Miller has been trackside at the 24 Hours of Le Mans, a grueling endurance race that's attracted top-level executives and business titans as a destination for networking and deal-making. He sat down with the Ford Motor Company president and CEO, Jim Farley.
It's a really important region for us. We're watching Turkey as well. We have a huge operation in Turkey. We export all the way through Europe and the UK. So far, so good. But it's clearly a concern for all of us in business.
One of the things we've seen as a result, obviously, is the oil price rise 5 or 6% really across the board. Has the low oil price been helpful to you, or has it not helped to encourage people to buy electric cars?
Yeah, it's interesting because it cuts both ways at Ford. We're 60% almost of the commercial business in the U.S., and a lot of that is energy. So you go to Odessa, Texas, everyone drives a Ford Super Duty. So, you know, if oil isn't in that $65, $70 range, our customers suffer. But, you know, obviously, I think for the economy and for everything, it needs to be in that kind of range that makes sense for everything. Large spikes, big changes in oil prices and gas prices have huge impacts on our demand. We see truck and full-size SUV demand go down when there are big spikes. Happen in 08, happened many times. So, no, I don't think car business likes big changes for the consumer. It's very stressful for them.
The electric business, though, I would imagine also is dependent on, in some sense, higher gas prices.
It is.
I drove your Lightning. It was fantastic. Spent a week in it. I've driven the Mach-E for a couple weeks, and one of the great pleasures is you don't ever have to go to a gas station, right?
Yes.
How are those businesses doing right now? Because you've taken such big losses there and maybe slowed down in terms of your progress into EVs.
Yeah, we've really changed because we're thankful. We've been number 2 to Tesla for 3 years in the U.S. Because we spent our capital like 5-6 years ago, and all that product's been out for 4 years that you mentioned. So we've learned a ton. Now we've changed our capital allocation for EVs. We've reduced the spending, changed the battery chemistry a lot to focus on more profitability. We've gone down market and mostly in commercial. Those are the only markets where we think in the U.S., you know, an 8-7% of the industry is going to make sense for EV, where you can actually make money. And the EPA requirements have a big impact on the EV investments by OEMs. During the last several years, you know, we had to kind of sell like 15 to 20% of our mix to be EVs, both for the ZEV states, California, Colorado, New York, but also, you know, to meet the national tailpipe emissions. And so what's happened, interestingly, the total number of EVs in the U.S. has grown, but the total revenue has not changed in 3 years because the prices have come down equal to the volume going up. So the EV market has not been growing for 3 years if you look at total revenue. Everyone looks at unit volume. Don't look at that. Look at the price and the volume. And I think we now have a good strategy going forward. A lot of our competitors are just investing for the first time. And good luck if you're selling an $80,000 SUV electric vehicle. We've invested a lot in hybrid. We are really successful with our truck hybrids. The best-selling vehicle in the U.S. for 47 years has been the F-150. 25% of those customers now buy hybrid.
That was Ford's Jim Farley speaking to Bloomberg's Matt Miller. And coming up on the programme, Lauren Seidel-Baker will join us on The Morning, mounting inflation risks for central bankers. This is Bloomberg.
as a continent of contrast, the region is a nexus of rich cultural traditions and a vibrant hub of trailblazing innovation and modernity. How will it push the limits of technology even further?
Going to space should become as easy as, taking a flight.
If NASA is designing a lander, their approach is they're designing a Formula One car. So we take, say, a Jeep approach. Minso, give us a sense of how you translate Korean architecture for the rest of the world.
We call this madang. In general terms, it's where we can be ourselves, where we belong.
There is an old saying in Korea that says, "Call me blue, hwai 불치." It means simple but not humble. So it has a tremendous impact on Korean architecture.
People tend to think the robot AI taking the job from them. We want to use the robot as a basic asset, meaning people have an income through the robot.
From space tech in India to robotics in Japan, Asia is driving the future, reshaping industries, societies, and the way we live. Join me as I take you through the bold innovations. Discover Asia's next-gen technologies on Momentum.
Didn't really think I had a problem.
I would isolate, self-medicate.
Like 48.5 million Americans, they didn't choose addiction. Go to shatterproof.org/findtreatment. Watch the film No More Secrets and find out how you can get help. That's shatterproof.org/findtreatment.
The multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, Mondays on Bloomberg.
Welcome to Bloomberg Markets. If you're just joining us, I'm Lizzie Burden, joining you from London because it is the Juneteenth holiday stateside. So we've got no trading in cash, treasuries or stocks, but plenty of action when it comes to the European equity picture. It is a risk-off mood because of the expectation, the anticipation that the US may get directly involved in the Iran-Israel conflict. You've got the stock 600 weaker, 0.5%, but particular underperformance for the CAC 40 in Paris. Energy, one of the very few sectors eking out gains today. And if we flip to the cross-asset picture, you can see why. We've got oil stronger on the back of the Middle East tensions, up more than 2% now for Brent at $78 a barrel. We're looking at gold currently weaker 0.2% at $3,362 a troy ounce. And in terms of the pound and gilts, not a lot of movement off the back of that Bank of England decision because, of course, they did hold rates as expected. And that's what I take you to next, because we've had lots of central bank action this week. The risk of inflation top of mind for central bankers worldwide. And we can hear now from the Fed Reserve Chair Jay Powell after he held rates steady yesterday.
If you look at the forecast, you will see that people do generally expect inflation to move up and then to come back down. But we can't just assume that. Of course, we don't know that. And, our job is to make sure, one of our jobs is to make sure that a one-time increase in inflation doesn't turn into an inflation problem. And that, again, that will depend on the size of the effects, how long it takes for them to come in, and ultimately on keeping inflation expectations anchored.
Well, joining me now for analysis is Bloomberg's Director of Global Economics, Jamie Rush. That's got a ring to it, Jamie. I haven't seen you since you've been that. Let's talk with the Fed then. Let's start there. It seems like the division switched from the BOE to the Federal Reserve. We always talk about where the groupthink is, but it's not at the Fed if you look at the dot plot. Does this decision kind of show that the Fed isn't data dependent when you listen to that sort of commentary from Jay Powell?
Well, I think it's quite hard to be data dependent when you know that there's something coming down the pipe, right? So you know that July there's going to be a change again. The inflation outlook is going to change as we know more about tariffs. You know that there's going to be a change as developments unfold in the Middle East. So you can't really be data dependent if you know that these things are coming. And in the US's case, I mean, both of these things are not good for the Fed. Like if the worst things happen, so if oil price goes up a lot, if the tariffs go up a lot, they're both inflationary. But unlike in other central banks, they don't have the same sort of economic effects. So oil, for example, US being a big oil producer, When oil prices go up, it doesn't hit the economy. So it's pretty clear that the Fed would find it harder to ease. But for every other central bank, it's, of course, very different.
Well, it's interesting that you make that distinction, because for the Bank of England, of course, we are very reliant on imports. Would you say at the moment, and they've just held as expected, but maybe a dovish hold, that the Bank of England is more focused on domestic or international pressures?
I mean, I think they're more focused on domestic right now. When you hear the tone of policymakers at the Bank of England, they actually downplay the sort of consequences of the trade war for Britain, and actually they are relatively small. And so they are focused on the domestic outlook. They're still worried about inflation being too high, services inflation, wages being too strong, but they see that the labour market is starting to loosen off, and rate cuts are going to come as long as that continues.
And the surprise actually this week has come from the Norges Bank. So you've seen this quarter-point cut. How many more of them do you expect we're going to get from the Norges Bank this year?
Well, again, this is one that's tied up in oil, right? So, they're a huge oil producer, or big oil producer relative to the size of the economy. Oil prices go up, it supports growth, it supports incomes in that economy. So the dynamics aren't clear. And so we'll have to see. If oil prices go up a lot, then that will clearly change the outlook for the Norges Bank.
And when we look at the SNB as well, they cut to zero, but that was expected. Do you see them going actually into negative territory?
Yeah, I think we do. So for the SNB, remember that they've got no inflation at all, literally nothing. It's like 0.2 or something.
What a problem to have.
Yeah, what a problem. Imagine that. And why it's happening is because everyone's worried about the global economy, and there are safe haven flows into the Swiss franc, pushing down inflation further. What can they do about it? Well, they can't really intervene in markets like they have in the past. They know that they're sort of on the eye of Sauron is focused on them.
List.
Because you don't want to get in trouble with Trump for currency manipulation. So what are your options? Well, it has to be rate cuts. So I think that kind of favours the idea that they'll have to go back into negative territory. But the further you go into negative territory, the bigger the risk to financial stability. So they're quite constrained, actually, more than other central banks.
Okay, Jamie Rush, we thank you for that analysis, and let's continue the conversation. We can speak to ITR economist Lauren Seidel-Baker. Lauren, I want to start with a question that I just asked to Jamie. When you look at the Federal Reserve now, when you're hearing from them, are they really data dependent at this point?
Data dependent seems like the new way to say wait and see. As you mentioned, we do know there are inflationary pressures coming down the pipeline at the Fed. Tariffs are a big one. This potential conflict escalating, that is another big inflation risk. But here in the United States, we have more than just that event risk. We have very fundamental liquidity, which has been on the uprise. We have higher labor costs that are still rising in our tight labor market. Commodity prices now starting to catch up. It had been the service side of our economy seeing the inflation. Now the good side is getting back in the mix as well. So I think the Fed knows this. They really do see these inflationary pressures building, but not there quite yet. And so it is a risk, right, to cut too soon. That's why I think we got the tone that we did out of yesterday's messaging. They just want to know exactly where things will shake out, especially with regard to tariffs, which is, I think, the greater event risk on our horizon versus these other more fundamental factors that have been in place for several years now, but are just starting to hit pricing.
But when do you think that the tariff impact is going to be felt? Is the US consumer strong enough to take higher prices if that's what happens?
The tariff impact, it's going to be delayed, and it's going to be very gradual. So we saw a surge of imports just before those tariffs were announced and implemented. So a lot of our businesses do have that lower cost inventory still to work through. Retailers, for example, the goods they're selling today very likely entered our ports before tariffs went into effect. Now, we'll probably see importers and retailers absorbing some of that pricing, at least in the near term, at least for a while. They don't want to shock our consumers with higher prices. So at the end of the day, a very graduated rise in prices. Couple that against, as I just mentioned, this tight labor market. We still have upside wage pressure, and at least for the moment, our wage growth is outpacing overall consumer price inflation. So that still puts our consumer in a better spot. Even if sentiment has turned down, they see the higher prices on store shelves. They're starting to be a little bit more sensitive to the sticker price, but our median consumer, they can absolutely withstand that price increase today.
It's interesting as well that if you look at what rates traders are doing, they're anticipating a dovish tilt in May 2026, which is, of course, when Chair Powell could he'll see his term end. He could be departing and replaced by maybe a Trump puppet at the top of the Fed. Is it actually the case that Powell's a lame duck from here on out?
Oh, I don't think he's a lame duck at all. Now, I do think the individual chairship of the Fed, we pay a little bit too much attention to that figurehead. He's just one member of this voting committee. And even after his term as chair ends in 2026, he will maintain his voting seat. So this is not a line in the sand in terms of time. We don't have a full board coming off and being replaced. Some of the names that have been floated as a replacement to Chair Powell, I wouldn't call them puppets. They're very skilled academics and policymakers. So I think there is sanity prevailing in this case. And again, even past that May date, Powell will maintain his seat, and most of the other voting members will as well. So there's going to be some amount of continuity. It's not just the chair that is unilaterally writing policy.
Okay, and the other thing, of course, Lauren, that the Fed is considering at the moment is whether to reduce a key capital buffer by up to 1.5 percentage points for the biggest lenders, of course, because of the concerns of the constraints on Treasuries trading. You've got to ask whether anyone's going to want to buy them anyway. But Treasury Secretary Scott Bessent saying that this could knock tens of basis points off the Treasury yield. I mean, is that realistic, what Bessent is touting there?
We'll see exactly how this is implemented. I would say it's a risk to stability. We might get a little bit of, concern of that increased volatility. It seems like today uncertainty is so high. So many businesses are just in wait and see mode, much like the Fed. We can call it data dependent. We can call it what you will. But everyone wants to know exactly how things will shake out. We're getting that hold the cards close to the vest move for at least the near term. But longer term, our leading indicators really are turning up. There is a good reason to be encouraged about growth, maybe a more steady, kind of lower, more sustainable pace of growth this cycle than we've seen in recent cycles, but growth nonetheless. I don't see the U.S. economy falling off a cliff.
Appreciate the optimism. ITR economist Lauren Seidel-Baker, lovely to have you on the programme. Coming up, we're going to go to the luxury sector. Luxury brands trying a new tactic to lure in customers as the industry faces a slowdown. We'll dive into that next. This is Bloomberg.
Let's cut right to it. This is Bloomberg's new show, Primer. Technology is $1 trillion game. Won, lost, won again, just by backing the right science at precisely the right moment.
My life has been focused on how can you elicit intelligence from brain cells in a dish.
This is the fundamental building block of our fusion technology.
We're doing things that have never been done by anybody, ever.
Everyone is selling the future. If you want to understand what's coming, you'll want to watch Primer, because details matter.
Lasers on?
So do lasers.
There we go.
Oh, and it's on all these lovely channels. Hope you're jotting this down.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Jennifer Zabasaja in Cape Town, South Africa, and this is Bloomberg.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Today's CFOs are reshaping the C-suite. Bloomberg's Chief Future Officer shines a spotlight on these dynamic leaders. CFO Pascal Desroches has played a key role in restructuring AT&T, reducing debt and refocusing the business. Now his steady approach has the company primed for growth.
I'm a believer you try to make progress on big problems every day, and ultimately you'll look back and say, hey, you've come a long way.
Watch Chief Future Officer Wednesday on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jumana Versace in Doha, Qatar, and this is Bloomberg.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question. Great question. I so appreciate that question.
You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
Tech is integrated into every aspect of our lives, from finance to defense, AI to entertainment, and from the road to the stars. Bloomberg brings you the latest stories from the people and companies pushing the tech sector to new frontiers and the politics that shape global tech markets. I'm Tom McKenzie in London. Watch the new Bloomberg Tech Europe. Premieres Friday, only on Bloomberg Television.
Welcome to Bloomberg Markets. It's 3:43 p.m. here in London, and we're going to turn to the luxury sector now because a new Bain report finds that luxury brands are trying to counter the slowing demand by offering smaller and more affordable accessories. The question is, will it work? Bloomberg's Jennifer Creary's been looking into this for us. Jennifer, let me ask you that question. We've had so much doom and gloom, whether it's because of tariffs or because of weak Chinese consumer demand. Is this strategy going to be enough to turn the tide?
Yeah, I mean, yeah, it's no secret that the luxury industry has had a tough time in recent years. But it just goes to show that, brands are trying to find ways to kind of prop up their profits. So, what's really interesting about this Bain report that it shows us that, they're trying to reinforce their ranges of kind of smaller, more affordable items. So think, eyewear, luxury perfume, beauty. And I think that tells us two things. So the first being is that, when there's a lot of uncertainty, economic conditions are tough, consumers generally tend to trade down. We buy luxury products when we're feeling good, when we're feeling confident, and this kind of just goes to show that accessories is a good way to kind of to capture some of those consumers. Yeah. And I think secondly, it goes to show that with these brands, they've gotten the message that they can't keep hiking up prices that they did over the past few years. So according to this Bain report, it shows that from 2022 to 2024, on average, the luxury brands rose prices by 12% per year. And so they can't keep doing that. And so hopefully with accessories, they can get some of that, momentum in stores, and they can draw in more of those consumers.
So maybe try and get people to trade down within the brand rather than going down the road to Zara instead of the likes of Loewe. They've also, of course, been instituting bigger changes. You've got Jonathan Anderson going from Loewe to Dior. You've got Kering poaching Renault's CEO. I just wonder how long those sorts of changes are going to take up to show up in the share price. Like for our audience, how long will those changes take to implement impact investors?
Yeah, so for example, you give the example of Luca De Meo, the Renault CEO, joining Kering, and if the market reaction is anything to go by, investors are pretty happy with this. So hopefully that will translate over the long term. But these turnarounds take time, and so definitely investors will be taking kind of a long-term view on this.
Yeah, and whether he can turn around Gucci is a whole other story. Yeah. But for now, you've got Bernard Arnault really frustrated, no longer the world's richest man, slipping down the Bloomberg Billionaires Index. I reach for my violin. Why so frustrated?
Yeah, I mean, well, LVMH, this is one of the kind of toughest periods that it's had to go through. Bernard Arnault, his personal wealth has suffered as a result. He's no longer the world's richest man, but of course, he's still, Europe's richest man, so that's something to go by. Exactly. But, for LVMH, it's got so many brands, and it's across so many different kind of sectors. So, it's got, perfume, it's got kind of luxury fashion, leather goods, it's got, drinks. So it's going to be exposed to more of that volatility, and the key question for them is, how are they going to ride that out? And, one of the ways that they're doing that is by kind of looking at some of those assets and kind of offloading the ones that are, underperforming, Stella McCartney, for example. And so, there is a path forward, but of course, a very frustrating time for the company.
Yeah, question marks over the likes of Sephora from here on out. When you've got all those brands, I suppose they compete with each other in the bad times. Jennifer Creary, thank you so much for your analysis. Really great reporting. And that is the subject of our big take, so do check it out on the terminal, The Fortunes of Bernard Arnault. But coming up on the programme, Roger Penske, who is Penske Corporation chairman, of course, says that car manufacturers are heading to Le Mans as auto racing is finding a new level of popularity. We'll hear from him next. This is Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Our global headquarters in New York, I'm Danny Berger. Welcome to Bloomberg Brief. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday only on Bloomberg. Context changes everything.
In case you missed it on Bloomberg Surveillance.
They say you're in your right if you use Section 122. Why didn't you guys do that from the beginning?
Well, Section 122 only gives you 150 days.
Is Section 122, if you use this
that,
now for 150 days, would it be a bridge to 301 or a bridge to 232? What are you thinking more long term?
You can be the strategist on that.
So just got to tell you one thing. You're not allowed to hire Anne-Marie. She's with us, all right? Don't miss Bloomberg Surveillance live every weekday. Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech. This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
Car lovers, this next one's for you. Bloomberg's Matt Miller and Hannah Elliott have been trackside at the 24 Hours of Le Mans, a grueling endurance race that's attracted top-level executives and business titans, of course, as a destination for networking as well as deal-making. And they sat down with Roger Penske, Penske Corporation chairman. Take a listen.
In the high-performance class this year, the hypercar, there's 8 manufacturers that will be competing. And when they can get on the world stage, they compete every day in every showroom across the world, don't they? But to come here and put your brand on the line, it's amazing. And I think the way Le Mans has grown, and think about it, I raced here 6 decades ago. And I'll tell you a funny story. We were on the pole position that year. You know why? We had the car with the biggest motor. So things have changed, but it's an amazing place, iconic. The number of people that come here and what I've been seeing here, obviously, so many young people. I mean, people want to come and camp and see the excitement. And, with Ferrari here now and Porsche here, this has been a big sea change when they came and the new rule package that was put together. by the ACO has made a huge difference, and I understand that the next couple of years there might be 3 or 4 or 5 more manufacturers. And this is a fair, equal playing field. Nothing to do with your stock price. It's a fair playing field in order to go forward and have a race and see who's the best.
Roger, I'm really curious. You mentioned that we're seeing some real momentum with the race and with the series. What do you credit that to? Is there one thing or one time that has really sort of pushed it up?
Well, I think it's technology. And also the fact that you can come to a race, you can bring your camper. If you go to an NFL game, right, you can't bring your camper. Maybe you can, but you can stay here for days. And the length of the events, we got here on Tuesday, and we had practice, we had qualifying, and then we have the race. So it's an event. And I think that the access to the drivers and people can walk through the pit area. I can't get in the locker room. You guys might be able to, but I can't get in the locker room at Giant Stadium, can I? But to me, I think it's just accessibility that's made such a difference. Then the interest in cars and the excitement about cars today, and all these OEMs, are so forward and wanting to have performance. They got to have quality and reliability, and this is a place to showcase it.
I always ask the automaker CEOs, what's the return on investment of racing? But I think no one's in a better position to answer that than you are. How can you make racing, which is a sport, something you do for passion, for love, also pay off for profit?
Well, I really got to go back to my early days in racing. And we have a company today with 74,000 people, $40 billion in revenues. And I can tell you the brand value that we got from racing every day. And more importantly, it's the partnerships that we made as a race team with the different OEMs. We've had partnerships with all the OEMs, throughout the world, really, when I think about it. But that connection, for us, it was massive from the standpoint of what we're able to do on the track. And, we have almost 400 dealerships under PAG and New York Stock Exchange Company. And we're with all the brands. And I can tell you that this relationship on the track and in the showroom on Monday, it really works for us. It's been key to build our brand, which I couldn't have done any other way.
Well, that was Roger Penske, Penske Corporation Chairman, along with Bloomberg's Matt Miller and Hannah Elliott. Let's just check in on these markets as we head towards the European close. You've got the Stock 600 weaker 0.6%. The CAC 40 down more than 1%. The DAX in Frankfurt down 0.9%, and the FTSE 100 weaker 0.4%. A very much risk-off mood as we wait whether the US is going to get directly involved in the Iran-Israel conflict. You've got US futures pointing lower as well. Of course, it is a Juneteenth holiday, and so we have no cash trading in US stocks and treasuries as things stand, but it's a bleak picture for when Wall Street does eventually reopen. If you look at the cross-asset picture, we have oil stronger, as you might expect, given the Middle East tensions. Brent up 2.1% now at $78 a barrel, though it must be said, still pretty range-bound. But as we look elsewhere at the gold picture, weaker actually by 0.1%, and we've just had that Bank of England decision earlier this afternoon, a hold as expected, and therefore we are pretty steady when it comes to cable and gilts as well. We are monitoring all of this as we head towards the European close. We await more updates on the Middle East situation, but in the meantime, we're going to take you to the European EV market. It's being bombarded by the Chinese powerhouse BYD. So coming up next on the programme, we're going to discuss the automaker's massive investments into the block. A little change from the very heavy news that we are getting out of the Middle East. Stay with us. This is Bloomberg.
I'm David Weston. Join me for the next generation of Wall Street Week. This week, Vlad Tenev of Robinhood takes us into the wild world of mathematical superintelligence. We go to Saudi Arabia for the story of Aramco's plan to help wean the kingdom off of oil.
We think of ourselves as a technology company delivering energy. We are very pragmatic here in the kingdom.
And Larry Summers dissects the Fed's latest decision. Watch the all-new Wall Street Week. More than what you need to know, it's what you need to think.
have to see over the next 3, 6, 9 months how the tariff discussions play out and what does it mean.
I do factor in some effects of tariffs now on inflation, on prices.
I like the idea of the 10% tariff across the board.
I've spent my entire career focused on fiscal discipline. I don't think these people have the foggiest notion what they're doing. And I think DOGE is doing tremendous damage to government.
Elon Musk is probably the inventor of our age, but who understands that we're in the midst of the most profound convergence among technologies.
When we are facing a once-in-a-generation technological disruption,
we cannot close this retirement gap without private-public partnership. We have to have good policy.
Do you think, Dawn, that the market is correct to be, as of now, pricing in 3 rate cuts in 2025?
I would take the other side of that bet.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onen, only on Bloomberg.
Welcome to Bloomberg Markets. I'm Lizzie Burden in London. It's just coming up to 4 p.m. here, and it is Juneteenth, a holiday stateside, so we've got no cash trading in US stocks or treasuries, but we've got plenty of action for you when it comes to the European equity picture. It's a very much risk-off session here as we await potential involvement of the US in the Iran-Israel conflict. We wait to hear from Donald Trump what his next steps are. You've got particular underperformance from the CAC 40 in Paris, down more than 1%, but the stock 600 more broadly down 0.6%. One of the very few sectors that are managing to eke out gains today is energy. It's up 0.8%, top of the basket, whereas 17 are in negative territory. But this is because, of course, we've got oil higher. If we flip the board over, Brent at $78 a barrel, now up 2.3% on these Middle East tensions. We have gold actually weaker at 0.1% at $3,364 a troy ounce. And, of course, we have to look at the UK assets because we had that Bank of England decision earlier, a hold as expected, and therefore we have the pound pretty steady at $1.34 and the 10-year gilt yield at 4.52%. As I say, that top story in London really is the Bank of England holding interest rates steady, but traders anticipating more cuts in the year after a dovish vote split. The BOE Deputy Governor for Monetary Policy, Claire Lombardelli, was speaking after the decision.
I mean, we'll decide interest rates in August, in 6 weeks' time. I'm not going to predict what it is we're going to do. We have said that we expect interest rates to be on a gradually downward path in general, but of course we need to be careful and think about all of the factors playing in. I mean, inflation is still too high, and that is painful for people.
So a cautious tone from Claire Lombardelli there. The hold expected. Let's get some analysis of what else was happening behind the scenes, though. Bloomberg's Phil Aldrich joins me now. Phil, I feel like what was actually really interesting here was the emphasis on the softening of the labour market. Surely that's bad news for the Chancellor, Rachel Reeves.
Yeah, I mean, obviously, one of the things you don't want to see as Chancellor is people getting laid off. But, I mean, it is actually in the agents' report, which accompanied the actual decision today, they have this separate survey network of agents around the country. It showed that there is some concern about both people getting smaller pay cuts, pay rises, people getting laid off. Companies are outsourcing more work overseas. And these decisions that are being taken by companies are because of the increase in costs that they're facing as a result result of both the payroll tax from October's budget last year, the increase in the national living wage of 6.7%, and also there's this sort of recycling levy as well, which came into effect. It's a new regulation which came into effect in all these things came into effect in April. So these are additional costs on businesses, and they're having to mitigate the hit. So they're taking these measures.
But it's interesting that all of those things are domestic pressures, like with the unforced errors, you might say, from the Chancellor in terms of the tax impact on the labour market. What's going to happen when you have the tariff impact?
Yeah, well, I mean, the Bank of England is definitely saying that the bigger issues are the domestic factors. They're actually less worried about the trade impact, the tariff impact, than they were in May. So we've got a better deal with the US. The China-US position has also they're beginning to come together. So there's been some progress in talks there. So the position back in the last update last month was the bank was a lot more worried than it is now, and so the growth they've upgraded growth despite a very weak first month of the second quarter. So April we had a 0.3% reduction in GDP. They're actually now, the Bank of England has raised its forecast, which was previously 0.1% to 0.25% for the quarter, which is really a reflection of those easing trade tensions in their opinion relative to before. But they do stress this is the overall outlook for the UK as a result of the trade stuff is weak. And obviously, when you put the jobs tax on top of that, which is it doesn't help. So they've generally say that the underlying sort of growth rate of the economy is pretty poor at the moment, around 0.1%.
And what are they saying about the geopolitical risk? Because of course we keep an eye on what's happening between Israel and Iran. Is there any way that could stand in the way of an August cut?
They're not being specific at all about that. They're talking about being vigilant. They're talking about uncertainty in the geopolitical environment. They're obviously being very sympathetic to the situation for the people on the ground in the area, but they are not drawing conclusions at the moment from what is happening. Obviously, it's very hard to because it's evolving as we speak.
Yeah, we just don't know what Donald Trump's next move is going to be. Phil Aldrich, we thank you all across that Bank of England decision for us throughout the day. Now, a handful of US federal agencies have begun preparing to strike Iran. Bloomberg's Ros Matheson joins us now with the very latest. Ros, when we look at the situation that's developing in the Middle East, I have to wonder, is it a matter of when, not whether, the US is going to get involved?
Well, certainly that's a concern, as you say, in the market. You continue to see the reaction in oil, but nothing seems to be a given, even in this very delicate environment. The US president himself said yesterday, I may do this, I may not. No one knows what I'm going to do. So it sounds like he's not made a final decision here. Obviously, he's consulting his security team about this and the options, because he'd be weighing the pros and cons of doing this. Does he take the calculation that Israel has weakened Iran, and this is an opportunity to really end their nuclear ambitions once and for all? Or do you move even towards an environment where you're trying to create the conditions for regime change in Iran? But again, what does that do? Does Iran then come at US military assets in the region? Are you setting off a broader conflict as a result? Are you destabilizing already very fragile part of the world at a time that Donald Trump is really craving stability? He wants trade, business, investment flowing. He made that very clear in his recent trip to the Middle East. So a whole lot of things probably going on there for Donald Trump and his advisors, and a push-pull that we're seeing within his administration. Some advocating for action against Iran, some saying don't pull the US into yet another conflict around the world. So we really don't know. And by telegraphing some of this now, we're hearing talk that maybe there could be strikes as soon as the weekend. Is that still giving that window of maybe 48 hours for diplomacy to have an opportunity here, for signals to be sent to Iran, to Israel? Really, at this point, it would probably have to be Iran that would climb down some kind of way out. Iran is saying if the US does target us directly, we will in turn target US military assets potentially in the region. So that's a warning from Iran about retaliation. The rhetoric from Donald Trump, you can see a sense of frustration there. It seems as though the actions by Israel perhaps were not his choice, for Israel to attack Iran. Initially, he seemed quite cautious about that. He was hoping to get a deal still on Iran's nuclear program, but he's grown hardened in his language in recent days, much more endorsing what Israel is doing. And again, perhaps a sense that this is a moment when Iran can be very weakened, and therefore you can enact change in Iran, particularly again around defanging their nuclear program once and for all. And is this the moment to do it? Because otherwise, do you get to a point where Iran goes away and over the years can build that nuclear capacity? And that's the concern for Israel and others in the region. So again, a lot of risk here either way in any course of action. Do you try diplomacy? Iran moves forward with a nuclear weapon at some point. Do you hit it hard and create massive instability potentially in the region? But perhaps the rhetoric again from Donald Trump, we may come for you, we may do this, is all about trying to push Iran to the table to cede some ground here so that everyone can de-escalate.
Okay, Bloomberg's Rosalind Matheson, we thank you so much for that update on the latest in the Middle East. So a lot of headlines for investors to digest. Let's get analysis now with Jeffrey Yu, BNY Senior Market Strategist, of how they should be pricing this in the markets. Jeff, how are you thinking about the geopolitical risk and where you would see significant moves beyond oil and gold, the usual places?
Well, the biggest shift, I think, is the change in correlations. If we go back a few weeks, people questioning the dollar, just moving away from the dollar, even in a safety environment. But yesterday, looking at our flow data, is actually the biggest day in foreign exchange, for example, this year. Right? And two things stand out. One, the dollar was net bought, so that safety element was in place. But secondly, to your point about safeties, our clients are not adding to safeties, say in commodities, in energy, in places like this. Commodity FX, for example, if you fear supply disruptions, what happened in 2022, 2023, these currencies, they actually were the worst performing group. So people are going to these havens, and I think apart from the dollar, Swiss franc, yen, gold maybe, those will be where the flows will continue to concentrate.
Well, yeah, on the Swissy, the SNB cut rates, of course, by a quarter point to 0. They're trying to deter investors from pushing up the franc anymore. Isn't it the reality that the Swissy is more of a financial asset than a currency? In the way that you would think that gold isn't really a commodity that's used for jewellery. And actually, as you say, it's driven more by geopolitics than by rates at this point.
So I think that right now the flows certainly point in that direction. Looking at their decision today, they sort of softly referred to the broader risks in place. I felt a little hesitancy on the part of SNB President Schlegel in saying he emphasised the negative aspects of negative rates, for example. So there wasn't a sense that negative rates were a done deal. But having said that, if you look at the technical details over that threshold, banks starting from tomorrow will have to pay the SNB for sight deposits above that threshold, right?
So
it will happen. But also, I think that for those with franc positions, when we go into negative territory, it doesn't have to be symmetric insofar as it doesn't have to be 25 basis point moves as well. 5, 10, 15, I think all of this should be on the table. But I think the market does agree that heading into September, we will have outright negative benchmark rates in Switzerland.
So you do think that they're going to inch further into negative territory, right, even by those smaller increments?
Yes, right, because if you look at the inflation forecast right now, the conditional inflation forecast, if they don't change, throughout the forecast horizon over 3 years, inflation doesn't even get back to 1%. It does rise a bit. I think that's what's given them the confidence. It doesn't go deeply into negative, the latest forecast, but they can't take any chances.
Were you surprised they didn't go for the half point today?
I wasn't really that surprised. It really hadn't been choreographed. It really hasn't been telegraphed them per se, and I do think that they have space. But also, if we compare it with, say, 2011, 2012, when they implemented the floor, franc in real terms is actually not that strong yet, mostly because inflation differentials are quite wide. So as long as there's, say, a 2 percentage point, 3 percentage point gap between Swiss inflation, US Eurozone inflation, I think they can just about get away with it.
Well, speaking about not telegraphing things, it's the Norges Bank that was the real surprise, right? How many more cuts do you think you'll get from them this year?
One, maybe. To be frank, I was sceptical they could even cut at all throughout the cycle, really, because the data has been firm. We know they have the resources to push things forward. The recent government agreement, they're not going to spend more, from the oil fund. That's fine. But it felt like today was that we probably need to cut anyway. Let's just get it over with. But they also improved their inflation forecast further down the forecast horizon. So it feels like they don't need to do too much. This is precautionary, and I think if they can just get away with 1, 2 at most, then they'll just leave it there.
If we can continue our tour of the world's central banks, let's think about the BOJ. Of course, their decision earlier in the week. How much more upside is there for the yen, given the caution we're hearing from Governor Ueda?
So short-term, medium-term, we still think the yen will strengthen, and actually our clients, our data shows that they are holding just moderate long yen positions. Right now, they're very long Norway, by the way, so telling you how they were positioned ahead of the meeting. Yes, they did pull back a bit in terms of their tapering process upon purchases. I think that's more targeting the JGB market, making sure that volatility doesn't go towards. There's quite bare steepening trends all across Asia right now. They have to manage this, but the broader theme is in place. They will normalize, they will hike rates and allow the yen to strengthen. It's about less Japanese funds going overseas rather than people buying yen. I think that dynamic will stay in place.
Okay, really interesting. Of course, we had that strong Japanese auction result earlier in the day. Meanwhile, let's also now turn to the Fed.
Yep.
If we're doing our round the world tour, is it a surprise that the dollar continues to weaken to you when you've got the Fed still on hold, or do we just read that it's just less tied to rates at this point?
So I think the market's still finding its footing with regard to dynamics in terms of dollar. What is going to be the crucial driver for the dollar right now? What's the market's base case for the geopolitics? And once we move past the geopolitics, we're approaching the end date, the expiration of the suspension for Liberation Day tariffs. That will come into fray as well. And then the prior drivers on the fiscal side, for example, maybe they're thinking a bit more about that. So we still think that hedging dollar risk that will rise on a structural basis. But looking at current valuations, euro dollar, for example, I'm very reluctant to add to euro dollar longs at these levels.
Is that because you agree with our reporting? We hear from Brussels that actually they see July 9th as a best case scenario to get a trade deal between the US and the EU. Do you think the market is kind of overly optimistic about these trade deals coming in on time?
So I think the market is, so I'll weave that into the view that the market's pricing Europe for perfection right now.
Right, okay.
So that also implies that even if, let's just say, there's some bumps in the road in terms of tariffs, as Madame Lagarde said in her press conference, 17% of non-Eurozone, non-EU exports go to the US, it doesn't matter as much, right? I think that may be over-optimistic, right? Especially with euro-dollar at these levels. You don't have that kind of a tailwind for exports. They still need to export at the end of the day. So there might be a bit more disinflation than they previously expected. So I still wouldn't rule out them shifting back towards a bit more of a dovish stance. They're heading towards the end. But I think current valuations will be restrictive. And let's just say the ECB is not exactly aligned on this. So there's some members still warning that inflation risk to the downside is still quite strong.
Well, indeed, that most severe scenario in their scenarios doesn't even account for 50% tariffs. Great to have you. Jeffrey Yu of BNY. Lovely to have you around the table. Well, coming up on the programme, Chinese automaker BYD passes Tesla in European EV sales. We're going to look at why and look at their move into the region next. This is Bloomberg. Joins us now to tell us why. Why so strong in Europe, Jamie? Why are they the strongest in the UK, indeed?
Well, BYD's really been pushing into Europe as the European car makers have been struggling recently. Budgets have been stretched among consumers, and also this push towards electric has really stretched them on cost. So they've been looking at the higher end of things where sales are struggling, whereas BYD has been coming in the last couple of years at the cheaper end, and that's really forced through and driving through sales. In the UK now, we're talking about 2%, which is small market share, but the growth is enormous. It's hundreds of percentage points every month, year on year, that they're increasing, and it's something like 12,000 vehicles sold in the first 4 months of this year versus something like 1,000 in the same period last year. So intense growth.
But is it all the Schadenfreude of the likes of VW, or is it something special that BYD is doing itself?
Well, they would always argue the tech is great, and to be fair, it is. It's great. You get the rotating screen, you get the reverse camera that you would pay more for in traditional vehicles like in Renault or VW. So yes, that is true, and at a cheaper price point as well, and that's the crucial thing. The key is, I guess, whether they can grow that to multiple sort of models at the upscale end as well.
What's the obstacle then to that domination?
Well, I guess the brand recognition is still low here, so they've got to really push that. The other thing is that people still like BMW, Mercedes,
German
VW.
whips,
You know, they really just trust these. Yeah, German whips, as you say. They like homegrown cars. You know, that's Europe, like the US. We like our homegrown car makers. So that's really what they'll still struggle against. And there's still local expertise, although they have been hiring a lot of people here to try and get over those local obstacles as well.
Okay, and when we look at the domestic car makers, who's kind of doing well then? Who's next in line?
I mean, I wouldn't say there's anyone really stand out. Renault's been doing pretty well, but they had Luca De Meo obviously in charge, and now he's leaving.
For Kering, yeah.
Well, exactly. So they've now got to think of how to keep that momentum going, because they're the ones who've really sort of nailed that smaller, cheaper electric car that's been coming out in the E-Tech. But we'll see. I mean, that might struggle now, and I mean, VW's got its own problems, of course, with the restructuring it's been going through. So there's no one really in a great place right now. But that's the challenge that BYD might face as they start to play catch up. That could put pressure on them in terms of sales in Europe, of course.
Do we have any idea who might replace Luca De Meo?
Not yet, no. I think it's early days at the moment, but they'll obviously be on the hunt already.
All right, we'll keep an eye out for the runners and riders. Bloomberg's Jamie Nimmo, we thank you. And for all things EVs and tech here in Europe, be sure to tune in to Bloomberg Tech Europe. It's our new programme. It's hosted by Tom Mackenzie, and it premieres tomorrow morning at 6:30 a.m. London time. You're not going to want to miss it. This is Bloomberg.
Earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
It's 100 years, 80 years, 100 years of dollar strength. So much so that important commodities, gold, oil, are denominated in dollars. I think undoing that will take a long, long time.
Didn't really think I had a problem.
I would isolate, self-medicate.
Like 48.5 million Americans, they didn't choose addiction. Go to shatterproof.org/find treatment. Watch the film No More Secrets and find out how you can get help. That's shatterproof.org/find treatment.
Welcome back to Bloomberg Markets. If you're just joining us, it's 4:23 p.m. here in London, and on to tech next, because TikTok's US deadline to divest or be banned gets a third extension from President Trump. The administration delaying the ban by another 90 days, allowing the social media app to keep operating in the US as it proceeds with negotiations. Project Liberty founder and longtime bidder for TikTok has been speaking to us, Frank McCourt Jr. He's been talking to us about the extension.
It's been a while, but, I've learned to be very patient, hang around the hoop. A lot of good things get done when that happens. And, my sense is, and this is not this is purely my opinion, but I think this is the last extension. I think 90 days, not 75 days is significant. And I think something gets done within the next 90 days or not.
But does it involve you? Have you been on the phone with the vice president? Have you been involved in the negotiations?
We were very much involved during the first extension, and less so during the second. Things have been relatively quiet, as a matter of fact. So I don't know if I should draw any inferences there, but it's been fairly quiet overall. Look, I still love our chances, Caroline, because look, the legislation is very, very clear on what is mandated. Our bid, as far as I know, is the only bid that actually qualifies, that actually meets the criteria in that legislation where we completely disentangle from the Chinese technology.
So Frank, I want to get really detailed on this, because on the other side of the table in this bidding process, there is a coalition of different individuals and technology companies whose proposal, as I understand it, is outside what's legislated for. In other words, some element of co-location of data and licensing the algorithm. Would you just explain how your bid is distinct from that?
Yeah, well, and I think you've hit the nail on the head. And what we're not looking to co-host the data or to use the Chinese algorithm. Project Liberty is about empowering individuals, not exploiting them. So we're not interested in scraping people's data, surveilling them, right, spying on them, scraping their data, aggregating it, and then micro-profiling people, and then using a black box algorithm to manipulate them. That's not what we're interested in. And that's why TikTok is so attractive to us, because we can not only solve the national security issue, but we can move the user base and the data onto this new, clean, made-in-America stack, which doesn't rely on Chinese technology, doesn't surveil on people, and as a matter of fact, empowers people to permission the use of their data and get paid for it. This is going to be the new internet. It's going to happen sooner or later.
Confluence between the long-term investor and what we're trying to do. We have an operating principle that's in our handbook, take the long view. When we went public, we put a timeline up on the screen for the whole company in an all-hands meeting. And that timeline went from founding to 100 years out. And the IPO was one dot in 1 year on that timeline. And we tried to orient the employees to, this is a wonderful event, this IPO, but it's a moment in time on a very long journey.
This is a company that you want to exist in 100 years.
We do.
Wall Street doesn't think in...
No, they think in like hours. Yeah. And what I've learned of Wall Street, and particularly Wall Street investors, when they say they are long-term investors, that means they'll keep your stock for like a month. There has been one instance where I did something that was just for short-term stock, and I felt so bad about it that I don't think I'll do it again.
What was that?
There was one quarter, a few quarters ago, we were not going to beat the quarter. We were going to probably just hit it. And so far, we beat every quarter. So we were all like, wait, what? Our perfect record. We're like a 4.0 student that is going to get a B for the first time. This is not good. And I decided that for a short period of time, at the end of a lesson in our app, we would show 2 ads instead of 1. Turns out that by itself was good enough to beat the quarter. But it's bad for the product. It's not good. After that, I'm never doing that again.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Get your fixed income fix. Watch Bloomberg Real Yield every Friday at 12 p.m. Eastern, right here on Bloomberg. Context changes everything.
Welcome back to Bloomberg Markets. If you're just joining us, we begin nearly at the close of European trading. It's 4:29 p.m. here in London. It's red across the screen for European equities. The Stock 600 weak at 0.8%. Particular underperformance for the CAC 40 in Paris, down 1.3% as things stand. But a bleak picture across the continent because of the risk-off mood, because of the anticipation that the US is going to get directly involved in the Middle East conflict. If you flip the board over to the cross-asset picture, you can see oil is higher 2.8% at $78 a barrel, hence why energy was one of the few sectors that managed to eke out gains in the European equity space today. You do have gold there trading at $3,367 a troy ounce, pretty steady, as has been the pound, and the 10-year gilt yield off the back of the Bank of England decision holding as it was expected to do. You've seen the dollar strengthening. It's currently up 0.2%. That after the Fed decision last night, but Chair Powell warning of meaningful inflation ahead. Just staying on the US, I want to bring you the latest that we've had from Donald Trump in terms of TikTok. He's just had on Truth Social the announcement that he's just signed an order extending the TikTok deadline for 90 days. TikTok closing deadline extended to September the 17th. So that just breaking across the terminal off the back of our conversation a few moments ago on the TikTok order. Well, let's turn back now, though, to the Middle East. The tensions escalating. This is what the markets are focused on today, and sources telling us here at Bloomberg that senior US officials are preparing for possibly striking Iran in the coming days. Let's get the latest now from Tyler Kendall. She joins us live from Washington. Tyler, it feels like there is a window of opportunity here for Donald Trump to A, take out a key threat, B, prove that Taco is wrong, and C, project strength at a time when trade deals are elusive. Is it a question now of when, not whether, the US is going to get involved in the Middle East?
Well, hey, Lizzie, to be sure, the White House at the moment says that it still has this defensive posture, but our reporting indicated, as you mentioned, some pretty incredible reporting from Bloomberg News. Sources familiar telling us that senior officials are preparing for a potential strike this weekend. Now, we could get some sort of update later on today. It is our understanding that at the moment, 11:30 a.m. Eastern, President Trump, according to his official schedule, is supposed to be convening his National Security Council as we speak inside the Situation Room. But up to this point, he really hasn't given any sort of firm commitment either way, that we have seen his rhetoric really escalate in favor of the Israeli operation in recent days. Asked yesterday directly whether or not the U.S. would get involved here, he said he may or he may not, and that he prefers to make these decisions 1 second, in his words, before he has to. He did acknowledge that he has been asked repeatedly, specifically about whether or not the U.S. would assist in an airstrike on the Fordow nuclear facility, and he says that he has not made that decision quite yet. Now, there does seem to be an opening for diplomatic de-escalation. Perhaps here, President Trump yesterday did suggest that the Iranians asked to come to the White House to negotiate. It is a claim that Iran does deny. But, Lizzie, we have to keep in mind here that our analysts at Bloomberg Economics say that Iran actually has the potential to escalate this in 3 major ways if this does not start to go towards their way. One would be attacking energy infrastructure in the region. The second would be, as you well know, closing or impairing shipping through the Strait of Hormuz. But the third would be targeting U.S. assets in the region. And our analysts here at Bloomberg say that if the U.S. does join the strike, then retaliation against U.S. interests would be highly likely. So no doubt one of the many, many factors here that the White House is weighing.
Okay, Bloomberg's Tyler Kendall, excellent reporting on the brink of what may be happening next in Capitol Hill. I want to turn now to one of the major players in this space. Shell, of course, one of the biggest traders of oil and natural gas, is being, it says, very careful with shipping in the Middle East due to this conflict between Iran and Israel. The CEO, Wael Sawan, spoke at the Japan Energy Summit and Exhibition in Tokyo earlier on this morning.
What is particularly challenging right now is some of the jamming that's happening on GPS devices and the like, which is a concern. The Straits of Hormuz is, at the end of the day, the artery through which the world's energy is flowing.
Well, for more on the energy industry and the energy industry and the volatility facing it right now, we're joined by a true expert, Amrita Sen, Energy Aspects Director of Research. Amrita, so good to have you with me on the programme. We thank you. Oil's been, I feel, pretty range-bound despite what's happened in the Middle East since Friday. If we get that direct US involvement that Tyler was warning about in the Iran-Israel conflict, what happens to the oil price?
Well, firstly, thanks for having me. Honestly, it's very complicated because the market is still looking at those Q4 balances and expecting these big bills and in 2026. And that's why, like you said, yes, we've gone up about $10 since these headlines started to emerge, but we really haven't seen what usually we would have thought would be kind of a reaction if Israel were to attack Iran, right? If the US gets involved, which we think is very likely, and you mentioned this as well, of course, there is a risk of Iranian retaliation. But at the same time, if Iran is trying to de-escalate, which we do understand in terms of, through other parties, then it will also be very cautious. Look, our view is, if any kind of a U.S. strike happens, this might actually mean that Iran just hunkers down, takes an even harder stance. And, it just might mean over the medium term, you actually get a much more fragmented Iran, and that would be actually quite bearish for oil production. The challenge is, it's what happens in the near term, right? Do we see Iran go for some of those kind of Straits of Hormuz type of closures or even other assets, or they realize the attacks on them will be even more given how degraded their military is? And I think that's the calculus the market's kind of trying to figure out right now.
Well, yeah, analyst after analyst was telling us that they're not going to close the Strait of Hormuz. They need to bring in imports of consumer goods. It's too difficult politically and logistically. But if we do look at that outside possibility, what does happen to the oil price, Amrita?
I mean, look, again, I would never say never. We do think it's very much their last resort because then they would be pretty much, the ire of the entire world would be against them. But like you said, in that possibility that they do that, over 20 million barrels per day of oil flows through the Straits. There's a little bit of slack in, some of the alternative pipelines and export terminals, but the bulk of the Middle Eastern exports will just be trapped. Any export that goes from the west to the east would have to go via the Cape. You are looking at the biggest disruption to trade flows we've had, right, in decades. And I think that just means, you skyrocket prices to pretty much, you can pick a number at that point, because if you're losing a quarter of global trade flows, that is extremely problematic for any Asian refinery, and you will not be able to get alternative barrels in time. And even if OPEC were to start increasing production, that's going to take time, but B, again, get stuck in the same region because it's coming from the same area.
Yeah, so to be clear, you just couldn't make up for the Iranian shortfall by having Saudi and the UAE ramp up production. Okay, really interesting, because others have said that maybe you could, and it seems very clear that actually there's an imbalance there. I also just want to ask about your read on China's position here, because we've heard earlier from them saying that they're not going to send weapons to Iran, but of course they import so much Iranian crude. What do you make of the Chinese stance in all of this?
So I'll come back to the second one in a second. So to clarify the question on the Saudi UAE, of course, they have the spare capacity to add barrels to the market if required in the event of a disruption to Iranian production. But if the straits get closed, quite a lot of that oil would get trapped, right? And that's why even if they increase production, not all of that could hit the market. I think that's the challenge. Great question on China. And I think, China is really the only buyer of Iranian oil. And I think that's one of their, the only lifeline for Iran when it comes to getting money for their revenue stream for their oil. China, we believe, will continue to buy this oil. There is no reason why they wouldn't. It's deeply discounted. Their kind of what we call teapot refineries, the smaller refineries do like it. Of course, on a political level, China doesn't want to get involved, but that doesn't mean they're going to stop buying this anytime soon, because for them, this is just about giving, their refineries a margin, and why stop?
Okay, Amrita, thank you so much for your insights at this crucial time. Amrita Sen of Energy Aspects, always lovely to see you. Well, we're looking at Brent currently up 2.5% at $78 a barrel, but as Amrita says, still pretty range-bound. We're going to turn our attention next to the luxury sector. The stakes very high for Bernard Arnault as LVMH shares have wiped out 221 billion euros in market value. That story coming up next. This is Bloomberg.
The multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, Mondays on Bloomberg. Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question.
Great question.
I so appreciate that question. You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
In case you missed it, on the opening trade.
What trade does is it meets a consumer demand. Consumer demand is not weakening. China supplies a little over 30% of what we eat, wear, and consume. That's unlikely to change anytime soon. I think that supply will find new homes potentially, but our reliance as a global economy on Chinese manufacturing is unlikely to change fundamentally anytime soon.
Don't miss the opening trade live every weekday.
AI should be for everybody, from leaders to the working on floor. And we can save 90% of time, 50% of workforce. AI is core in centers of change. And therefore, we invest heavily to AI. Actually, we started more than 10 years ago because we think the machine in the past helped our hand and legs. Now the machine helps us in brain.
Are you betting all your money in this right now?
When the OpenAI appeared, immediately I asked whole corporations study how will you bring generative AI to their job.
As Bloomberg's global financial correspondent, I get to meet the people shaping the way money flows around the world. And I want to bring you with me.
The capitalist system is the best system in the world. There isn't another one that works as well.
I love all these new Wall Streets. Y'all Street, Wall Street South.
Wall Street used to be a place. Now it's more of an idea. I hope you survived the day.
I did. It was a busy day.
Welcome to Bloomberg Markets. I want to turn to the luxury sector now. The LVMH CEO Bernard Arnault facing unprecedented hurdles, hurting his brand as well as his personal wealth. We can speak now to Bloomberg's Tara Patel, who joins us on this topic of today's big take. Tara, what's going so wrong for Bernard Arnault? Is it really just that he is seeing the damage done by tariffs and a weak Chinese demand and it's all coming home to roost?
Well, that's right. There aren't a lot of things that are going well for him right now. About a year ago, he was the world's richest person on the Bloomberg Billionaires Index. He was the first from outside North America, the first European, the first consumer tycoon to reach that #1 spot. He's down now to around 9 or 10. The shares of LVMH, which is the company he founded, have almost halved since their all-time high. And all of this because there's just been a big and deep and what could be a lasting slump after the pandemic, when we all know consumers went into overdrive. There was what was called revenge spending, and now LVMH and the other brands are facing a real downturn, a painful downturn in China, where consumers have just, they have less spending power, and there's also this sort of unwritten warning from the government about ostentatious displays of wealth that has also done damage, tamped down demand. And there's also, as you mentioned, a looming threat about tariffs and what the Trump administration will actually apply to luxury products and the kinds of things that Bernard Arnault sells.
But lest we get too gloomy, Tara, we've got this report now from Bain saying that actually the market isn't broken. There could be some hope. What can the luxury brands do to fight this tide?
Well, absolutely. I think no one has ever lost hope. The luxury industry will be around for a very long time, and there will be consumers who want to buy, expensive and hopefully well-made items. But as Bain points out, actually reminds us of a very long-standing concept in economics called the lipstick effect, which means that when times are tough, consumers go down market and they're still willing to spend on things like lipstick and perfume and smaller items. And if the luxury companies like Dior, like Louis Vuitton, which are in Bernard Arnault's stable of brands, can sell, these smaller items to consumers, it does mean all is not lost, but it certainly means that there will be a dent in his earnings compared to selling expensive gowns and handbags that can be worth upwards of $10,000.
Bloomberg's Tara Patel. One can only dream. We thank you for the latest on the luxury sector, and don't forget to check out that big take on the fortunes of Bernard Arnault. Well, coming up on the programme, the CEO of Aston Martin discusses the iconic brand's valuation and its future with James Bond. This is Bloomberg.
You missed it on Bloomberg Crypto.
How do you expect the asset to continue price increase at these levels that we've seen? And at what point do we see, winter coming again?
Winter's not coming back. We're past that phase. If Bitcoin's not going to zero, it's going to $1 million. And you have all the evidence you need to determine that, right? The President of the United States has determined he supports Bitcoin. The Cabinet supports Bitcoin. Scott Bessent supports Bitcoin. Paul Atkins has shown himself to be an enthusiastic believer of Bitcoin and digital assets. Ken Taz at CFTC feels the same way. The banks are going to custody Bitcoin. Bitcoin has gotten through its riskiest period. The accounting has been corrected. There's now only 450 Bitcoin a day available for sale by natural sellers.
Don't miss Bloomberg Crypto live Tuesdays.
Global
Bloomberg Brief, let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday only on Bloomberg. Context changes everything.
Addiction isn't a choice.
I would isolate, self-medicate, and fabricate to continue my use.
I didn't really think I had a problem.
Rachel and Pete are just 2 of 48.5 million Americans with substance use disorder. But 3 out of 4 people find recovery is possible with help. Go to shatterproof.org/findtreatment to watch the short film No More Secrets and find out how you can get help. That's shatterproof.org/findtreatment.
Welcome to Bloomberg Markets. Now, Bloomberg's Matt Miller and Hannah Elliott have been trackside at the 24 Hours of Le Mans, a grueling endurance race that's attracted top-level executives as a destination for networking and deal-making. They've been sitting down with Adrian Hallmark, the Aston Martin CEO.
As a company first, I think the first time we entered was 1928, which is quite a long time ago. We won it in 59. But more importantly, if you look at today, if I take Valkyrie, which was a hypercar for the road that we turned into a race car to go compete in the hypercar class. So it's a genuine connection, as it was in the origins of Le Mans, between a road car and a race car. Of course, we had to modify it quite a bit to make it work, but it's very exciting.
Talk a little bit about what the brand gets out of the race. Obviously, this is an iconic race. What do you get from it as a company?
I think if you compare it with our Formula One activity, the media coverage is a fraction of the pure global awareness that F1 gets. But if you look at people that are interested in high-performance vehicles, it's much more relevant. So it's a smaller audience, but it's almost self-selecting because most people buy supercars, hypercars, sports cars. They love endurance racing. Why? I've used the stats we all have before. Until Formula One got a lot bigger in terms of number of races per year, when it was only 16 races, that's exactly the same as a 24-hour race. So Le Mans is the same as a full season of Formula One back 10 years ago, and faster. So from a technical challenge point of view, a people challenge point of view, it's got to be the most demanding, incredible sport in motorsport.
How do you deal with the tariff situation as a manufacturer that cannot produce cars in America? I mean, the whole point of buying an Aston Martin is buying a British sports car. So what can you do?
So it's been a challenge for us, and I think the fact that it's been reduced down from what could have been quite significant to 10%, still 4 times what it was. But if you break that down, with a little bit of work between us, the dealers, and our customers, we can get through this. So clearly we're still waiting for this to be activated, and we're reassured that that will happen in days and weeks, not months. So it's been agreed but not implemented yet. But we took plans ahead of time in anticipation of this. So we stopped shipping cars for 2 months. We did them all early. We've hung off a little while. It should shake out. We're ready to go end of June, early July. Watch this space.
Okay, so talk to us a little bit about sustainability at Aston Martin. Where are you guys with sustainable powertrains, and what are you taking from the racing that we might see in the cars in the future?
So I think from a Le Mans point of view, it's probably the furthest away from our sustainability strategy. Why? We have no hybrid. We've gone for a naturally aspirated 12-cylinder engine, which is what makes the Valkyrie Le Mans car so incredible. There's nothing else on the track like it from that point of view. But if you go to the road cars, we've just launched Valhalla. It's a hypercar. It's 2.6 seconds to 62 miles per hour, over 1,000 horsepower, carbon fiber tub, hybrid system, front electric axle, high-power V8 engine, and a motor in the gearbox too. Combination, well over 1,000 horsepower. That's our first plug-in hybrid for the road as a regular car. Over the next 5 years, all of our cars will be hybridized. And then within the 10-year window, we'll have launched 1 or maybe 2 electric vehicles. But we certainly see for the next 10 years, until 2035, let's say, the majority of our business now will be electrified combustion engine systems that massively reduce real-world emissions, but also give, more importantly, way more horsepower than the current products. And that's the direction that we've taken.
When is the next James Bond moment going to be for the company? Obviously, you're so affiliated with James Bond. Yeah. What have you got in the future that we can look forward to?
If I told you, I'd have to shoot you.
That's a very James Bond answer.
It is. That's why I did it. But no, we have no official timings yet for the next Bond. You know that the rights have been bought out by Amazon MGM. So we have a great relationship with the previous Eon Productions. We have a developing relationship with the new owners of the franchise, and we're looking forward to working with them. But there's no plans yet. And I don't know who the next Bond is either. It's not me.
Well, I sat down with Lawrence Stroll at Q, or whatever you call your Aston Martin shop in New York on 57th and Park, and he was doing with me the back of the napkin math of what Aston Martin could be if it got even half of a Ferrari valuation. I'm sure that's the goal that you're aiming for as well. Yeah. What are your plans to get there? I mean, what do you have to do to get investors to attribute that kind of valuation to Aston Martin?
One word: perform. As a company, we've been around for 112 years, and it's been a rocky journey for that 112 years. The brand has endured. It's got a fantastic reputation. The response that you get in an Aston Martin is unlike anything I've experienced. And I've been with great German brands and another great British brand for combined 25 years of my life. You can't stop at a gas station or at a hotel without somebody taking a picture of you or asking you a question about the car. It's phenomenal. So the brand power is there. What we need is a consistent approach.
So that was the Aston Martin CEO speaking to Bloomberg's Matt Miller and Hannah Elliott. That nearly does it for us here on Bloomberg Markets. Checking in how we have fared today. It's been a risk-off session because of the risk that the US gets involved in the Iran-Israel conflict. We've just got lines crossing from CBS saying that Trump thinks disabling Fordo is necessary. So keep an eye on all of that geopolitical risk. It is, of course, the Juneteenth holiday, but US futures also pointing lower as we head towards tomorrow's session on Wall Street. Geopolitical risk, the backdrop to it all. That does it for me, though. Thanks for joining us. This is Bloomberg.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Jennifer Zabasaja in Cape Town, South Africa, and this is Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech. This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
All right, let's cut right to it. This is Bloomberg's new show, Primer. Technology is $1 trillion game. Won, lost, won again, just by backing the right science at precisely the right moment.
My life has been focused on how can you elicit intelligence from brain cells in a dish.
This is the fundamental building block of our fusion technology.
We're doing things that have never been done by anybody, ever.
Everyone is selling the future. If you want to understand what's coming, you'll want to watch Primer, because details matter.
Lasers on?
So do lasers.
There we go.
Oh, and it's on all these lovely channels. Hope you're jotting this down.
I'm David Weston. Join me for the next generation of Wall Street Week. This week, Vlad Tenev of Robinhood takes us into the wild world of mathematical superintelligence. We go to Saudi Arabia for the story of Aramco's plan to help wean the kingdom off of oil.
We think of ourselves as a technology company delivering energy. We are very pragmatic here in the kingdom.
And Larry Summers dissects the Fed's latest decision. Watch the all-new Wall Street Week. More than what you need to know, it's what you need to think about.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onim, only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jumana Versace in Doha, Qatar, and this is Bloomberg. Welcome to the Qatar Economic Forum powered by Bloomberg. I'm Jumana Versace. Over the next half hour, we'll be showing you highlights from the 5th Annual Forum in Doha. This year's event was held under the theme The Road to 2030, Transforming the Global Economy. Once known primarily as energy suppliers, Gulf nations are rapidly emerging as key centers of financial power, highlighting a profound shift in global capital flows. Sovereign wealth funds such as the Qatar Investment Authority and Saudi Arabia's Public Investment Fund now act as global financiers, while pro-business reforms have turned the region into a magnet for foreign direct investment. And strategic decisions made in the Gulf increasingly shape global markets. I spoke with Qatari Prime Minister His Excellency Sheikh Hamad bin Abdurrahman Al Thani at the opening of this year's forum. President Trump was in the region last week. It was the first time a U.S. president has paid a visit to Qatar since 2003. How significant was this visit for the Gulf, do you think? And also, how do you think this president, his approach to the region, differs from his predecessors?
Well, I believe that the president visit first trip to the GCC region, visiting Saudi, Qatar, and UAE, has been a great demonstration for the potential of that region. And this sent a very strong message to the entire world that there is a very high potential in that region. This region is flourishing. This region has a lot to do when it comes to contribute to the future technology and the revolution of artificial intelligence and the need for power. Basically, we have had a great visit, and I believe this is equivalent to the rest of the countries in the GCC. During that visit, we had a wide range of topics that's been discussed, whether it's on the regional security, on the future economic cooperation between the two countries, and how to untap the potential between the two countries. These topics actually has varied, whether it's how to partner in artificial intelligence, how to partner in energy, and how to expand also in being a critical and a vital part of the supply chain for the United States economy, which is the leading economy in the world. I believe this was very much perceived in a positive way by the region. And of course, we know that the policy varies from one administration to another. We are glad to see that Middle East and GCC in particular is a priority for this administration, and we believe that there is a lot of potential for both of us in the region and the United States that we can untap in the next few years. And also, I think that one of the key elements of the president's visit is making sure that the situation in this region remain stabilized.
I think it was very important, but it's the beginning of the story, not the end of the story. Syria, for the first time, came to the Arab Summit in Saudi Arabia first, and now attending a summit with Trump. At the same time, they were asked to do a number of things, but the incentive was put up front. In other words, we will reduce or remove sanctions, and we will provide assistance. That being said, all of those who met the Syrians, be them the Arabs or the Americans, although I'm speaking more on the Arab side, want a better Syria. They don't want an extremist Syria. They don't want, frankly, a revisionist Syria either. So the incentive's out there, but there has to be something to be delivered in response.
The PKK has waged almost a 50-year war against Turkey. But last week, they have agreed to disband and disarm. This is also huge because, according to a study, including the opportunity cost, we have wasted almost $1.8 trillion over the past 5 decades combating terror. Now, of course, the peace dividend will be huge in terms of channeling resources to more productive areas for development, for progress. So in that sense, these two developments are going to be huge in terms of geopolitics no longer being a drag, but actually, being a source of leverage.
Do you think there is a chance of Iran also being brought back into the fold?
That's probably a bit over-optimistic, but there's a chance that there could be a nuclear deal that doesn't have some of the shortcomings of the previous nuclear deal that could enable the lifting of sanctions progressively and so forth as confidence is built, and that could lead to them being a more constructive player in the region than they certainly have been for many decades, noting all the damage that has been done by their proxies in this region and still being done by the Houthis, who have still not resolved the issues there. So I think it's an opportunity that all are working as hard as they can to achieve. You can see the narrowing of the differences between the U.S. position and the Iranian position. No enrichment whatsoever is the U.S. opening. Maybe that ends up being for 3 years, and then you have an opportunity to do something smaller again. But you can actually see this deal starting to come together.
You think about the market in the LNG side, it's probably growing 1% to 2% compound annual growth. So it's a market that's growing from about 400 or so million tons today to something probably north of 700 million tons over the course of the next decade and beyond. So it's going to take a lot of growth. It's going to take growth in Qatar. It's going to take growth in the United States, the two biggest suppliers in the world, to satisfy the enormous amount of energy growth that's coming. It's going to be power, as His Excellency has talked about, around the whole world, not only in the United States, but around the world as well.
If the U.S. exports more LNG, where does it leave Qatar?
No, I think, we are the biggest supply that's going to come from the U.S. next year. We're going to start our LNG export by the end of this year and really start the full production sometime in the next year. But the first LNG that will come from our Golden Pass LNG, which is the largest single export project in one go that's built in the U.S., is going to have 18 million tons of production. We own 70% of that. So we will be exporters from the U.S. I think the U.S. volumes are going to go to certain markets that are mostly Europe, South America, and our volume will predominantly be serving Asia. That is difficult for the U.S., I think, to reach, or the entire volume to go to Asia. But in general, I think we need all that volume. It's us, it's the U.S., I think some Australian volume and others to care. You're going to have 1.5 to 2 billion people on this earth in the next 20 to 30 years. And you have 1 billion people around the world that don't have basic electricity. So the need for electricity and power is huge. So we're not worried at all about having a supply glut or anything like that.
Coming up, more from Doha, including Tesla CEO Elon Musk. This is Bloomberg.
Addiction isn't a choice.
I would isolate, self-medicate, and fabricate to continue my use.
I didn't really think I had a problem.
Rachel and Pete are just 2 of 48.5 million Americans with substance use disorder. But 3 out of 4 people find recovery is possible with help. Go to shatterproof.org/findtreatment to watch the short film No More Secrets and find out how you can get help. That's shatterproof.org/findtreatment.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question.
Great question.
I so appreciate that question. You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Welcome back to the Qatar Economic Forum powered by Bloomberg. Tesla CEO Elon Musk made waves during his appearance on day 1 of the forum, speaking to Bloomberg's Michelle Hussein. Take a listen.
Tell me then how committed you are to Tesla. Do you see yourself, and are you committed to still being the chief executive of Tesla in 5 years' time?
Yes.
No doubt about that at all.
Well, no, I might die.
Okay, short of that.
I can't be here if I'm dead, so there's a slight amount of time.
Does that mean that the value of your pay doesn't have any bearing on your decision?
Well, that's not really a subject of discussion in this forum. I think obviously there should be compensation for, if something incredible is done, that compensation should match that something incredible was done. But I'm confident that whatever some activist posing as a judge in Delaware happens to do will not affect the future compensation.
This is the judge who twice struck down the $56 billion pay package that was awarded to you. I think the value on the current value of stock options. Yeah.
Not a judge. The activist who is cosplaying a judge in a Halloween costume.
Okay, that's your characterization. I think yes. On the current value of stock options, I think the actual
justice according to the law.
On the current value of stock options, I think the value of that pay package stands at about $100 billion. Are you saying you are relaxed about the value of your future pay package? Your decision to be committed to Tesla for the next 5 years, as long as you are still with us on this planet, is completely independent of pay?
No.
It's not independent. So pay is a relevant factor then to your commitment to Tesla?
It's sufficient voting control such that I cannot be ousted by activist investors is what matters to me. And I've said this publicly many times. But let's not have this whole thing be a discussion of my alleged pay. It's not a money thing. It's a reasonable control thing over the future of the company, especially if we're building millions, potentially billions of humanoid robots. I can't be sitting there and wanting to get tossed out by, for political reasons, by activists. That would be unacceptable. That's all that matters.
One question before we move on to other companies, which is that I wonder if some of what has happened to Tesla in the last few months, did you take it personally?
Yes.
And did it make you regret any of, or think twice about your political endeavors? Because I
did what needed to be done. The violent antibody reaction, and I'm not someone who's ever committed violence, and yet massive violence was committed against my companies. Massive violence was threatened against me. Who are these people? Why would they do that? How wrong can they be? They're on the wrong side of history, and that's an evil thing to do. To go and damage some poor innocent person's car, to threaten to kill me. What's wrong with these people? I've not harmed anyone. So something needs to be done about them, and a number of them are going to prison, and they deserve it. And more will.
You're referring to the attacks on Tesla showrooms, but I think...
Yeah. Firing bullets into showrooms and burning down cars is unacceptable.
Yeah.
Those people will go to prison, and the people that funded them and organized them will also go to prison. Don't worry.
But wouldn't you...
We're coming for you.
Wouldn't you... But wouldn't you acknowledge that some of the people who turned against Tesla in Europe were upset at your politics, and very few of them would have been violent in any way? They just objected to what they saw you say or do politically.
Well, it's certainly fine to object to political things, but it's not fine to resort to violence and hanging someone in effigy and death threats. That's obviously not okay.
Let's then talk about your new world, your role advising government. You are in this unique and unprecedented position of having billions of dollars worth of contracts with the federal government yourself, mostly through SpaceX, and also now an insider's knowledge of it because of Doge. Can you see that there is a conflict of interest or a potential conflict of interest in broad terms just through that very fact?
I don't think so, actually. There have been many advisors throughout history and in the U.S. government and others who have had economic interests, and I am simply an advisor. I don't have formal power, and that's it. The president can choose to accept my advice or not, and that's how it goes.
Critics will say that the U.S. government probably shouldn't be doing deals with entities or government-aligned entities that are also doing business potentially with the Trump organization. What do you think?
We're not, the Trump organization isn't doing business with any government entities. They're doing it with private investors. I mean, many of the people in this room probably know them or have talked about them with that. And so, there is a very clear distinction between those things. In the first term, we actually said we're not going to do any foreign deals, even though that's what we did. Yeah. We had done it for years. We just said, hey, we're going to do this. And the reality is it didn't stop the media from constantly saying, you're profiteering anyway. We stopped entirely. Even the deals that were totally legit, it didn't stop the insanity. So this time around we said, hey, we're going to play by the rules, but we're not going to go so far as to stymie our business forever, lock ourselves in a proverbial padded room, because it almost doesn't matter. They're going to hit you no matter what.
How are you thinking about the U.S. as an investment?
Well, I mean, the words U.S. exceptionalism are on everybody's lips these days. And, the U.S. has really been preeminent in the world for the last 80 to 100 years based on dynamic economy, respect for the free market system, respect for the rule of law, capital markets, spirit of innovation, many things. Those things haven't gone away. I think that the U.S. is still the destination of choice, and it is the majority of the world economy. It's hard to imagine that it shouldn't be the majority of anyone's investments. Exactly how you turn that into a number, that's where the judgment comes in, and it can't be the subject of an algorithm. The world is going to have to decide whether what I said while we were warming up is that the U.S. is the best place in the world to invest. The question is it still as best as it was? And that's a judgment. Are we as dependable as we always have been?
I think there are kind of 5 factors that have made the U.S. a really exceptional place post-World War II. The first is that we had very strong alliances. The second is very quickly an act from 1950 called the National Science Foundation Act, which, making it short, was just connecting research dollars from universities into the private sector that has given rise to a lot of the technologies that Rajiv just talked about. Third would be the exorbitant privilege of being the world's reserve currency. Fourth would be rule of law and constitution. And fifth would be demographics, that as a country, we in theory can tap into 7 billion people, whereas China, the world's second largest economy, has a smaller pool to come from. That's historically been true. I think we could argue we're taking all of those out for a little bit of a test drive right now. But ultimately, I think while some of those formidable advantages are bendable, they're probably not breakable. However, I think both things can be true. I think the U.S. can remain exceptional, and I think it's still possible that investors are going to look to allocate marginal dollars elsewhere.
Coming up, more from the Qatar Economic Forum as we discuss how the Gulf is positioning itself to take advantage of the AI revolution. This is Bloomberg.
All right, let's cut right to it. This is Bloomberg's new show, Primer. Technology is $1 trillion game. Won, lost, won again, just by backing the right science at precisely the right moment.
My life has been focused on how can you elicit intelligence from brain cells in a dish.
This is the fundamental building block of our fusion technology.
We're doing things that have never been done by anybody, ever.
Everyone is selling the future. If you want to understand what's coming, you'll want to watch Primer, because details matter.
Lasers on.
So do lasers.
There we go.
Oh, and it's on all these lovely channels. Hope you're jotting this down.
Our global headquarters in New York, I'm Danny Berger. Welcome to Bloomberg Brief. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday only on Bloomberg. Context changes everything.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Amber Verdern at the G7 in Alberta, Canada. This is Bloomberg.
Welcome back to Doha and the Qatar Economic Forum powered by Bloomberg. I'm Jumana Bersachi. Artificial intelligence has been a consistent theme throughout the discussions on the transformation of global markets. This as the Gulf looks to take center stage as a major data center hub to reap the benefit of the AI revolution.
We are sleepwalking into the disruption.
We're sleepwalking into disruption.
Correct. Because, and the generative AI right now are the large ALM models, OpenAI and others, and that's just the foundation stone, but it is moving fast. If you look at last week's news, Microsoft laid off thousands of software programmers across the globe, India, US, in Seattle. And you would think, if you went back last 5 years, and I am a member of the board of the UPenn advisory board, of the 400 undergrads who came in to study engineering at Penn, 80, 100, 120 would do computer science. Nobody wanted to do mechanical engineering and so on. So, but that's not the issue. Every white-collar job which is process-driven, what generative AI is good at is it has become good at answering questions. It's not good at, you still need Katie to ask the right questions.
That's, by the way, that's what I say to my kids when they go to school every morning. Ask good questions.
Yeah.
Humans still have to do that. I agree with that.
But to give an answer, they have processed every book in the world, every data in the world. So they are 1 million times more information than a human being can ever hold. So they can answer the question. So it now takes weeks to process a mortgage application, an insurance claim, medical claims, even in asset management will get disrupted.
Do you double down as well, as Jeff was alluding to, on data centers and AI, really?
Yeah, I think, I don't believe that the trend on digitization or digitalization will change. And with AI, with DeepSeek, I think the demand for data is just going to continue to grow. The big challenge, at least in Asia, outside of the US, the big challenge is around whether there's going to have enough energy to be able to support the growth. It's not difficult to buy land to build data centers. The question is water, infrastructure, and power. And if you can get that going, and then the next big question is the capital. I mean, Jeff mentioned just now to build a 1 gigawatt of data center, it's going to cost $10 billion.
We're investing extensively, a lot in the US, extensively. So we started investing in data centers and some of them in AI and AI in hyperscale space about 10 years ago. So when we started originally, we were hesitant really about the asset class. When we developed familiarity after a couple of years, we did deploy in size. I'll tell you, we're very happy with what we've done early because those things are very valuable now. Because when you do things early, you have the ability to negotiate better terms. So you've have access to a lot of assets in the US. Overall, we've invested and have exposure to about 5 gigawatts as a QA. And we've done it systematically with discipline. When it comes to AI, which is the applications on top, we've also been active, both in the hardware, both in the infrastructure software. So we've invested this year a significant ticket, $500 million in Databricks. And also, we've been also active on the application side.
When you think about the power of what AI can do for all companies to reduce costs, potentially to offset whatever tariffs are going to creep into cost increase. I don't know exactly how that offset will work and whether one will come before the other, and that will be a question of whether the consumer can bear it. But if you think about the ability to drive those costs down through efficiencies in these companies, that's why these multiples have stayed so strong across the board. And then you think to yourself, well, which multiples are higher than the others? And you look at just the dichotomy as an example between the US and Europe, and you say to yourself, well, if AI is sort of the equalizer and it can help all companies everywhere, irrespective of whether the AI technology was made in the US or made in Europe, you could really get a benefit from some of those companies around the world. So I think this is exciting across the board. The question is whether inflation creeps in too fast before that.
That's all from the 5th edition of the Qatar Economic Forum. The Qatari government is the underwriter of the Qatar Economic Forum, powered by Bloomberg, and complete interviews from the forum are available at Bloomberg.com and the Bloomberg Terminal. I'm Jumana Versace in Doha, and this is Bloomberg.
Was it easy to get the pandas to come back to Washington, D.C.? Did the Chinese say, we have some extra pandas, we don't know what to do with them, we're going to give them to you?
Well, it was a little more difficult than that. It probably took us, it was about over the course of a year where we had conversations with our colleagues in China, and we were able to get pandas here very quickly. I think it's a testament to the relationship we've built over decades, to the conservation success that we've had here with our pandas and our panda program. And so it was a lot of conversations, but I think we always knew in the end that we did want pandas at the National Zoo.
How many pandas are there in the entire world?
So this is incredible because this is all due to this panda program, and this is so important. So when we started with giant pandas 50 years ago, there were fewer than 1,000 pandas in the world, right? We're talking in the wild and zoos, fewer than 1,000. And decades later, there are close to 2,000 pandas in the wild now. Actually, I think a little over 1,800. There are over 700 pandas in breeding centers. So as part of this program, we have tripled the number of pandas on the planet.
But still a small number of pandas.
Because of this program, there are more pandas on the planet, more quality panda habitat in the wild, and pandas have gone from being endangered to being vulnerable.
I'm Alex Rodriguez. And I'm Jason Kelly. And we're back with more episodes of our show, The Deal.
The theme of this season, On the Road.
we're bringing you more behind-the-scenes conversations with the biggest names in sports, business, and culture, like Melody Hobson.
I started to study women's sports like an 11-year-old studies baseball statistics, and I got dangerous in seeing up arrows, up arrows.
Susie Wolf.
When you're competing, you're not thinking about any fear or any worries of what could happen.
Josh Harris.
You can't do a good deal with a bad person.
Jay Batt.
At the end of the day, there's never been a better time to be a student athlete.
And more. Stay tuned.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech. This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television. Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
I'm David Weston. Join me for the next generation of Wall Street Week. This week, Vlad Tenev of Robinhood takes us into the wild world of mathematical superintelligence. We go to Saudi Arabia for the story of Aramco's plan to help wean the kingdom off of oil.
We think of ourselves as a technology company delivering energy. We are very pragmatic here in the kingdom.
And Larry Summers dissects the Fed's latest decision. Watch the all-new Wall Street Week. More than what you need to know, it's what you need to think about.
Meet the Vietnamese tech tycoon who's all in on AI. Trung Gia Binh spent almost 40 years building the country's leading technology company, FPT. A strategic partner of Jensen Huang's chip powerhouse NVIDIA, has dubbed his strategy the biggest bet in history. Binh wants Vietnam to be a top source of high-skilled tech talent, and for the next generation to grow up learning all about artificial intelligence. Seizing this moment with the nascent industry to supercharge Vietnam's future and his own. Of Hanoi, the sights and sounds of Vietnam's culture and history are all around. The rhythm of daily life marked out by tradition. But this is also a country hungry for progress, with the government's ambitious growth target of 8% and an emphasis on technology to deliver results. It's a journey that Vietnam and Trung Gia Binh have traveled together, shaped by the past, but now pushing into the future. Binh co-founded FPT in 1988. Originally the food processing technology company, is now known by its three-letter acronym. FPT is Vietnam's most valuable publicly traded tech company. Millions of Vietnamese turn to FPT for their mobile and broadband. But today, more than half its business comes from helping companies integrate new technologies and providing them with services like cloud computing, automation, and increasingly, artificial intelligence.
Your battery is at 20% and not enough to ride you to your destination.
Binh, what's the vision for AI? Is it an equalizer? Will it create a more inclusive society in Vietnam?
AI should be for everybody, from leaders to the working on floor. And we can save 90% of time, 50% of workforce. AI is core in centers of change. And therefore, we invest heavily to AI. Actually, we started more than 10 years ago because we think AI is a way the machine, if in the past, helped our hand and legs, now the machine helps us in brain.
You say you're going all in this area. What does that mean? Are you betting all your money in this right now?
When the OpenAI appear, immediately I asked whole corporations study how will you bring generative AI to their job. Luckily, we have partnership with NVIDIA, and we immediately decide to build very first AI factory in Vietnam.
I want to talk about your partnership, relationship with NVIDIA. How do you intend to build on it?
We buy machines because Jensen said every year the data for world doubling just 1 year, and therefore the world need to increase the AI computing by twofold or fourfold per year. NVIDIA, they said only FPT in the world provide complete AI end-to-end solutions. And that is needed because everybody know AI is so important.
Are you getting all your NVIDIA chips for your data centers that you need, all that you need?
Really, yeah.
And this is where those NVIDIA chips are put to work. I got a tour of FPT's tightly controlled and very noisy Hanoi data center. This network of servers stores, processes, and distributes huge amounts of data. Demand for facilities like this is growing globally as the use of cloud computing and AI applications explodes. We're in a room full of software engineers, and we have just come from your data center, your first data center. Some might call it your crown jewel. What is the significance of that data center to you?
That is so significant for us. I give you an example. If those young talents, they have some moral, if they don't have such infrastructures, they spend 1 month, 2 months to understand the idea is good or not. And today, that should be done in days.
Until now, you always think about NVIDIA being the dominant player. You always think about the US being the dominant AI player. With DeepSeek, should you be viewing China and China's AI players differently?
Actually, not exactly this, because DeepSeek is innovation for democratizations of AI. Fundamental, still US.
But as competition heats up and companies like China's DeepSeek launch low-cost open-source AI models, big questions remain about the return on investment for the trillions of dollars being channeled into AI.
Here they focus.
One industry where artificial intelligence is reducing costs and increasing productivity is autos, like this quality control system developed by FPT. A camera connected to a computer software application that can identify faults in car parts in a fraction of the time it takes a human employee. The company works with global car manufacturers from Toyota and Ford to Mercedes and BMW.
I think it's a revolution for quality productions.
So it is about accuracy, it is about precision. Right now, it is for the auto industry. Could something like this be used, for example, for watch manufacturing?
For sure, that will be amazing because watch is so expensive and quality is critical, and this can help.
I'm not really Boris. This is an AI-generated video showing just how far technology has come.
While many of the real-world benefits of AI are still at a theoretical stage, the risks from the technology are becoming clearer, like deepfakes and AI crime, something Bin agrees needs urgent action.
Some bad people, they never follow the government regulations. They underground to develop something dangerous, fake. I think every government should invest more time, more thought, and cooperate closely with the AI community to solve the problem, to make the AI serve the progress, but not for bad purpose.
Another big concern when it comes to AI is jobs, that AI would take away jobs from people. That is a fair concern,
Yeah.
isn't it?
We have to educate more AI for people. They should change their job from old job to new job.
Upskilling?
Upskilling, that's critical. Why we commit to re-educate 500,000 people to AI. And that's a challenge for every country because AI moves much faster than people move, business move, or government move.
Coming up, building the workforce of the future. Why Bin thinks AI can accelerate Vietnam's progress.
100 million people, young people, good educations, and latest technology. That's the only way to go.
When Latitude returns. Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
In case you missed it, on Bloomberg Open Interest, this data from Trump's trade war, what are you seeing in your district?
Businesses are afraid to accelerate. By and large, they're pulling over and putting on the hazards.
You're constantly speaking to businesses. Is anyone making big investments?
Inflation is a big bugaboo. There's no evidence yet that inflation-driven drop in sentiment drops spending. That's why I say there's the disconnect on the consumer side.
Don't miss Open Interest live weekdays.
The circuit is back. How confident are you that AI's promise will outweigh the perils?
I'm not confident.
Tune into Season 3 of The Circuit with me, Emily Chang, Thursdays at 6 p.m. Eastern on Bloomberg Originals and Bloomberg TV.
In a classroom outside Hanoi, Vietnam's next generation of tech leaders is being nurtured. FPT has a network of 5 private university campuses across the country and has trained 150,000 students. Bin believes their skills will be in high demand in Vietnam and beyond. It was a business trip to Japan's industrial conglomerate Sumitomo that led Bin to decide FPT needed to address Vietnam's education shortages and develop the country's top talent.
Message from Japanese company is, yeah, your idea is great, but we don't speak English. And I said, okay, we're going to learn Japanese language and go back to you. And that is key to enter a very difficult market like Japan by speaking Japanese. And we organize, same time, learning English and Japanese. That's very challenging because in the school or universities, foreign language was very poor and no internet at that time. We opened FPT universities in 2006, and now we need to spread education, both technology and languages. And we try to be in every big cities. And we start with Hoa La, Hanoi, and then Ho Chi Minh City, and then Da Nang, and then Quy Nhơn and Cần Thơ. 5 campuses, and now we're going to open more. That's unique because no one university has opened such multi-campus.
Alongside private universities, FPT now runs private schools with almost 20,000 pupils, and technology is central to their learning. These 6- and 7-year-olds are programming simple robots. They get lessons in coding, how to interact with AI assistants in daily life, and the basics of algorithms. For Trung Bin, you're never too young to learn AI. That's why he's urging the government for school kids as young as 6 to be taught how to use it.
Within this system, from first grade, they all start with the AI educations. They play 4 years, just playing. And then from 5th grade, they start to develop AI by themselves. And STEMs and robotics. I see very clearly how Vietnam should be in future. Vietnam just about 100 million people, young people, good educations, and latest technology. That's the only way to go. Education not contribute much profit for FPT, but from the country point of view, that's most useful contribution, what FPT should do. And today we're thinking about every kids, not in cities like Hanoi or Ho Chi Minh City, but kids in the countryside should got the good education. That's what we're going to do now.
So you're leapfrogging?
Yes, exactly.
Still ahead, 50 years after the fall of Saigon, how the legacy of war and Vietnam's struggle for independence left their mark on Binh.
I met Ho Chi Minh twice. I talked to his college, and I learned a lot of things. Quite interesting. And also the whole histories and so on. I think that's very helped me to see the problem.
When Latitude returns.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
AI should be for everybody, from leaders to the working on floor. And we can save 90% of time, 50% of workforce. AI is core in centers of change. And therefore, we invest heavily to AI. Actually, we started more than 10 years ago because we think the machine in the past helped our hand and legs. Now the machine helps us in brain.
Are you betting all your money in this right now?
When the OpenAI appeared, immediately I asked whole corporations study how will you bring generative AI to their job.
Didn't really think I had a problem.
I would isolate, self-medicate. Like 48.5 million Americans, they didn't choose addiction. Go to shatterproof.org/findstreatment. Watch the film No More Secrets and find out how you can get help. That's shatterproof.org/findtreatment.
April 1975, the chaotic final days of the war. As the North Vietnamese army captured Saigon and the U.S. scrambled an extraordinary evacuation, 7,000 people flown out by helicopter. Today, inside of Ho Chi Minh's mausoleum, Hanoi's War Memorial commemorates the men and women killed in 20 years of fighting, a figure Vietnam estimates at more than 3 million. Years since the end of the Vietnam War, and the United States is now this country's largest export market, is just one symbol of Vietnam's transformation from ruins to reconciliation. It's a journey that is reflected in Trung Bin's own story, from a struggling young graduate just back from university in what was the Soviet Union to a major player in one of the world's cutting-edge industries.
I returned to Vietnam in 80s, trouble. Inflation is 2 digits. And my classmates came and asked, please save my family. One wife, 2 kids, $5. I said, okay, we'll try to do something. I came to ministers of technology progress and asking to set up a company. And he asked me, what products? I don't have any ideas. I said, I just want high techs. And he suggests, okay, in food processing technology, you should have every high techs. I agree immediately. But we didn't do food at all. We start with the computer. And during that time, Vietnam under embargoes. And no one country is teaching us on computers. And the way we do it is to buy books from Hong Kong and to learn by ourselves. And we start with the first projects for ticket booking for Vietnam Airlines. And then we move to the banking, core banking in Vietnam at that time. Step by step, we grow up. And at the first day of FPT, we wrote something, and later on we understood that is our visions. We dream of the powerful company. And at that time, we know just few companies in the world. IBM, for example, Hitachi, for example, and we see they have 3 letters, 3 sounds, and therefore we decide, instead of FPTC, we cut C and put just FPT. We grow fast. We work day and night.
Then you're among the richest in Vietnam, yet you choose to fly economy class. Why is that? Why remain frugal despite the wealth you have accumulated?
I learned from legendary general how they behave, how they do things. And the top of the top, they no distance with the soldiers. I think that's good. Let's do it.
Ben, you've had a fascinating journey. You and your family moved to Hanoi to follow Uncle Ho Chi Minh, being the revolutionary leader who helped Vietnam win against the French and then the US. On reflection, all through these years, what are some of the thoughts that come through your mind when you think about how, even like in the case of Vietnam, you know, an emerging economy that's now leading in the tech space, and your own journey at FPT, what are some of your own reflections?
Our family originally lived in Da Nang, but my father followed Ho Chi Minh for freedom and independence. He left Da Nang alone to the north. And after 1954, my mother and my sister and brother follow father, moved to north. I grown up in Hanoi, and my youth lack of nearly everything. Don't have clothes enough. I used to use clothes of my sisters. As the youngest guy, I don't have new one, just from brother or from sisters. But really, the spirit of the family, just one. Freedom and independence. Every guy have to somehow to serve that purpose. Even for me as a young student, study is a top of a job. Even when I graduate, the country select us and give us the task. Okay, you are a young guy, war will be ended, and your purpose is to build countries after the war.
These are really uncertain times with Trump tariffs impacting every industry. How are you assessing the impact of the Trump administration this time around on Vietnam and Vietnam's economy?
Yeah, that's is uncertainties for every country, including Vietnam.
Case in point, since recording this interview, Vietnam became one of the countries hardest hit by Trump's initial tariff salvo. It's not just about the government in the US, it's also about the government in Vietnam. How should foreign investors be viewing the climate here in Vietnam?
Our Prime Minister said Vietnam should be safest hidden place in geopolitical storms at current moments. Really, something big happened with Vietnam. I think the first is clearly announced top priorities is technologies, private sectors, startups.
So you're saying, never mind the politics, growth is there for investors to tap.
Yeah.
Ignore all the noise. Politics is just noise.
That's the real case.
And there are times when escaping from all the noise means making the most of an oasis of quiet, the home been built overlooking one of Hanoi's lakes. The house has a special meaning, right? For you, it's tranquility, it's peace, it's quiet, especially on the back of the kind of life you lead in trying to grow FPT.
For me, the concept, ideas is most critical. Those ideas not appear in office, be here, in quiet, in relax. But the most critical issues people get here, or eat together, drink together, and solve problem together.
Let's talk about this villa. Very traditional, a lot of things of the past.
I live my very first independent life in the farmhouse, and I built it by the memory of the farmhouse, the philosophy they believe, yin yang 5 elements, the concept of the life, of the happiness. They build this kind of roof like boat, and man and woman, and bowl of rice. Everyone should be happy if have somewhere to live, something to eat, and someone to love.
So you're defined a lot by your past experiences.
Yeah, actually, I'm lucky man because not everyone should have the experience of the war and peace, poor and rich, technology progress, the change during my life, rich by experience. Not today kids. They don't know what's the kind of war, how the people should die in front of you. They don't see it at all.
There's an appreciation for what you have now.
And therefore, peace is the most important thing for today, for Vietnamese, and I think for human being, for the world.
In case you missed it, on Bloomberg Crypto.
How do you expect the asset to continue price increase at these levels that we've seen? And at what point do we see, winter coming again?
Winter's not coming back. We're past that phase. If Bitcoin's not going to zero, it's going to $1 million. And you have all the evidence you need to determine that, right? The President of the United States has determined he supports Bitcoin. The Cabinet supports Bitcoin. Scott Bessent supports Bitcoin. Paul Atkins has shown himself to be an enthusiastic believer of Bitcoin and digital assets. Ken Taz at CFTC feels the same way. The banks are going to custody Bitcoin. Bitcoin has gotten through its riskiest period. The accounting has been corrected. There's now only 450 Bitcoin a day available for sale by natural sellers.
Don't miss Bloomberg Crypto live Tuesdays.
Today's CFOs are reshaping the C-suite. Bloomberg's Chief Future Officer shines a spotlight on these dynamic leaders. CFO Pascal Desroches has played a key role in restructuring AT&T, reducing debt and refocusing the business. Now his steady approach has the company primed for growth.
I'm a believer you try to make progress on big problems every day, and ultimately you'll look back and say, hey, you've come a long way.
Watch Chief Future Officer Wednesday on Bloomberg.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum For sophisticated conversation, this is Bloomberg Surveillance. In case you missed it on Bloomberg Surveillance.
They say you're in your right if you use Section 122. Why didn't you guys do that from the beginning?
Well, Section 122 only gives you 150 days.
Is Section 122, if you use this
that,
now for 150 days, would it be a bridge to 301 or a bridge to 232? What are you thinking more long term?
You can be the strategist on that.
So just got to tell you one thing. You're not allowed to hire Anne-Marie. She's with us, all right? Don't miss Bloomberg Surveillance live every weekday.
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
It's 100 years, 80 years, 100 years of dollar strength, so much so that important commodities, gold, oil, are denominated in dollars. I think undoing that will take a long, long time.
Get your fixed income fix. Watch Bloomberg Real Yield every Friday at 12 p.m. Eastern, right here on Bloomberg. Context changes everything.
In case you missed it on the opening trade.
What trade does is it meets a consumer demand. Consumer demand is not weakening. China supplies a little over 30% of what we eat, wear, and consume. That's unlikely to change anytime soon. I think that supply will find new homes potentially, but our reliance as a global economy on Chinese manufacturing is unlikely to change fundamentally anytime soon.
Don't miss the opening trade live every weekday.
This is my kitchen table and also my filing system. Over much of the past 3 decades, I've been an investor. The highest calling of mankind, I've often thought, was private equity. And then I started interviewing. While I watch your interviews, I know how to do some interviews. I've learned in doing my interviews how leaders make it to the top.
I asked him how much he wanted. He said $250. I said, fine. I didn't negotiate with him, and I did no due diligence.
I have something I'd like to sell, and how they stay there. You don't feel inadequate now because being only the second wealthiest man in the world, is that right? One of the most interesting and smartest people running an investment bank today is Peter Orszag. He previously served as head of the Congressional Budget Office, the Office of Management Budget, and has a PhD in economics from the London School of Economics. I sat down with him in his offices at Lazard Frères to talk about his career and also the future of investment banking as Lazard practices it. So you have been in the financial service world as an advisor for quite some time, but you also served in government. We'll talk about both aspects of your career. But right now, one of the things that has held back M&A, people say, is the regulatory environment in Washington. There hasn't been as much M&A activity as some people in the M&A advisory business, like Lazard, would like. Do you think it's the regulatory environment, or do you think it's high interest rates? What has kept M&A from going forward at the pace that maybe some people think it should be going forward at?
Well, let's start with what's driving it, the sort of the tailwinds. So the biotech revolution, ongoing technology. I mean, we're seeing a revolution in generative AI. De-risking and changes in supply chains, and the energy transition. I mean, there are some big building blocks that propel deal activity forward. And then on the headwinds, I think there have been a few. The rate at which interest rates went up meant that there was a disconnect between buyers and sellers on the value of the assets. It also meant that financing was challenging. The financing markets were a little bit more illiquid. And then, yes, regulatory. But all three of those headwinds have been abating. First, as interest rates have topped out, and now we're debating how quickly they'll come down. And then secondly, on the regulatory front, the government has lost some important cases in court, and what that has meant in turn is that many more boards and C-suites are willing to say, you know what, we'll see you in court, we'll litigate.
For those people that are not really involved in the M&A world or the financial service world, they may not know about Lazard. Tell us about the brothers that started Lazard. How did they convert themselves from dry goods sellers to financial experts?
So the story of Lazard, we're 176 years old. We began in New Orleans. 3 French brothers started a dry goods store. Like many other firms, and this is documented in a great book called The Money Kings, so the Seligmans, the Schiffs, and others, followed the gold rush out to California, realized that lending gold to your customers or shipping the gold back to their home countries and then lending on credit to your customers was more attractive than selling the suits and the other dry goods. Moved back to New York to set up a bank and then had correspondent banks, in our case, in Paris and London, and the rest is history. So it is, and I would say out of all those firms that started that way, we're the only ones still standing.
Lazard today manages money. You have an asset management business, and you have an M&A advisory business. Is that right?
Yes.
And you're a leader in M&A advisory. Tell me, when CEOs want to do deals, why do they need an advisor? Because if they're smart CEOs, can't they get together without an advisor? What does an advisor really do for smart CEOs when they want to do an acquisition or a merger?
Well, I think there's several things. I mean, Lazard bankers are known as bankers with conviction, so a lot of content, a lot of backbone in terms of saying, no, I don't actually think that's a good idea. So you know, you've been in many of these positions. It is very helpful to have well-informed, smart people who are willing to push back, suggest this versus that, et cetera. I think the role of an advisor is not just the narrow, you know, what's this thing worth, but do you really want to do this? What's the regulatory implications? How is this going to play from an investor relations and a PR perspective? It's the multidimensionality, and having a thought partner or someone whose counsel you could benefit from. That's one part. The second part is, in many negotiations, it's helpful to have a intermediary. It's why often you don't want to be your own lawyer. And so I think that's the second part of the advisory role.
So when you call a CEO of a Fortune 50 company, I assume you can get a meeting with that person. It's not that hard. So do you always have an idea saying this is a good thing that you might consider doing, or they come to ideas to you? They bring them to you?
It works both ways, but what I like to do with CEOs is to have a broader discussion both about the world and then about what their objectives are. And we present ideas, and then sometimes people will say, I'm thinking about this, could you work on this with us?
Now, the M&A advisory business, you're competing against people that have, or organizations have large balance sheets. So if somebody wants to do a deal, they might say to JP Morgan, can you be my advisor, but can you also lend me money to do the deal? And the same is true with Morgan Stanley and Goldman Sachs. You don't use your balance sheet for that purpose. You just use your brain power to kind of say it's a good deal or not a good deal. Is that a competitive disadvantage or a competitive advantage?
I think it's well, let the market speak. What's happened over the past 15 or 20 years is massive share that went to independent advisory firms like ours that don't use their balance sheets to provide the advice, or that only provide the advice and don't use their balance sheets. And I think to win in that kind of environment, you need to have differentiated content, great ideas, insight into the players, an ability to read between the lines on the regulatory and other developments, and also deep relationships. You need to be both trusted and discreet.
So you became the CEO in October of 23.
Yep.
And I think shortly thereafter you said you wanted to double revenues. Is that?
I actually said that right before I took over.
Right before,
yes.
Okay. So you want to double revenues by 2030.
Correct.
Is that right? So is that realistic? Are you on the path to do that?
We're ahead of schedule on accomplishing that. And I think that really reflects the power of Lazard's standing in the world, our brand, and what we needed to do is just up our ambition and increase, from a cultural perspective, our focus on working together, and we're doing it. And so you're seeing that in the results. I mentioned a record first half. We're really excited about the people that we're bringing on, and we're really excited about, most importantly, about what we're able to do on behalf of our clients.
Now, you have a unit here, I guess it's called a geopolitical advisory unit.
Yeah.
Do clients pay for that? And are they happy to get that and pay for it, or you kind of give it as a service? And do people really care about geopolitical events when they're doing M&A deals?
Absolutely. So, I mean, in today's world, let's step back. What's happened over the past 3 or 4 decades is we've moved from an environment in which the oil and gas companies that always operated globally and needed to have geopolitical insight, and maybe a few others, had to take geopolitical considerations into account, to a situation today in which pretty much every important business decision that is made has to take geopolitical issues into account, or else you're going to go you're going to go wrong. It's a fundamental business need. And Lazard has always been known as, a banker plus, so people that had the ability to provide insight into not only what the other CEO was thinking, but what the prime minister was thinking, or the president. So these are people who cross those boundaries between business and government. So Lazard was always known as having that skill set, and we thought we could professionalize it by bringing in people who have done that for a living in different settings. So the short answer is it's very much part of Lazard's DNA. We now have a unit that's dedicated to it in addition to just the bankers, and it is a revenue generating activity, but it's also something that is a great entree into boardrooms and C-suites for our bankers also. So this has been a resounding success.
What is the biggest geopolitical risk that you think now faces the world, and certainly the United States?
I think the fact of the matter is the biggest risk is that the world is changing and we don't yet have an intellectual framework that matches this new reality. So we have a splintering that's occurring between the major blocks of the U.S. and Europe on the one hand, China, Russia, and others on the other, and then some countries that are in between the two. And we have not adapted to that new world quite yet. Beyond that, there are flashpoints. There are two hot wars going on in Europe and the Middle East with unclear trajectories on both. So there's obviously elevated risk even before you get to the traditional, will China invade Taiwan and other things that people often talk about.
Many people who are running investment banks come from Wall Street their whole career. You've been in government. Is there an advantage or a disadvantage in having served in government when you're doing the job you currently have?
I view it as a significant advantage, and the reason is that it brings a perspective, having served in government, that is useful in lots of different settings, and it's that multidimensionality, the ability to stitch together pieces from different worlds that I think is very helpful. The other advantage that it gives, I believe, is that I have a lot of respect and admiration for our senior bankers at Lazard, and so I view it as my job to do part of the work, but then to hand things off to our senior bankers. And I think people who have spent their entire careers doing one thing, the natural inclination is to then go do it yourself. And then the problem becomes that you're not providing enough upward movement and ability to grow to the senior people. So this is a fantastic job, but I think I hope and I believe that I'm better at it because of what I've done before.
The multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, Mondays on Bloomberg.
As Bloomberg's global financial correspondent, I get to meet the people shaping the way money flows around the world. And I want to bring you with me.
The capitalist system is the best system in the world. There isn't another one that works as well.
I love all these new Wall Streets. Y'all Street, Wall Street South.
Wall Street used to be a place. Now it's more of an idea. I hope you survived the day.
I did. It was a busy day.
Let's talk about your own background as opposed to Lazard's background. So where were you born?
I was born in Lexington, Massachusetts, outside of Boston.
And what did your parents do?
My dad was a MIT math professor at the time, and he also ran a consulting firm that my mother managed.
So if your father is teaching math at MIT, I presume you're pretty good at math. And
not by his standards.
Oh.
No, but I was okay.
But you were good.
I was okay, yes.
Did you get 800 in your math SAT?
I did very well in my math SAT, yes.
Okay. So you chose not to go to MIT or another school up there called Harvard, but you went to Princeton.
I did.
And you got a PhD at the London School of Economics?
That's correct, yeah.
Okay, so when you got your PhD, what did you decide to do with the PhD in economics? You want to go teach, or what did you do when you came back to the States with your PhD?
Well, actually, I had, in the meanwhile, in the middle of graduate school, and I think it reflects the fact that I clearly did not yearn to be a pure academic, I had spent a year, or not quite a year, but a year in Moscow with a team of advisors to the government there. And then when President Clinton was elected, one of my undergraduate professors, Alan Blinder, called me up and said, "Isn't it kind of cold in Moscow? Would you like to come join the new Clinton administration at the Council of Economic Advisors?" Which I did.
And how long were you in the Clinton administration?
I did a couple stints, so I did a couple years. I went back and quickly finished my PhD. I went back in for about a year or two, so it must have been cumulatively maybe 4 or 5 years.
In the Clinton administration, you eventually left and you went to Brookings. Is that true?
So I left the Clinton administration. I then have the shortest tenure of anyone who voluntarily left McKinsey. I went to McKinsey in San Francisco. After 3 weeks, I decided that was not for me. My younger brother and I then founded an economic consulting firm, which subsequently grew. I taught at Berkeley. I then moved to Brookings in 2001.
So eventually, the Congressional Budget Office people called you and said, "Can you come up and run the Congressional Budget Office?" All right. The Congressional Budget Office was set up under the Budget Act of 1974.
Correct.
Since the Budget Act of 1974, deficits have been going this way, budgets have been going with not balanced. Was the Budget Act a good idea? Because we were doing pretty well without it.
Well, first, deficits haven't quite got, they went up, down, and then now they're back up. But I think what the Budget Act did is it gave Congress better tools, but ultimately these decisions are not going to be, up to an agency like the Congressional Budget Office. They're up to our elected representatives. So I view the Congressional Budget Office as empowering the legislature to make decisions, but those decisions are not, they're driven by other factors too.
Okay, so you're doing that for a number of years, and then President Obama is elected, and he asks you to be the head of the Office of Management Budget. So for those who aren't familiar with that, what does that office do?
So that's slightly different. It sounds similar to the Congressional Budget Office, but think of the Congressional Budget Office as an independent entity who's really analytical and whose job it is to evaluate the costs and implications of legislation and then to testify on those to Congress. The Office of Management and Budget does some of that, but it also implements the president's policies. It's think of it as like a COO type role for a lot of the government. So the role is complex because you're a member of the cabinet, but also a member of the White House staff effectively, and the organization is partly analytical, but also quite operational. So it's an unusual organization.
When I worked in the Carter administration, there were 2 budget directors. The first one was Burt Lance.
Sure.
And he was a very good friend of Jimmy Carter's. And sometimes he would sit at the cabinet room where we're going through budget appeals, and he would say, "Mr. President, that's OMB's position. Let me tell you my view."
I never did that.
You never did that?
No.
So before the administration was over, you decided to get it back into the private sector, and you left OMB to go to Citicorp. And can you explain why you go to Citicorp, a nice bank and everything, but how did you happen to pick Citicorp as a place to go to?
Well, actually, I spent a little bit of time at the Council on Foreign Relations, which you know well, just to figure out what I wanted to do next. I was about to sign with one of Lazard's actually competitors when I got a call from Citi, which I had not really been considering, and the argument was, which I found some merit in, you've done other things, including consulting, et cetera, but you've never done banking. If you go to this other firm, you're only doing M&A. If you come to us, we've got 10 different things you could try. If you're bad at all of them, that's your fault. And why don't you kind of get trained and get experience across a variety of things and see what you really like. And that logic made sense to me.
So you eventually went to Lazard about, I think, 2016?
16, yes.
So how did you rise up to be the CEO in a relatively short period of time? Were you really good at M&A advisory? And to be good at M&A advisory, do you have to come up with ideas that clients want, or do you have to kind of just execute the things that they say they want to do?
All of the above on M&A advisory. And with regard to my role at Lazard. I think Lazard is a special place. It's a place that has always valued people that are useful to their colleagues. So when I came here, my whole goal was, how can I be useful to you? You banker in industrials, you the banker in healthcare, you the banker in technology, and that's what I tried to do.
So let's suppose the next president of the United States is a Democrat, and you served in 2 Democratic administrations, the Clinton administration, the Obama administration. Suppose the next president is President Harris, and she calls you up and says, I need a Secretary of Treasury who knows Wall Street, also knows Washington. You're one of the few people who've worked in Wall Street and also worked in Washington. What would you say if she offered you that job?
I think with regard to the question of returning to government, there's neither supply nor demand, so I don't think your hypothetical is going to happen. But more importantly, I'm really excited about what we're doing here at Lazard. We've got a lot of momentum, and Lazard is a special place. It's an important place, and I have a vision of what we'd like to accomplish here that I'd like to see through.
So I'll take that you're not interested in being Secretary of the Treasury for the time being.
I have a great, unbelievably great job. Perhaps the most important thing in providing good advice to either a president or a CEO is first do your homework. It is too easy to make things up. That never works. And the second thing is to have conviction.
All right, let's cut right to it. This is Bloomberg's new show, Primer. Technology is a $1 trillion game. Won, lost, won again, just by backing the right science at precisely the right moment.
My life has been focused on how can you elicit intelligence from brain cells in a dish.
This is the fundamental building block of our fusion technology.
We're doing things that have never been done by anybody, ever.
Everyone is selling the future. If you want to understand what's coming, you'll want to watch Primer, because details matter.
Lasers on?
So do lasers.
There we go.
Oh, and it's on all these lovely channels. Hope you're jotting this down.
Addiction isn't a choice.
I would isolate, self-medicate, and fabricate to continue my use.
I didn't really think I had a problem.
Rachel and Pete are just 2 of 48.5 million Americans with substance use disorder. But 3 out of 4 people find recovery is possible with help. Go to shatterproof.org/findtreatment to watch the short film No More Secrets and find out how you can get help. That's shatterproof.org/findtreatment.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question. Great question. I so appreciate that question. You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Jennifer Zabasaja in Cape Town, South Africa, and this is Bloomberg.
What's the difference between advising a president of the United States and advising a CEO? Do you ever say to a CEO, look, I've advised presidents and you're not a president, but I'll give you my advice, or you don't mention that you've been an advisor to presidents?
I think perhaps the most important thing in providing good advice to either a president or a CEO is first do your homework. Don't, it is too easy to make things up. That never works. And the second thing is to have conviction. The number of times I've seen people who say, I'm going to tell the president, put him in his place, or put maybe her in her place, and then they get into the Oval Office and they say, and one episode really sticks out in my mind on this front, and I think it's something I try to remember in this job, and it was something that I definitely remember when I was in Washington, which is I was in my mid-20s, and I happened to be in the Oval Office, which, as you know, in your mid-20s is quite a thrill. And there was a discussion with Bob Rubin and President Clinton. And President Clinton said something like, well, we're going to go out and say X, and Bob, you'll give this speech, and there are a lot of people nodding their head yes, like, yes, Mr. President. And Bob said something like, well, that's terrific, Mr. President. We only have one problem. I can't give that speech. And the president kind of looks up at him quite stunned and said, well, why not? And he said, because I don't think it's true. And it was a moment when he did it in a way that wasn't offensive, but he had backbone, he had conviction. And I think that is what many CEOs, that's what many presidents either should want or do want in an advisor. You have a point of view, you're respectful, but you're not just riding the wave of what everyone else is saying.
So your goal for Lazard is to grow the revenue and to keep it as an independent, publicly traded company. Is there an advantage to being a publicly traded company in the business you do? Because some of your competitors are not publicly traded.
I think the goal is to make Lazard far and away, I already think it's the best place to work on Wall Street, but far and away the preeminent, both financial advisory and in the part of asset management that we do, firm. And you could do that either as a public company or a private company. There, as you mentioned, some of our competitors are public, some are private. So I don't really view that as the key determinant. Instead, it is about that ambition to win. It's about conviction and about the content.
So today, if somebody says, I want to work at one of these kind of firms, a small, not J.P. Morgan size organization, I want to use the skills that I developed to work at a place like Lazard, how does one get hired here? If you're in college or business school, what are you looking for when you hire somebody?
Well, I talk a lot about succeeding at Lazard and our people being commercial and collegial. So what do I mean by that? Commercial, the ability to go out and act on behalf of our clients effectively. Collegial in terms of being able to work together as a team in delivering the best possible outcomes for our clients. But beyond that, I think the attributes that we look for and that I seek out in our colleagues, it would be curiosity. You've talked a lot about that. Resilience, and a work ethic, and the ability to have conviction around your ideas so that you're not just going with the conventional wisdom and playing 5-year-old soccer.
Now, young investment bankers that often said work 80 hours a week, 90 hours a week. Why do they do that? Why can't they work 9 to 5 and not come in on weekends and just say, look, I got to have a balanced life and I'm just not going to come in at night or in weekends? Why don't they do that?
Teddy Roosevelt once said that the greatest gift in life is the opportunity to do work worth doing. So I think the point here is there are many professions where you can't get around the effort part of it. But what I think our firm requires or owes our people who are putting in that effort is 3 things. The first is the opportunity. I talk about practicing at the top of your license, to run as far and as fast as you can. One of the exciting things, for example, about being in government at a relatively young age is you have this sense that, oh my goodness, I'm this age and I'm doing that. And to create that same sense of excitement for people entering financial services, I think is a characteristic of Lazard, and it's very important. So that's part one. Part two is, even if you're working hard, you need to have some degree of agency and the ability to, if something else is important in your life, to take time off, to go do that. It's one of the reasons why here in New York, for example, we still have 3 days a week in the office and 2 days remote, because it eases those trade-offs for many people. And then the third really important part of this compact is the feeling that you're part of something. You know, you're working on important things. It's not just make work. And I think if you put all of those elements together, there are many, many people who would rather work, whatever number of hours per week on interesting, important things, rather than fewer hours on things that are not that interesting. And that's what we're looking for. That's the trade-off.
Asia is a continent of contrasts. The region is a nexus of rich cultural traditions and a vibrant hub of trailblazing innovation and modernity. How will it push the limits of technology even further?
Going to space should become as easy as, taking a flight.
If NASA is designing a lander, their approach is they're designing a Formula One car. So we take, say, a Jeep approach.
Minso, give us a sense of how you translate Korean architecture for the rest of the world.
We call this madang. In general terms, it's where we can be ourselves, where we belong.
There is an old saying in Korea that says, "Call me blue, 화이 불치." It means simple but not humble. So it has a tremendous impact on Korean architecture.
People tend to think the robot AI taking the job from them. We want to use the robot as a basic asset, meaning people have an income through the robot.
From space tech in India to robotics in Japan, Asia is driving the future, reshaping industries, societies, and the way we live. Join me as I take you through the bold innovations. Discover Asia's next-gen technologies on Momentum.
I'm Alex Rodriguez. And I'm Jason Kelly. And we're back with more episodes of our show, The Deal.
The theme of this season, On the Road. We're bringing you more behind-the-scenes conversations with the biggest names in sports, business, and culture, like Melody Hobson.
I started to study women's sports like an 11-year-old studies baseball statistics, and I got dangerous in seeing up arrows.
Susie Wolf.
When you're competing, you're not thinking about any fear or any worries of what could happen.
Josh Harris.
You can't do a good deal with a bad person.
Jay Batt.
At the end of the day, there's never been a better time to be a student athlete.
And more. Stay tuned.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jemana Bersachi in Doha, Qatar, and this is Bloomberg.
I'm David Weston. Join me for the next generation of Wall Street Week. This week, Vlad Tenev of Robinhood takes us into the wild world of mathematical superintelligence. We go to Saudi Arabia for the story of Aramco's plan to help wean the kingdom off of oil.
We think of ourselves as a technology company delivering energy. We are very pragmatic here in the kingdom.
And Larry Summers dissects the Fed's latest decision. Watch the all-new Wall Street Week. More than what you need to know, it's what you need to think about. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Luisa Gomez Bravo sees her role as CFO of BBVA beyond just being at the helm of the bank's finances.
It's like a little bit like being a doctor, no? You're the guardian of the health of the institution of the bank.
Since moving into the job 18 months ago, Gomez Bravo has helped BBVA not just survive, but thrive, pushing revenue and profits to all-time highs. But that's just one piece of the picture. Spain's second largest bank draws 2/3 of its income from abroad. In Mexico, it's the largest financial institution. In an effort to bolster its Spanish presence, it's pursued a takeover of peer and rival Banco Sabadell. Now the challenge is not just to grow the firm, but to reshape it.
I see the CFO role as a strategic partner, and you have to be on top of where you are putting your capital, the planning of capital. And in a bank like ours, we are in 30 countries. How do we deploy that capital? In which country? In which segment? In which product?
Accountability is important, and entrepreneurship. You know, as a finance director, you need to also be a little bit of an entrepreneur in that way of thinking ahead. While trying to anticipate as much as possible during your time in Davos in a very concise way, so you don't have to take a lot of time in reading it.
She's one of those who never stops giving me feedback and challenging me and so on. She never stops in taking initiatives, which is very important in our business. She never stops in terms of grit, in terms of hard work, in terms of analytics.
What's really critical as a CFO is communication skills. You need to be able to give advice and understand the business and the strategy, but you also need to be able to have that, critical, constructive challenge and dialogue of what you're seeing.
At the core of that strategy is technology and innovation.
I do think that the banking industry is going through a transformation. Today, the key interface channel has moved to digital, has moved to mobile. You have to invest a lot in technology, a lot more as compared to the before. The traditional role of the CFO, which is making meaning out of numbers, seeing the whole picture, seeing the full forest, it's even more important.
The way we see it at BBVA, innovation is not just an output of an app or, a commercial campaign or product attributes, or, it's really a mindset. It removes away the fear of trying things new. And in the world that is changing so fast, being able to adapt is very important. And having a finance function that adapts quickly is crucial.
The stakes are high and the pace is accelerating.
So this is like when you're driving a car, right? Finance is the one that has the headlights on, the high beams, it's looking at the road. It may be raining, it may be not, and you're ensuring that you're 2 steps ahead, seeing what the context is, what the environment is, and at the same time as finance, you're fueling the car because the resource allocation is critical for that transformation to be delivered.
In 2024, BBVA ranked 16th among European banks by total assets. But when it comes to efficiency, it consistently punches above its weight, known among its peers as a bank of bankers.
The best measure of success is how you do versus competition, no? In that context, 15 largest European banks, which is our peer group, among the 15, we are number 1 in profitability, return on tangible equity, and we are number 1 in growth.
Much of that growth now comes through the bank's digital channels, made possible by some prescient pivots in the past.
The first one was over a decade ago when we decided that the mobile was going to be at the center of what we do. And that was radical at the time because smartphones were only in the hands of a very few people. Everybody was web-based. And we said, no, mobile. That was a very important decision. The other decision, and this goes back to execution and the banking side, is that we decided to not have a separate digital bank. So the bank itself had to be digital. The bank itself had to have a different relationship model with its clients.
Digitalization is one of the main strategic goals of banks because it helps the banks in Europe to bridge essentially two targets. One is on profitability and one is on cost. We see the number of transactions concluded in a branch significantly lower than, say, 5 or 10 years ago. That's one of the reasons also why the bank are shutting down branches and they trying to move client online accounts and apps on the phone.
10, 20 years ago, the key interface that we have had with our customers, it was through the branch. And it was a frequency of 40 days. Once in 40 days, our customers, they used to go to a branch to do their stuff. Now, 24 times a month, our customers interact with us. You have to leverage the data that you accumulate through that higher frequency interaction and so on. So our business is changing in a major way.
BBVA's business spans the globe, operating in more than 24 countries. This broad footprint carries risks as well as rewards, from political unrest in Turkey to soaring uncertainty in Mexico, where Donald Trump's tariff agenda has roiled the peso and cast a shadow on the economy. Despite the volatility, BBVA remains firmly committed to its largest market.
We are true believers in Mexico as a country, independent of what you might be seeing or hearing in the next couple of months and years. Mexico is going to thrive.
How much does the geopolitical volatility emanating from the United States perhaps undermine the bull case for Mexico? Is that a scenario you've plotted out?
When you're in emerging markets, you are in volatile environments, more so or less so. Structurally speaking, we do still have a very positive view in Mexico. On the macro side, because structurally speaking, it is a very attractive investment geography for the U.S. Mexico is hugely competitive in terms of costs. The wages in Mexico are much more competitive than the wages in China. So why would the U.S. companies not take advantage of that?
And this structural cost advantage is going to lead Mexico to continue to contribute to the growth of U.S. as well. The value chains, the supply chains are so integrated that Mexico has to play a continuing role in the further development of the U.S. And U.S. is growing very healthily, very nicely. It will benefit Mexico. This way or that way, it will benefit Mexico.
Mexico for BBVA is, a source of resiliency of earnings, and it generates, it complements the diversification that we have from the footprint. But there's another topic that is very important, which sometimes we don't focus a lot about, and why we're so convinced that Mexico is going to continue to do well, which is the leverage in the country. Because the leverage in the country is only 33%. And when you've seen Mexico grow and BBVA grow in Mexico, you've seen it grow because structurally speaking, the leverage is so low that just a little bit of growth in the leverage is going to be able to support that bull case in Mexico. So that's why we're structurally positive in Mexico.
While BBVA builds on its success in Mexico, it's working to expand its business in other parts of the world, including right at home in Spain. Its proposed deal with Sabadell would push the firm beyond 100 million customers and above €1 trillion in assets.
The Spanish, business is focused on customer acquisition. We see that acquiring customers generates revenues going forward, and that is the focus. Acquiring market share, gaining customers on a digital basis, and continue to improve on our efficiency.
Is BBVA trying to compete with Wall Street? And if it is, how?
I don't think our objective per se is competing with Wall Street. I think the diversification that we have in our footprint provides us with a competitive edge in delivering, I think, what is a unique value proposition in the banking space, which is combining growth with profitability and creating value for shareholders.
It isn't easy for banks to scale in Europe, where barriers to entry in each individual country remain high. Gomez Bravo says BBVA's digital expertise is the key to overcoming those obstacles.
The European story regarding digital banks, or Italy and Germany, is a different route, let's say. It's really actually building on the scale that we have in Spain, and at a marginal cost, being able to provide banking services, full banking services in Italy and Germany. So it's actually a reverse play on the scale, right? I already have the scale. How can I marginally, at a marginal cost, increase that scale more? And that's the initiative in Italy and the initiative in Germany. So it's a way to compete in other markets, in a cost-efficient way.
Even as BBVA and its European peers scale up, their price-to-book ratios lag behind their global competitors. Along with the boom in defense spending, record buybacks had boosted the sector's stock performance. BBVA has committed to $1 billion in share repurchases.
It almost feels like European banks are taking a page out of the American playbook. Is that fair?
I think the European banks, in general, were underperforming the American banks, and I think there was catch-up to be done there. And I still think the European banks are trading, below American peers when their profitability levels are, much nicer than the way they were before. But obviously there's been a positive trend in the evolution of the European bank stocks. Obviously the rate environment is more positive, and with a terminal rate scenario that you can put at 2% or 1.75%, European banks are going to be structurally positive.
You're still at very distressed PE levels, despite buybacks, despite dividends that we know that BBVA has been kind of putting forward. So how do you combat that in 5 years' time?
No, I think it's about delivery. It's about delivering, such amazing profitability and returning that to the shareholders and investing in your franchise at those levels of profitability.
Coming up, Luisa Gomez Bravo takes me to the trading floor and tells me why she believes BBVA can become an even bigger deal maker.
Yeah, and the CIB, just like anything else, it really is about talent.
This is Bloomberg.
¿Cómo estás? ¿Qué tal todo? ¿Bien?
When BBVA CFO Luisa Gomez Bravo visits the trading floor, she's in familiar territory. Gomez Bravo began her career in finance as an investment banker, first at Salomon Brothers and then at Lehman, before joining BBVA in 1998.
On your path from deal maker to CFO, you've done a little bit of everything. How has doing a little bit of everything shaped your experience?
I think it's been very important, especially for the CFO role. Why? Because when I was running CIB, for example, that was my previous role, or running asset management, you're running a business. Then I also have done several COO roles in wholesale banking, in retail banking in Spain and Portugal, transformation roles, which helped me understand a little bit the functioning of the bank, right? The nitty-gritty of how efficiency works and productivity works, right? Which is important for your CFO role. And I think, last but not least, everything that has to do with investment and cost management, because I was head of investment and cost management. So I think all helps.
Women remain a rarity in the C-suites of large European banks. Gomez Bravo's rise to CFO demanded an extra measure of persistence.
When you're working your career as a woman, sometimes you don't think that what's happening to you is just happening to you because you're a woman, right? But then, with hindsight, you think that, well, maybe there was a bias here or a bias there, and I think we've all suffered a little bit of that.
What do you tell a girl who says, I want to be you one day? What do you tell them?
I would tell her, go for it. We persevere.
Gomez Bravo's roots in deal-making serve her well at a time when BBVA is looking to expand its investment banking business. It increased headcount in the world's 2 largest financial hubs and expects increased productivity to follow.
We have always been very good and big in CIB, but we want to do even more. We have a very clear plan of 5 years, and that 5-year plan is basically, we are going to be doubling our gross margin coming from the CIB business, but then we will continue. It will continue. I mean, the share of CIB, corporate and investment banking, within our total revenue base is 15%. In general, for other banks, it's around 30%. We are at 15. We have to grow the share of CIB within the total bank.
Some would say, critics would argue, that this is the moment that investment banking isn't doing so well, that deal activity hasn't gotten there. So why is BBVA moving forward in the very industry that people are taking a step back on?
When we plan our growth strategy and investments, especially in the CIB business, it has to be a long-term vision. So, of course, we take into account the volatility of investment banking every year, but we're not, we're not growing in a volatile way. We don't hire 1,000 people and fire 500. It's not like Wall Street banks, let's say. So we have a gradual view of growth, so that we don't run into the risk of having to wind up things as we go along. We're structured. It's a long-term story.
Is this step one to scaling up, though? At what point does the hiring yield dividends?
It definitely has, obviously, an impact in your efficiency ratio at the beginning, but obviously your plans are to compensate that with higher growth in the offset. There's always a hockey stick in the investment, but we try to ensure that the productivity is there. But because we started investing already a few years ago, this is a journey, and we are reaping now the profits of investments that we did 2 or 3 years ago.
You talk about the measuring stick a little bit. So in all of these plans, what does success look like? What do you see that says, I did it?
The fact that you are growing your business, that you have competitive advantages in specific spots. We're not competing everywhere on everything. We have, solid positions in Southern Europe. We have solid positions in Latin America, in currencies, in, infrastructure lending, in project finance, and in those spots that we've decided that we have the ability to compete, we have a right to compete. And I think the fact that we're doing business and growing our clients and growing business with the clients that we have in a profitable way is the best measure of success.
With rising uncertainty and geopolitical risk, deal execution has become more challenging. But that doesn't worry Gomez Bravo.
I used to say when I was in, the head of CIB, it's not so much, especially in global markets, it's not so much about the scenario of macro recession or expansion. It's about taking advantage of the volatility. And I think, again, the CIB, just like anything else, it really is about talent. You think about the number of employees in the bank that we have, right? The number of employees in the bank is around 125,000 employees, above 120,000. CIB employees are around 3,000. And with that, you're generating, in a different type of year, between 50 and 20% of the bottom line of the bank. So managing talent is something that, CIB leaders need to develop very significantly, because again, yes, you make a wrong decision in trading and, it costs you a lot of money, but you need the talent to get you out of that spot.
Coming up, BBVA isn't the only European lender with M&A on their mind. CEO Onur Genç explains why he considers banking consolidation critical for the European economy.
In Europe, unless we solve this issue of scale, we cannot really compete as Europe, and we cannot really grow as Europe.
And Luisa Gomez Bravo tells me what she thinks her biggest challenges are as CFO.
I think that to me, really, it's the speed of change.
This is Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
AI should be for everybody, from leaders to the working on floor. And we can save 90% of time, 50% of workforce. AI is core in centers of change. And therefore, we invest heavily to AI. Actually, we started more than 10 years ago because we think the machine in the past helped our hand and legs. Now the machine helps us in brain.
Are you betting all your money in this right now?
When the OpenAI appeared, immediately I asked whole corporations study how will you bring generative AI to their job.
In case you missed it, on Bloomberg Open Interest, this data from Trump's trade war, what are you seeing in your district?
Businesses are afraid to accelerate. By and large, they're pulling over and putting on the hazards.
You're constantly speaking to businesses. Is anyone making big investments?
Inflation is a big bugaboo. There's no evidence yet that inflation-driven drop in sentiment drops spending. That's why I say there's the disconnect on the consumer side.
Don't miss Open Interest live weekdays.
Our global headquarters in New York, I'm Danny Berger. Welcome to Bloomberg Brief. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday only on Bloomberg. Context changes everything.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Amber Verdern at the G7 in Alberta, Canada. This is Bloomberg.
BBVA began its pursuit of Banco Sabadell in May of 2024 and hopes to close the deal by the summer of 2025. If it comes to fruition, it would mark the first completed transaction in a wave of consolidation attempts in European banking.
Some would argue that BBVA and the Sabadell acquisition has almost paved the way for other potential banking
back
deals.
on the table.
It absolutely is. It's the juiciest thing in Europe right now, isn't it?
I think it makes sense that the consolidation, there is a new consolidation waves at the moment in Europe because we're already in a change of monetary policy. We know the ECB is cutting rates. So when banks could count less on, say, the net interest income, the traditional income from the banking activity, then they need to look around and see how this can be somewhat offset or matched. There is also the topic of trying to contain the cost. And so one way to adjust the cost base is to merge two similar banks in the same jurisdiction.
Critics say that consolidation limits consumer choice. But banking executives argue limits on growth hamstring Europe as a whole.
Why is consolidation so important for Europe right now in the banking space?
Because Europe needs to grow. Europe needs to grow. I mean, if we again take 10 years, 15 years, 20 years, 30 years, the growth of Europe versus the growth of US or any other geography that you can pick off is so little. You have to grow in Europe. In Europe, different than US, 75% of corporate borrowing comes from the banking system. In the US, it's 25%. The rest comes from capital markets. In Europe, unfortunately, capital markets is too small, so the banks provide the funding. Banks provide the ammunition to invest, to companies to grow. So you need banks, you need strong banks, you need profitable banks. And in the context of the fixed cost becoming larger in banking, you need to be large. In Europe, unless we solve this issue of scale, we cannot really compete as Europe, and we cannot really grow as Europe.
The case against consolidation would be that the larger you are in scale, the more it could hurt the rates and the growth for everyday earners, everyday citizens, for consumer rates. What do you say to that?
We have multiple metrics to show that in different parts of the world, Europe, there's so much competition. Europe is the second largest, as the EU, as the continent, as the Union, second largest GDP in the world. And in the top 25, there is no EU bank. Isn't there something wrong in this? And so the other countries and other banks in other countries, there's competition there, but they are very large. It doesn't fit. There are many measures to look into competitive nature of our banking markets in Europe, and I fully believe that there is no competition issue. We should let banks grow.
While awaiting approval on a Sabadell takeover, BBVA is pulling other levers, from opening new private banking hubs to expanding its wealth management division.
What we do see is that the wealth management business is democratizing. It is being cascaded now to a larger number of customers and to a more diverse set of customers. So in the countries that we are in, we will see much more growth in wealth management than other businesses that we have.
Mexico is outstanding, but Spain has a lot of potential as well to do more there. And I think we can do much more in Spain and across the border in Latin America.
Do more and do better. Those are the principles driving Luisa Gomez Bravo as she helps steer BBVA into the future. I ask her what she sees when she looks ahead.
What is the opportunity in BBVA over the next decade that excites you the most?
Well, I think it's this challenge regarding digitization and taking that forward and actually really advancing the relationship model with our clients, right? Finding those opportunities of being, a better partner for the clients going forward. That means that we're going to be looking at growing also in corporates more, in other businesses, in those capital-light businesses. So I think there are plenty of growth opportunities, and I think at the core, it's really the client, right? And how can we accompany the client better to be able for the client to capture his dreams, no?
Hypothetically, let's talk about the opposite there. It's a hot summer night in Madrid. You can't sleep. What's the challenge that's keeping you up at night?
I think that to me, really, it's the speed of change. It's not the change itself, because I said we're accustomed to change. It's the speed of change. And how quickly can we adapt, and how quickly can finance adapt? So it's that speed of change and that time to market against that speed of change that really is more in the background of my mind.
Complete this sentence. The hardest part of being a CFO is?
Prioritizing. Prioritizing externally and internally. So prioritizing externally, meaning that you have to prioritize resources, you have difficult conversations, but internally as well, because you have to manage your agenda. And sometimes you have to prioritize internally as well what you devote time to. So prioritization, I think it's quite a hard thing to do.
Is there an area of knowledge that you would advise a CFO to develop?
I think analytical skills are important. I think more than an area specific of knowledge, because your team should have that knowledge, and if not, you should get a team that has the knowledge. Obviously, you need to like the numbers. If you don't like numbers, then don't go into finance. It's sort of like a recipe for disaster if you don't like numbers. No.
So if I call you up and I say, Luisa, I have great news. I just got promoted to CFO. What's the first piece of advice you give me?
Be cool and be calm. That's what, be cool-headed and be calm. I think that's a good recipe for success being a CFO. Focus on communication, being transparent, focus on learning, leadership. It's your ability to have a view of the forest and being able to deep dive at the tree level as well.
I'm Kriti Gupta. This is Bloomberg.
see over the next 3, 6, 9 months how the tariff discussions play out and what does it mean.
I do factor in some effects of tariffs now on inflation, on prices.
I like the idea of the 10% tariff across the board.
I've spent my entire career focused on fiscal discipline. I don't think these people have the foggiest notion what they're doing. And I think DOGE is doing tremendous damage to government.
Elon Musk is probably the inventor of our age, but who understands that we're in the midst of the most profound convergence among technologies.
When we are facing a once-in-a-generation technological disruption,
we cannot close this retirement gap without private-public partnership. We have to have good policy.
Do you think, Dawn, that the market is correct to be, as of now, pricing in 3 rate cuts in 2025?
I would take the other side of that bet.
CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders. CFO Pascal DeRoche has played a key role in restructuring AT&T, reducing debt and refocusing the business. Now his steady approach has the company primed for growth.
I'm a believer you try to make progress on big problems every day, and ultimately you'll look back and say, hey, you've come a long way.
Watch Chief Future Officer Wednesday on Bloomberg.
In case you missed it on Bloomberg Surveillance.
They say you're in your right if you use Section 122. Why didn't you guys do that from the beginning?
Well, Section 122 only gives you 150 days.
In
so
Section 122, if you use this
that,
now for 150 days, would it be a bridge to 301 or a bridge to 232? What are you thinking more long term?
You can be the strategist on that.
So just got to tell you one thing. You're not allowed to hire Anne-Marie. She's with us, all right? Don't miss Bloomberg Surveillance live every weekday.
Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
It's 100 years, 80 years, 100 years of dollar strength, so much so that important commodities, gold, oil, are denominated in dollars. I think undoing that will take a long, long time.
In case you missed it on the opening trade.
What trade does is it meets a consumer demand. Consumer demand is not weakening. China supplies a little over 30% of what we eat, wear, and consume. That's unlikely to change anytime soon. I think that supply will find new homes potentially, but our reliance as a global economy on Chinese manufacturing is unlikely to change fundamentally anytime soon.
Don't miss the opening trade live every weekday.
Hi, my name is Luis Fonan, and I am the CEO and co-founder of Duolingo.
Duolingo co-founder Luis Fonan has a PhD in computer science. But as a CEO, he doesn't see himself as a numbers guy.
I just want to spend my time building a product. Like, that's what I'm good at. I'm not necessarily good at accounting.
El Niño.
As the product he'd created grew into the world's most popular language learning tool, Fonan knew he had to turn his attention to strengthening the company. That's where Matt Skarupa came in.
When I came to Duolingo 5 years ago, my job was to get the company ready to go public.
The CFO helped pull off the IPO.
And then it became a translation exercise. It was translating the company to investors, in particular, Luis to investors, and then translating what investors in that world meant for the company as we went public.
Translation is central to Duolingo's business, and it's also important to its internal culture.
And as you translate them and as you see how other people translate them, you start learning.
Though Fonan spent decades in academia while Skarupa forged a career in finance.
I want to do that.
No, I'm excited. That's it's like the marquee event.
They've learned to speak the same language.
She's been a trooper.
She's been awesome. Yeah, she's hilarious. Luis is singular. He's what attracted me to the company. The reason we stay aligned is we talk all the time, and we both like simplicity and clarity of thought.
Like, it's about the students and giving the students a chance. But you were a student. I know.
Luis, because he's so brilliant, most of the financial things that we've had to discuss are very intuitive to him.
There are a few things that I care about when it comes to finances and kind of investor relations, but most of the stuff in terms of accounting or dealing with public market investors or the stock market or stuff like that, I want to be shielded from it. He does a great job with that.
From its offbeat mascot to its gamified curriculum, Duolingo leads with attitude. To quote its corporate handbook, the company is quirky. While it's focused on goals that any CFO would find familiar, it's determined not to take the same old route to reach them.
CFOs aren't traditionally quirky. Talk a little about the cultural shift to a job like this, where the culture is really one that, as is described in the handbook, is unhinged.
I try to be quirky, like Duolingo. Most of my presentations internally start with a Taylor Swift lyric. But I think the role of a CFO in any public company is about bringing clarity. It's not about selling, it's about here's what's actually going on and here's why it makes sense. April is going to have to be really efficient. I think we're set up well for that. Testing is on track and on budget.
He's fun and quirky in a CFO kind of way, which is actually exactly what we want. If we had hired somebody that was similar to me, this company would not be performing the way it's performing.
Duolingo at its core is this amazing machine of learning. We envision this limitless future that we want to build. And my job is to make sure everyone knows where we're standing today. What are our resources and capabilities today? And then strategically, how do we link those together? And I think that is really the basis of what a strategic CFO is, and that's what the role has become.
Duolingo runs on the freemium model. It offers language lessons at no cost, but adds features for people who pay. Free has translated into robust annual user growth. Converting free users to paid subscribers is the ultimate goal, but it's a marathon, not a sprint.
Our free product is essentially our growth engine. I mean, it's the way we grow is people use it for free and then they tell their friends and then maybe one of their friends will subscribe. So I don't want to screw up the free product. I don't think it'll ever be the case that the majority of our users are paying.
The conversion piece is one part of a relatively complex system. Luis talks about our business as having 3 almost equal tranches. We have a group of folks who are trying to bring users to the platform and then engage them enough to keep them on the platform. We have a group of people who are trying to make sure that it is teaching really effectively all of the things we're trying to teach. And then it has a group of people who are trying to convert free users to paid. And they're about a third in terms of headcount and really investment. We got way focused on conversion at the expense of growth or learning. The whole system would not grow as nicely as we want.
So far, the company's kept its subscription menu fairly simple, offering 2 tiers as well as a family plan.
Would there be a way to bring in more subscribers or bring in more revenue if you offered more than 3 different tiers?
The way we pass people through the funnel is complex. It is based on your usage experience, where you're at in your learning journey, where you're at geographically. We're trying to optimize for something called the lifetime value of the subscribers on the platform. We're trying to nudge people towards a product that will deliver them value and be higher LTVs.
That nudge towards Duolingo's premium max tier got a lot more emphatic in late 2024, when the company used AI to give its character Lily the power of conversation.
Introducing Video Call, a new way to practice your language skills.
How's your job going?
Hey Lily, it's going super well.
What's your favorite thing about work these days?
Probably my colleagues. I really like working with them.
That sounds like my nightmare.
We didn't have that core feature that we could organize behind until the fall of last year when we launched Video Call.
안녕하세요. 잘 지냈어요?
That feature sold itself. You didn't have to explain to someone what it was. It was very clear. You're going to have a video conversation with someone. And that is when we saw max penetration really take off.
You've been talking about studying working with AI for, at this point, more than 2 decades.
Yes.
How groundbreaking is Lily?
I would have never imagined 10 years ago that it was going to take only 10 years to get to a point where you could practice an actual conversation with an AI. In fact, 4 years ago, it was out of the question.
Salut, comment ça va?
Bien, Lily. Comment ça va?
Lily's conversations are enabled by commercial AI programs. So while an increase in Max subscribers drives gross revenue higher, added expenses eat into margins. It's a burden Duolingo's willing to bear for now, and they insist it'll soon get lighter.
We are really excited that we're at a moment in time where, as one of our financial analysts pointed out, we might be the best example of a company that's monetizing AI and consumer internet right now. Our thesis remains intact that on a per unit basis, the cost of the AI intelligence will come down over time.
In the last 18 months, we've seen AI prices come down precipitously. Foundation models are becoming the fastest depreciating asset class on the market right now. So look at OpenAI's GPT-4 as one example. Over the last 2 years, you've seen prices come down 90% for that model. That's cost per token, so cost to run that model. We're seeing the closed source and open source gap close, which makes these models a lot more accessible. So we're really seeing a perfect storm for AI models right now.
The main goal is to make Max and Lily even more engaging. And we think if we do that, we have a big opportunity to monetize that over time.
Duolingo preserves capital to invest in AI by keeping marketing costs to a minimum, relying on word of mouth and social media instead of paid advertising.
I'm reporting live from Duolingo's funeral.
Yep, that's me. You're probably wondering how I ended up in this situation.
We just did this campaign where our owl mascot died. That campaign cost us like $10,000, like nothing. It cost us nothing.
I wanted to see how many of you would bother to bring me back to life.
We inject ourselves into the social conversation across a variety of platforms across the world in a way that's authentic and organic. There's a couple things you don't actually see in our social media. You don't see a call to action. There's no subscribe now, because we're really just trying to be authentic in a conversation.
So if you don't have a call to action, how do you quantify the impact of a campaign like that? How do you measure it?
We have a variety of techniques, survey techniques, and other attribution techniques to do it. I mean, we saw for when Duo faked his death, you can track it from number of interactions on social platforms. In this case, it was over 1 billion. Once we get that user, we are able to offer them multiple bites at the apple to subscribe, because they stay around for a long period of time and they leave the platform and come back. So we are going to have a long-term relationship with this user. The marketing efficacy is over a really long period of time, which is very valuable to us.
Duolingo's strategy is borne out by its dominant share of the language learning market. And that market is projected to boom over the next decade, giving the company even more territory to penetrate.
This is a really huge potential market. If you look at just language learning in general, 80% of the spend is people who are learning English. It's under 50% of the spend for us is learning English. So there's a large gap there that we can fill. So big opportunity.
One tool to take advantage of this opportunity is the Duolingo English Test, or DET. It's Duolingo's third largest revenue stream, and it underpins a long-term plan.
The DET is a very important part of our strategy to become the proficiency standard.
We help certify formally for hundreds of thousands of people every year that their English proficiency is good enough to go to college or go to university somewhere in the world. And if we can then integrate that into the app, and we've started to in some courses where we've put a Duolingo score, then you can merge these two ideas and you can help become the proficiency standard. You want to eventually imagine a world where people are walking around not saying, I'm an intermediate Spanish learner or I'm a beginning French learner. You want to walk around saying, I'm a Duolingo 14. I'm a Duolingo 26. I'm a Duolingo 77. I'm a Duolingo 115. If we are able to achieve that level of being the standard, we think there's tons of business upside to that effort.
Coming up, Lily may be the flashiest example, but Matt Skarupa tells me Duolingo's investments in AI are bringing all kinds of returns.
We are using AI in ways to create massively more content than we could otherwise create.
And Duolingo's patient approach to growth sometimes makes investors anxious. That's a feature, not a bug.
We have an operating principle that's in our handbook. Take the long view.
This is Bloomberg.
That's the gift, I think, I think we're giving ourselves.
When you ask Duolingo's CFO, Matt Scarupa, about his career path, he doesn't just tell you where he's worked and when. Yeah. He explains what he's learned at each stop along the journey, starting with his college degree in chemical engineering.
Chemical engineering taught me a ton about systems. They're all complex, and when you pull on one thing in a system, it's attached to everything else you find. And then after chemical engineering, I went to Bain, the consulting firm, where I learned the power of pure strategy, but really about how you communicate strategy and how important that communication is to the actual strategy. Following that, I went to KKR, where I learned from the best capital allocators in the world. And what I learned from them was how you identify and then double down on durable businesses. At Goldman, I learned a ton about how you structure deals to maximize option value. And when you put all of that together, that's a pretty good CFO skill set. But it came about because I kept putting myself at the bottom of steep learning curve. And then I found myself at Duolingo at the bottom of another steep learning curve in a company that loves putting people at the bottom of steep learning curves.
Scarupa also found himself in Pittsburgh, a city historically known more for steel than software. He's come to believe that physical and cultural distance from Silicon Valley has played a role in Duolingo's success.
Luis founded the business here and took a long time before they even thought about monetizing. That only happens in a place where you're removed from the social pressure or you're removed from the way of doing things that everyone else does. And I think that in a complex system, which our business is, where we have a bunch of process improvements that we make, being separated and far apart from the coasts initially really helped us develop that process and compound those gains over time. And I think that's a competitive advantage for us.
CEO Luis Von Ahn says he considers Netflix and Spotify models for Duolingo to emulate. But with its emphasis on design, imagination, and style, there's more than a little Apple in Duolingo's appeal to consumers.
Engagement is the #1 thing we try to solve for, and we try to do that by making the app joyful and fun, and we have a huge swath of really talented designers that enable us to iterate on that product every day and make it 1% better.
Creating something like that costs money. How do you do that? How do you make it engaging? How do you continue to iterate without breaking the bank?
The reason we have the business model we do, in part, is so that we have a good amount of cash flow that comes off the business to reinvest in design, because it really is a cycle. We think that the more we can put into making it a wow experience, a truly delightful product experience, the more people will stick around and the more chance we'll have to get more subscription dollars. And once we get those dollars, we can then reinvest in doing that. So it truly is a cycle over time.
Duolingo has increased headcount every year since its IPO, and design is the company's second largest department, behind engineering. It's determined to preserve a brand and culture based on joy and connection, even with its AI-first approach to content creation.
We are using AI in ways to create massively more content than we could otherwise create. Humans are still in the loop. We're still making sure that has an excellent quality to it, but we're about to release about 148 new courses that we weren't able to even think about creating if we didn't have AI available. So it essentially lets us keep costs flat and by orders of magnitude increase the content we create.
How are you using AI when testing the product right now?
We do dog food the lessons a ton internally with our employees, and everyone's expected to use the app and find bugs and do all of that. There are going to be advances in AI that help us to write code better, test that code, these type of things, and we'll implement those over time as well.
Do you A/B test with users too, who are outside the company?
Oh, for sure. The biggest way we improve the product over time is through our A/B testing methodology, and it's really the core process moat that we have. And what that means is that we are making small changes, testing them on subsets of our users, seeing what wins and what doesn't, and then implementing what wins.
With AI driving faster creation of new content, Duolingo now has more courses to attract more users in more countries.
We think that we can grow in almost every country in the world from here. There are about 2 billion people in the world learning a language. A lot of them are learning English. And we've gotten even better at providing more advanced English content over the past couple years, especially as AI has helped us create that content.
What about China?
China's been a really rapidly growing market for us. It's been relatively small in terms of total number of users, but it is an enormous language market. Not only are there a lot of English learners in the market, but they spend a lot of money on English learning.
Advanced learners outside the US are more likely to become paid subscribers. But that creates pricing challenges, since AI features like Lily cost more, and users in many countries can't easily afford rates charged to US customers.
We try to adjust the price to be more comparable to like a GDP per capita ratio. And then for Max in particular, we set a floor where we want to make a good gross profit dollars per Max subscription. Over time, as the cost of Max comes down, we would expect to have more ability to experiment with the Max price and potentially lower it in regions where that made sense.
Coming up,
Feliz Viernes.
Duolingo has nothing against making money. So why do they refuse to show their users more advertising?
When we went public, Luis mentioned that at any given moment, we could dramatically increase our revenue at the drop of a hat by adding more ads. And then he said that he didn't want to do that.
This is Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield every Friday at 12 p.m. Eastern, right here on Bloomberg. Context changes everything.
In case you missed it, on Bloomberg Crypto.
How do you expect the asset to continue price increase at these levels that we've seen? And at what point do we see, winter coming again?
Winter's not coming back. We're past that phase. If Bitcoin's not going to zero, it's going to $1 million. And you have all the evidence you need to determine that, right? The President of the United States has determined he supports Bitcoin. The Cabinet supports Bitcoin. Scott Bessent supports Bitcoin. Paul Atkins has shown himself to be an enthusiastic believer of Bitcoin and digital assets. Kentaz at CFTC feels the same way. The banks are going to custody Bitcoin. Bitcoin has gotten through its riskiest period. The accounting has been corrected. There's now only 450 Bitcoin a day available for sale by natural sellers.
Don't miss Bloomberg Crypto live Tuesdays.
Bloomberg's global financial correspondent, I get to meet the people shaping the way money flows around the world. And I want to bring you with me.
The capitalist system is the best system in the world. There isn't another one that works as well.
I love all these new Wall Streets. Y'all Street, Wall Street South.
Wall Street used to be a place. Now it's more of an idea. I hope you survived the day.
I did. It was a busy day.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech. This is the Asia Trade.
This is Wall Street Week.
Welcome to Balance of Power.
This is Bloomberg Television. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, Mondays on Bloomberg.
Duolingo has steadily grown both users and revenue since going public in 2021. It's turned a profit in each of the last 2 full years. The company's stock has surged in the last 12 months, even as it resists the urge to pull some levers that would drive short-term growth.
There is a nice confluence between the long-term investor and what we're trying to do. We have an operating principle that's in our handbook, take the long view. When we went public, we put a timeline up on the screen for the whole company in an all-hands meeting. And that timeline went from founding to 100 years out. And the IPO was one dot in 1 year on that timeline. And we tried to orient the employees to, this is a wonderful event, this IPO. It's fantastic, but it's a moment in time on a very long journey.
This is a company that you want to exist in 100 years.
We do.
Wall Street doesn't think in...
No, they think in like hours. Yeah. And what I've learned of Wall Street, and particularly Wall Street investors, when they say they are long-term investors, that means they'll keep your stock for like a month. There has been one instance where I did something that was just for short-term stock, and I felt so bad about it that I don't think I'll do it again.
What was that?
There was one quarter, a few quarters ago, we were not going to beat the quarter. We were going to probably just hit it. And so far, we beat every quarter. So we were all like, wait, what? Our perfect record. We're like a 4.0 student that is going to get a B for the first time. This is not good. And I decided that for a short period of time, at the end of a lesson in our app, we would show 2 ads instead of 1. Turns out that that by itself was good enough to beat the quarter, but it's bad for the product. It's not good. And after that, I'm never doing that again.
While Duolingo's overall revenues have soared, revenue growth from ads has been relatively modest. Wall Street may just have to learn to live with it.
You must be tempted to just show a few more ads and bring in some more revenue from that free tier.
When we went public, Luis mentioned that at any given moment, on any given day, in any given hour, we could dramatically increase our revenue at the drop of a hat by adding more ads. And then he said that he didn't want to do that.
Do you foresee that that view shifts at all in the next few years? I mean, there was a time when people said Netflix will never do ads.
I've learned enough as a public company CFO to never say never. However, Luis is the most hands-on CEO I've ever seen or worked with. While he's around, I do not see that changing.
But there are some changes to keep an eye on. Duolingo has offered lessons in music and math since 2023, and it's now rolling out a chess course.
We really do want to be an app that teaches most subjects that take a long time to learn. We're not going to be teaching you how to fix your faucet that you can probably do on YouTube, but if it's something that takes a long time to learn, we want to be teaching that to you. We're starting with math and music, but we're probably going to add many other things.
It makes a ton of sense that math and music are the next adjacencies that we would look at because they're very much in keeping with how you learn a language. You have to repeat it frequently, and it follows a set of structured rules.
How much capital will they require to be built out?
It will depend on how much they grow and how successful they are. And we'll make those decisions over time iteratively.
What about margins? How should investors think about margins on those products?
They're part of the main app, and that means they're part of the main subscriptions. And so their fundamental base is not a different margin profile. Some of them will have different marginal costs or this or that. But over time, we have been consistent that we like our high gross margin business, and we're going to try to endeavor to keep it.
Matt Skarupa models Duolingo's first principle, take the long view, in everything he does as CFO. So I asked him what he sees when he trains his binoculars on the future.
What's the opportunity in the next decade for Duolingo that most excites you?
To fundamentally make our app much more like a human tutor in your pocket.
What's the challenge for Duolingo that keeps you up at night?
How to keep our employees who are incredibly talented, incredibly craft-oriented and design-oriented, motivated and excited and engaged in the long-term mission.
How do you see your role as CFO changing over the next 10 years?
I think the role of the CFO is going to change a lot over the next 10 years as we automate so much more of the manual work that goes on. And I think that will free up CFOs, controllers, heads of FP&A to do more high-level strategic thinking. And so the real job will become, how do we make sure we're staying at the leading edge of all of the strategic questions that we can bring our expertise to bear on in the company when we're removed from some of the more manual tasks.
What's the skill set or an area of knowledge that you would advise every aspiring CFO to develop?
If I were not a CFO, public company CFO, in a different life, I would love to have been a poet. And so I think that aspiring CFOs need to realize that they are interacting with humans every day. And humans have a variety of motivations and interests and fears and compulsions. And so I would do anything you could to become better at understanding other people. Poetry is a great way to do that.
Complete this sentence. The hardest part about being a CFO is?
The hardest part about being a CFO is the fact that there are so many tasks and context switches that you have to make, and the job is so systematic that making sure that you're on top of all of that and thinking about it from a systems perspective and not a one-off perspective is the hardest part.
A friend calls you up and says, I've got great news. I've been promoted to CFO. You say congratulations. What's the first piece of advice you give them?
Make sure that you understand the hopes and fears of your CEO, because that's going to determine the strategy, and you need to be aligned with that. And the first part of alignment is understanding.
I'm Tim Stenevik. This is Bloomberg.
There is a nice confluence between the long-term investor and what we're trying to do. We have an operating principle that's in our handbook, take the long view. When we went public, we put a timeline up on the screen for the whole company in an all-hands meeting. And that timeline went from founding to 100 years out. And the IPO was one dot in 1 year on that timeline. And we tried to orient the employees to, this is a wonderful event, this IPO, but it's a moment in time on a very long journey.
This is a company that you want to exist in 100 years.
We do.
Wall Street doesn't think in...
No, they think in like hours. Yeah. And what I've learned of Wall Street, and particularly Wall Street investors, when they say they are long-term investors, that means they'll keep your stock for like a month. There has been one instance where I did something that was just for short-term stock, and I felt so bad about it that I don't think I'll do it again.
What was that?
There was one quarter, a few quarters ago, we were not going to beat the quarter. We were going to probably just hit it. And so far, we beat every quarter. So we were all like, wait, what? Our perfect record. We're like a 4.0 student that is going to get a B for the first time. This is not good. And I decided that for a short period of time, at the end of a lesson in our app, we would show 2 ads instead of 1. Turns out that that by itself was good enough to beat the quarter, but it's bad for the product. It's not good. After that, I'm never doing that again.
Addiction isn't a choice.
I would isolate, self-medicate, and fabricate to continue my use.
I didn't really think I had a problem.
Rachel and Pete are just 2 of 48.5 million Americans with substance use disorder. But 3 out of 4 people find recovery is possible with help. Go to shatterproof.org/findtreatment to watch the short film No More Secrets and find out how you can get help. That's shatterproof.org/findtreatment.
I'm David Weston. Join me for the next generation of Wall Street Week. This week, Vlad Tenev of Robinhood takes us into the wild world of mathematical superintelligence. We go to Saudi Arabia for the story of Aramco's plan to help wean the kingdom off of oil.
We think of ourselves as a technology company delivering energy. We are very pragmatic here in the kingdom.
And Larry Summers dissects the Fed's latest decision. Watch the all-new Wall Street Week. More than what you need to know, it's what you need to think about.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Jennifer Zabasaja in Cape Town, South Africa, and this is Bloomberg.
In case you missed it, on Bloomberg Open Interest, this data from Trump's trade war, what are you seeing in your district?
Businesses are afraid to accelerate. By and large, they're pulling over and putting on the hazards.
You're constantly speaking to businesses. Is anyone making big investments?
Inflation is a big bugaboo. There's no evidence yet that inflation-driven drop in sentiment drops spending. That's why I say there's the disconnect on the consumer side.
Don't miss Open Interest live weekdays.
Today's CFOs are reshaping the C-suite. Bloomberg's Chief Future Officer shines a spotlight on these dynamic leaders. CFO Pascal DeRoche has played a key role in restructuring AT&T, reducing debt and refocusing the business. Now his steady approach has the company primed for growth.
I'm a believer you try to make progress on big problems every day, and ultimately you'll look back and say, hey, you've come a long way.
Watch Chief Future Officer Wednesday on Bloomberg.
If you were to pick one thing to magically erase from existence, that would bring all of modern life to a screeching halt, your best option would probably be magnets.
You are surrounded by magnets. Magnets are there in hard drives. I should do the list. The list is amazing. I knew they exist. When I put it in a list, I was like, whoa.